sure to get down, good lord. Baby got them open all over town. Strictly bitch, you don't play around. Cover much ground, got game by the pound. Getting paid is a forte, each and every day. True play away, I can't get her out of my mind. Wow, I think about the girl all the time. Wow, east side to the west side, with the fat lies, with no surprise. She got tricks in the stash, stacking up the cash, fast when it comes to the gas. By no means average, it's on when she's got to have it. Baby, you're a perfect 10, I wanna get in. Can I get down so I can win? I like the way you work it, no diggity. I like to bag it up, bag it up. I like the way you work it, no diggity. I like to bag it up, I like the way you work it, no diggity. I like to bag it up, bag it up. I like the way you work it, no diggity. I like to bag it up. She's got class and style, street knowledge by the pound. Baby never act wild, very low key on the profile. Catching feelings is a no, let me tell you how it goes. Heard the words, spins the verb, love is just her, so sweet what you heard. Rolling with the fatness, you don't even know what the hash is. You got to pay to play, just to sort it bang bang to look your way. I like the way you work it, jump tight all day, every day. You know in my mind, maybe in time, baby I can get you in my ride. I like the way you work it, no diggity. I like to bag it up, bag it up. I like the way you work it, no diggity. I like to bag it up, no diggity. I like to bag it up, bag it up. I like the way you work it, no diggity. this. I'm catching wreck till the break of dawn. And it's song, yo, it's a must that I put it on. Yeah, so put it on, Big L, put it on. Come on, put it on, big fella, put it on and on. Put it on, Big L, put it on, represent, put it on, represent, put it on, come on.
Some boy see we gun nozzle and take a whiffy choke. Boy, you're going dead before you see we gun smoke. See we gun nozzle and take me feet choke. You're going dead. Come on me, you provoke.
I drink my wet, not best beer. I stay just a slick gear. Peace to my homies in the gangster lane. I see you when I get there. And it's the fact I keep forgetting my arm reach. I charm freaks and palm geeks from here to Palm Beach. I'm putting rappers in the real kid. Together the villain you still fear. Cause I be hanging it harder and shit is for real here. If you battle well, you pick the wrong head. I smash mics like cornbread. You can't kill me, I was born dead. And I'm known to pull steel strings and kill pigs. I run with ill kids and real niggas who peel wigs. My raps steady slamming. I keep a heavy cannon. It's a new sheriff in town and it ain't Reggie Hammond. Peace to my peoples, the children of the corn. Cause we put it on. Adios, ghost, I'm gone.
So put it on, Big L, put it on. Come on, put it on, big fella, put it on and on. Big L, you gotta put it on and on. Put it on, Big L, put it on and on. Put up, you know what I'm saying? My man Big L, running things for the 9-4, the 908, you know what I mean? It's the chicken pre, the full flare, and we gon' put on a little something like this. Big L, come on.
I need
Keep it on the level. Keep it on the level. Keep it on the level. I'm climbing up the. Keep it on the level. Keep it on the level. I'm climbing up the ladder while you in need of a shovel. I can do this all day. I can do this all night. I can do this all day. I can do this all night.
I could do this all day, I could do this all night, all month, all year, for my whole entire life. Who you know got a home, was seen to live on the road, looking like a black gypsy in a caravan of bros. Music for the people, I used to rap on the train. Now I rap on the stage and I'm used to capital gain. I ain't asking for change, I'm good at coining the phrase. What I want is more than ever and never to fade away. Is that too much to ask? Good, cause I ain't asking. Already into action, I had your answer retracted. So slay about my business is crowded enough with me. You added it's just a witness I'd rather not even see. I'm good with the folks around me, get from around me before we commence to clowning. Yeah, keep it on the level, yeah, keep it on the level. I'm climbing up the ladder while you in need of a shovel. Let's get at 'em.
I'm climbing up the. Keep it on the level. Keep it on the level. I'm climbing up the. I'm climbing up the. Keep it on the level. Keep it on the level. I'm climbing up the ladder while you in need of a shovel.
Yeah. Don't give it to me easy. I like a little challenge. When it feels better when you take a little damage.
Knows how to party. What's up, Pacific Bitcoin? Look at all you early arrivers coming to class early, sitting up front. It's good to see. So yesterday was awesome. Today's going to be great. I want to highlight a few sessions to look forward to, but before I do, I just wanted to make a couple of comments. Yesterday I sat down with Peter McCormick out here, and he got an applause line when he said that Bitcoiners want each other to win. And that kind of stuck with me last night, and I was thinking a bit more about it. And there's an idea that I've explored, like in a couple of essays in college, as a matter of fact, about the will to power and the will to empower. And tyrants have a will to power. They want to will into existence a world where they have complete power, complete control, right? And that's exactly what fiat is. Fiat is an instrument of the will to power, a centralized tool to gain and to amass control. The will to empower, however, is the opposite, of course. People like Martin Luther King, like Gandhi, they had a will to empower. They did not inflict on the world this ideas to empower them. They had ideas and actions to empower others. And that is exactly what Bitcoin is. Bitcoin is a technology that represents the will to empower. Satoshi Nakamoto, I count among the likes of Gandhi and Martin Luther King because of his incredible will to empower us to take back control of the money and have nothing for himself. And I think that's what Peter meant when he said Bitcoiners want each other to win. Satoshi wanted us to win. And here we are, all together, basking in those vibes of wanting each other to win, to want to empower one another just because Satoshi invented this incredible technology for us. What an amazing gift. And we get to sit here and experience it. I think this event is the best I've ever been to really experience that vibe of Bitcoiners want each other to win. We want to empower one another. So let's do it again today. And we've got lots of amazing stuff to check out. I'll just pull out a few that I'm personally excited about. I'm really looking forward to Natalie Smolinski's Satoshi's paper, Political Economy After Bitcoin. That's coming up this morning. I'm a big fan of Tip NZ, and some of you may know her on Twitter. She makes these incredible videos, super powerful music, and does this sort of like slam poetry on top of it. She'll be out here right before lunch, and I would recommend catching it. I saw it in a sound check. I had goosebumps. It's super powerful. We have Shitcoin Slayers this afternoon. Corey's going to have a fireside. Max Kaiser's going to be on stage to close things out. Over in the Dome, we've got Fireside Chat with Tomer and Eric Kaysen, which will be awesome. We've got Bitcoin Trivia, if you want a little break in the action. It's like bar trivia style. Go and sit in the Dome and answer some Bitcoin trivia, get a little team together. That'll be fun. Similarly, we have Hollywood Squares right after lunch, another kind of game session there. My good buddy, Brandon Quittem, will be presenting his work on the mycelium of money, which dropped like 4 or 5 years ago. And I'm excited to see or to hear him kind of present it again for the first time in a while. So check that out as well. Everything's going to be amazing. The court's got a bunch of action going on. Thank you for being here again. Excited for one more day of Pacific Bitcoin. I'm going to hand it over to the morning MC, Stefan Livera. Thanks.
Hello, everybody. My name is Stefan Livera. I'm the host of Stefan Livera Podcast, and I'm also head of education for Swan Bitcoin. So I hope you're all having a fantastic experience so far at Pacific Bitcoin. I've been having a great time. I think people have really come together and created such an awesome experience and vibe. And I hope you're all out there making new friends, making new connections. Put your hand up if you've made some new friends today or yesterday. Fantastic. That's great to hear. So we're going to get right into it. So firstly, a shout out for our sponsor. Marathon is the official mining partner of Pacific Bitcoin. They are one of the largest, most energy efficient Bitcoin miners. And with that said, I'm going to now introduce the panelists for our first panel. So this panel is called Fighting for Liberty in the Digital Age. So I'm excited to hear what our panelists have to say. Our two panelists, firstly, Natalie Smolinski. She's the founder of Texas Bitcoin Foundation. She's also a senior fellow of Bitcoin Policy Institute. Joining her will be Sam Callahan. He is the lead analyst for Swan Bitcoin. And our moderator, you already know her, she's Natalie Brunell. She is the host of the Coin Stories Bitcoin podcast and also a journalist and commentator in the space. So everybody, please put your hands together and welcome our speakers to the stage.
GB. A little something from the nice guys, come on.
All right, really honored to be here with these two panelists. Again, Sam Callahan is lead analyst here at Swan, and Natalie Smolensky, she is a startup and nonprofit founder and an economic anthropologist, and both of them have been doing so much work in the arena of talking about digital privacy, CBDCs, surveillance. So let's kind of set the scene for everyone to start off, because the battle for digital privacy has really been going on for a long time. So can you both talk a little bit about the history of sort of encryption versus surveillance, and where we really are today in terms of how private are our digital lives?
Yeah, I can jump off. So Bitcoin is just the latest iteration of encryption versus surveillance. And it goes all the way back to any kind of new technological innovation in communications. And so you think about the printing press, think about the telegraph, think about the internet. Each one empowered individuals to allow people to communicate more freely, but at the same time, it also empowered the state to be able to surveil. And really, when it comes down to it, just think about, say, the telegraph. There was like labor constraints and resource constraints for the state to be able to surveil the mass population. I mean, you had to have tens of thousands of people reading the telegrams, and there was a lot of capital that needed to be allocated to be able to surveil. It was very difficult to do. But with the advent of the internet, those constraints are no longer there. And this is what the cypherpunks really kind of saw or foresaw with the internet adoption rising. They were like, okay, this is going to make it very easy for the state to surveil us. And so we need a new constraint on them. We need encryption. And they really saw encryption as this impenetrable shield that can protect the individual in the digital age. And that kind of led us all the way up to where we are now with Bitcoin.
Yeah, absolutely. So there is constantly a race between state and society for technological dominance and preeminence. This race creates something that political scientists have called the Red Queen effect, based on the Alice in Wonderland story, where Alice races with the Red Queen. And this race between state and society creates a narrow corridor of liberty. The problem happens when the balance shifts too much in the direction of one of these actors. You stop having the equilibrium effect of, on the one hand, the rule of law, which is extremely important for protecting rights, including privacy. And on the other hand, you can have tyranny, in which the state becomes so overbearing that there is no room for liberty. The challenge is that now the pace of technological advance is so fast that in many areas, the state seems to be outstripping civil society in its capabilities. And so the preservation of these islands of privacy through encryption is one of the main ways that we can ensure privacy endures into the 21st century.
Many of us started using, the early internet, not thinking about any of this, right? All of our data is already out there. Can you talk a little bit about the sense of maybe apathy that exists? Because a lot of people probably feel like, my stuff's already there. How can I protect it at this point? And can Bitcoin sort of almost represent a turning point where you can start to gain more privacy and agency over your information?
Well, I think it's a great question, because a lot of Americans actually, it's basically, do they prioritize security or they prioritize their own privacy? And you'll actually find that about 50% are completely fine with the government collecting as much data as they need in order to feel secure, which is surprising to me, 50% of Americans. But I think it's important to understand what privacy means. And it goes back to this idea of like, I have nothing to hide. But at the same time, privacy is so important to our democracy, because if everyone feels like they're going to be surveilled and looking over their shoulder, what happens is there's a self-censorship that occurs. And they feel like they can't, spread ideas that aren't politically favorable. And so it impacts kind of a pillar of our society. And so people have to understand what they're giving up when you talk about, I want more security, I want the state to surveil us. They're giving up something much more than just, say, like them reading their
Instagram or their messages or things like that. They're giving up really a critical part of their democracy.
Yeah. So when we think about privacy, one of the questions that often emerges is, what is it, and how is it different from, example, secrecy? I would suggest that privacy is a mode of relating. Privacy doesn't say anything about what you do or do not know about another person. It's how you acquire that information. Under what circumstances? Is it a respectful exchange where you're preserving the autonomy of the counterparty in your information transaction, to put it that way? You're preserving their autonomy to self-disclose at will. So Eric Hughes, one of the early cypherpunks, defined privacy as the right to choose how you self-disclose and what you reveal to the world. The problem that we're facing now is that the default has shifted from people not knowing things about you to them knowing things about you. This also compromises what sociologist Irving Goff has called civil inattention. When you're in a public situation, you're not staring at everyone. That's super weird. It makes people feel threatened. People practice a kind of aversion of the gaze, a kind of not knowing certain things, even if they're getting information that they didn't ask for. Well, with mass surveillance technologies, now sort of everyone can stare all the time. And so the basic modalities of showing respect to other people and care in social interactions are breaking down. And predictably, this also has a corrosive effect on society.
I think there's a lack of understanding of the difference, especially with governments, right? Because privacy is about protecting what you have, whereas secrecy is about hiding something, because you don't want people to know, because potentially it's nefarious. CBDCs seem like a natural progression of the increased, consolidation of power of the state, increased surveillance, and trying to maintain that grip on power. So can you talk about sort of that battle between the forces of control, which will be the CBDC, versus the forces of freedom, Bitcoin, and individualism and sovereignty?
Yeah, and I'd love to hear Natalie's take on this as well. But to me, a CBDC represents the next level up in terms of the surveillance capabilities, because it's with the money itself, and there's so much information you can get from tracking financial information at kind of granular level and be able to control it. And so when you think about a CBDC, it really would allow them to have basically any kind of information, and then from that information, you can really tell a lot by the person, who they are, where they interact with, where they spend their money, and which can lead to censorship from a tyrannical government if they had that power. And so a lot of people argue that this isn't going to be a benevolent government or a benevolent actor with this kind of power, this tool, and so we should just refrain from them having it at all. But I think where you look at the system, where things are headed, it has to kind of go this way for them, because the system's getting too out of control. It's getting too unstable. The debt's getting too large. And so when that happens, they have to kind of tie things down. There's more capital controls. They have to be able to basically attack savers and trap them. Like Jim Rickards says, when pigs are slaughtered, they're herded into pens. And when savers want to get slaughtered, they're going to herd them into digital accounts with negative interest rates in which there's no escape. And so Bitcoin, to me, represents that escape. And that's exactly what Christine Lagarde said. She's kind of said the quiet part out loud. Bitcoin is an escape. And if there is an escape, people will use it. And when this system looks like it's kind of falling apart, they're going to have to entrap people in it. They're going to try to close that escape as much as they can. And then it's up to us to build the tools necessary to people to continue to be access it.
Right, yeah. CBDCs, from my point of view, represent an inevitable outgrowth of the confluence of two types of money, credit money and state money. So in the early 20th century, a number of theories of money were published, mostly by German academics. And one of them by George Friedrich Knapp, called the state theory of money, in effect argued that now that we have this powerful state, we no longer need commodity monies. Now, in effect, all money is credit, all money is chartalist, all money is fiat, and that is a good thing. John Maynard Keynes then was instrumental in ensuring the translation of Knopp's work into English in 1924, and cites it himself in his treatise on money as simply the fact. In all civilized nations, he writes, chartalist money, money is chartalist. It has taken several generations to understand the implications of this. Money is an information technology. It communicates information, as Nick Szabo has really wonderfully shown in his work on the origins of money. And so if the state is the origin and source of a type of money, it is no big leap to imagine that it will use that money for full surveillance. And so what we're seeing with the rise of Bitcoin is an alternative monetary technology that also has the capacity as a second order effect to act as a privacy technology.
I really want to dig into more of the idea of credit versus commodity money, because I know you're doing a lot of research into this. And if you guys have read Broken Money by Lynn Alden, she goes over the differences. It was also in Principles of Economics. And what I thought Lynn did so thoughtfully is she boiled it down to the question of who controls the ledger. So with commodity money, it's essentially nature. And with credit money, it's a central authority, being increasingly this powerful state. Can you talk a little bit about how the properties of the monetary system with credit money leads to this consolidation of power? And ultimately, even though the numbers are with the people, right? But the state with fewer actors, the elites, seems so powerful that we can't overtake the control that they've achieved.
Right. So, from the point of view of state theorists of money, money is a creature of law. That is their thesis. And so the state, as the arbiter of law, determines what money is. By declaring something legal tender, the state has, in effect, monopolized what money is within their jurisdiction, and there's no question. I mean, even today, the Bank for International Settlements, which sets banking policy worldwide for participating institutions, defines final settlement as a legal definition. The problem is that these theories don't have any account for the origin of law itself. Where does the law come from? How is the law legitimized? What happens under conditions of breakdown of law? Well, those are precisely the use cases that a commodity money is designed to be very useful in.
Yeah, no, I disagree with everything you said. And that's kind of what Lynn says in her book as well. When things aren't kosher between countries, that's when credit money falls apart, and that's when commodity money really rises. You see that in times of war, where commodity money gets popular again. And so I would just agree with everything Natalie just said. I don't know if I have much to add beyond that.
Well, let's talk a little bit more about CBDCs, because we've seen increased financial censorship. And even though we're the global reserve currency, we're not the first to put out, a CBDC. There have been unsuccessful experiments in places like Nigeria and the Bahamas. We know that in China, they've been experimenting with one that seems very dystopian with a social credit score. So can you talk about, where do you see this going? Some analysts say that the Fed doesn't want a CBDC and they're going to do anything to prevent that from happening, but yet they've put out press releases about Fed now. So how do you see this eventually taking hold? Will we all have a CBDC account, and what will that look like?
Well, there's kind of a difference here between wholesale CBDCs and retail CBDCs, whereas a lot of people think of CBDCs, they think of a retail CBDC where you have an account directly at the Federal Reserve and they're going to be able to track everything, and it's going to kind of compete with commercial banks. And I'm pretty optimistic that that's going to be delayed for a long time in terms of that design in the United States of America. Now there's some talk of that happening in like Europe, where it's a lot more concerning. The Federal Reserve has explored a wholesale CBDC, and they are doing different pilot programs like Project Hamilton, Project Ubin, Project Cedar, where they're kind of exploring how it could improve the efficiencies of payments between entities, large wholesale payments, kind of competing with FedWire. But to me, it's like they don't want to have a direct account with the Fed if they do go the retail account, because they don't have the operational capacities or the compliance capacities to really take on all that business. They're not, the Federal Reserve's not a customer-facing organization. They want to keep the commercial banks doing all of that. They don't want to take on the risks, they don't want to take on the costs, and they also don't want to disintermediate the commercial banks because of financial instability issues. And so they want to create a two-tiered model, and this is what the digital euro is trying to do as well, where they basically have CBDC accounts at the commercial banks, and then the commercial banks will handle all like the wallet infrastructure, all the tracking, all the reporting, all the customer-facing tasks that they're already set up to do. They'll just do that with a CBDC account. And so and then the last thing I'll add is that they want to cap it. They want to make sure that this is a product that doesn't suck bank deposits out of these commercial banks into a CBDC account and risk removing their cheapest and largest source of funding, which is bank accounts, or deposits, excuse me. And so they want to cap these CBDC accounts at like $3,000, or they want to have penalties, like negative interest rates associated with these accounts, which is really funny because they say it's going to improve payments, but how is that beneficial to improving payments if there's built-in restrictions in it? It's just going to add friction to its usage as a payment mechanism. And so it kind of thwarts other purported benefits because they don't want to disintermediate the banks. So they want it to be a good product, but they don't want it to be too good. And so that's a sign that it's not going to be a good product at all. They should probably never do it. And so that's kind of how they're designing this thing. And we can push back at it, but it's like what Natalie says. This is kind of inevitable in a lot of ways because of just how the system's structured. Yeah,
the state does not voluntarily roll back its own power ever. It consolidates until there are major disruption events, and then alternatives emerge.
Okay, so I think that we are sort of at an inflection point, right? And the people that are here, for the most part, I would assume they're Bitcoiners. So maybe they're listening to something like this saying, well, I'm okay. I've got Bitcoin. I'm not going to buy into this whole CBDC. What's the message for how this will impact everyone? There are going to be implications, including for Bitcoiners. What are the risks, and what do people need to know that they can take away from this conversation?
I think Bitcoin is obviously already in and of itself an extraordinary intervention here, but the manner in which the vast majority of people access Bitcoin continues to be intermediated. And all forms of intermediation will be subject to capture on a long enough timeline. And so I see the technology race to build convenient, easily accessible self-custody solutions as perhaps the most important initiative right now in the Bitcoin world.
I mean, I would just echo exactly what Natalie just said. It's up to us to, as an industry, to be more agile and innovative if we're going to be moving against this large state actor who's going to come down with the surveillance tools. That's actually one of the things the cypherpunks said early on. They're like, hey, I think we can actually win this because we're smaller, we're more agile, we're innovative, we're technologists. We can build tools and technologies that thwart their plans of surveillance. No longer have to go by laws, but we can actually just build concrete technologies that prevent them from achieving their goals. And when you look at Bitcoin today, I mean, it's synonymous, right? But I think there are improvements with privacy on its way in different layers of scaling. CoinJoin's one of them, but also Lightning has better privacy guarantees than the base chain, but also things like Fedimint has better privacy, and using things like Chaumian mints to kind of help with privacy as well. I think that'll just continue to develop over time, but there is a race here. There is a race here. So like maybe we can't stop a CBDC from coming, but maybe we can delay it to give us more time to build the tools necessary to allow people to self-custody more easily. And I've been very encouraged by the development over the last couple of years in terms of custody solutions. They're getting better, they're getting easier, the UX is getting better, there's just more of them, there's more wallets, and so I just want more of that. I want more development, I want more solutions, more tools, specifically geared towards better UX and UI.
Well, going back to the idea of apathy, that so many people have their information already out there, maybe it's already been scrubbed, there's also been a cultural shift where people put more information out there. You know, I mean, decades ago, you wouldn't imagine that folks would be, you know, turning their camera on, talking about maybe intimate details of their lives. But things have culturally shifted. And I know, Natalie, you study, you know, shifting morals and values within society. So do you have hope that within society we can increase maybe people's desire to have and fight to protect their privacy? Or do you worry that we're sort of going in a direction where it's going to be, you know, maybe the Bitcoiners fighting for this and the majority of people saying, I give up, and for the security and convenience, I don't care who has my information?
I think the rising awareness in younger generations that they're always being surveilled, whether it's, you know, through their social media accounts or simply ambiently as they go about their lives. You know, cameras everywhere. People can film them almost at any time. You never know, you know, when something about you is going to become public information. What this has done is it's nurtured a subjectivity in young people where they develop performance skills very early on. So they understand that being in public is being on stage. And you can actually see this. I recently watched some home videos from the 90s, and the cultural differences are striking. People don't act like they're on camera. They often aren't even aware of the camera being there. Now, you know, everything is kind of curated. People have a stage presence, a stage voice. They know when they're being watched. That has also created a sharper split between, I would suggest, the performance of everyday life that is on display and a kind of private sphere that doesn't ever get touched by that. So it'll be interesting to see how that evolves culturally.
Definitely, Sam.
Well, I just think the pendulum has shifted so far the other way. And like Natalie said, the younger generations, I saw a very fascinating trend of younger generations actually preferring flip phones now, which was really cool to see. Because, like, you know, my age, we grew up in this rise of technology and the smartphone. I can't imagine what it's been like for these younger generations to be born into that world. And now you see them kind of attracted to these older technologies that don't have as much surveillance. You know, they don't want to be as connected. Some of them. There's this counter trend happening that again is super encouraging because they have to fight back against this a little bit, or else their freedoms will continue to get eroded if they don't start to kind of combine their willingness to just say no. Like, I'm going to reject these technologies and the convenience associated with them because I care about my privacy.
Well, it's almost time to wrap up. I want to get your final thoughts, but my final question really is if the folks here and the folks watching this at home online, if they could just do one thing today, this week, this month to make their lives more private, what would it be? Their digital lives, digital identities.
I can go first on that. I think just understanding that, you know, this device right here, if the government could plan and design a surveillance machine, it would be a smartphone that we carry around in our pockets every single day of our lives. It listens to us, and everyone kind of knows. There's like a nihilism attached to it where you get an ad on Instagram. Like I remember I mentioned some random pizza place one time. I've never heard of it in my life. It's like this random Italian joint. And it popped up in an ad in my phone, and I'm like, yep, they're listening. So if you are having a conversation that you don't want, and you know, out there, and somebody listening to you that's more private, don't have your smartphones in that room, like at all. You know, put it on airplane mode all the time when you're sleeping. Get it out of there whenever you want to be private. That's probably the #1 thing you can do. And then I would say, you know, buy Bitcoin.
Yeah, I'm going to wrap it up here, but I'm sure most of us got the FEMA alert the other day. There wasn't a way to opt out of that. And increasingly, there will not be ways to opt out. Not having a smart device will become criminalized. Not being online all the time will become criminalized. And so I would suggest nurture habits and practices of privacy, prioritize based on what's most important to you, and then use that to be a political subject.
That's wonderful, and we can peacefully opt into Bitcoin. So Natalie, Sam, thank you so much. Everyone, round of applause.
Thanks, Natalie.
Thank you.
GB. A little something from the nice guys. Come on.
What's up, everybody? How you doing? Hope you're having a great day so far and enjoyed yesterday. My name is Ryan Flynn. I'm the head of Swan Advisor Services, and I wanted to just take a couple minutes to tell you a bit about that side of the business. So what is Swan Advisor? If you are a financial advisor or if you work with a financial advisor, this message is for you, so pay attention. So Swan's mission, right, is to foster Bitcoin adoption around the globe, and we've made tremendous strides with that, with our savings plans and our Swan Private offering. But in the US, there's a $10 trillion market that is relatively untapped in terms of Bitcoin adoption. And that is a pool of capital that is controlled by financial advisors. So RIAs, broker-dealer advisory firms, these groups have major educational and compliance and operational challenges that are sort of preventing the adoption of real Bitcoin, right? And it's forcing their clients into proxy products like GBTC, and obviously those are suboptimal products for the most part for clients looking for access to real Bitcoin. So Swan Advisor Services is solving these pain points, helping these firms clear these hurdles for adoption so that we can turn these firms into real Bitcoiners. And we can do it. I've seen it happen. There's just work to be done there to remove those barriers. So we are sort of becoming the advisor's trusted Bitcoin partner. We're providing them the research, the expertise that they need to guide their clients on their Bitcoin journey. We utilize our Nakamoto portfolio analytics platform, our tremendous research team to arm these advisors with the knowledge that they need to provide real advice on Bitcoin to their clients instead of sort of punting the ball down the field for suboptimal products like GBTC. So we just completed a pilot phase of this platform, and we have some really exciting updates coming soon. So please stay tuned to that. For that, if you are an advisor that wants to get access to real Bitcoin for your clients, or if you're a client of an advisor who is not fulfilling their fiduciary duties and owning the best money in human history, come find me, and we'll fix that for you. Again, my name is Ryan Flynn. You can get me at the Swan booth or email me at ryan@swan.com. Thank you.
All right, what a panel that was. We're fighting for liberty in the digital age. So before we move on to the next panel, just a shout out for one of the sponsors of Pacific Bitcoin is CleanSpark. They are responsibly developing infrastructure for Bitcoin. They invest in communities sourcing wind, solar, nuclear, and hydro. Now next up, we're going to be talking about avoiding the debt spiral. There's been a lot of people talking about this, and I'm excited to hear what our panelists have to say. So let me just quickly introduce our panelists. So our panelists will be James Lavish. He's the author of the Informationist newsletter, which is a fantastic newsletter. You should check it out. He's also managing partner of the Bitcoin Opportunity Fund. Next up, we'll have Lawrence Lepard. He is a managing partner with Equity Management Associates and an excellent macroeconomics commentator. We also have Preston Pish, who you also know from yesterday. He's the founder of the Investors Podcast Network and also a really great macroeconomic commentator in his own right. And as the moderator for this panel, we'll have the legend Greg Foss. He's got over 3 decades of experience in debt markets. He's all about the kids, and I'm sure this will be a very enjoyable panel. So everybody, please put your hands together. Let's welcome the speakers to stage.
Playing your theme song there, Greg.
Awesome. All right, everyone, good morning. Thanks for attending. Stefan politely said I've spent 30 years in credit trading. Very simply, credit runs the world. Okay, you may like to look at equities for signs, but you have to look at credit markets. Credit runs the world. And I'm pleased to be joined by 3 experts who are going to talk about that. But I want you to remember one thing. First, study mathematics. This hat says it's only math. Do the math, okay? Understand what we're talking about today. The title is Avoiding the Debt Spiral. I'd like to massage that a bit to understanding or managing the debt spiral. So the first thing that we need to understand is what is the debt spiral. I'm going to turn that over to my friend James Lavish to give a brief definition of the context of the debt spiral that all federal governments, not just the USA, all federal governments find themselves in.
Thank you, Greg. So first of all, happy Friday, and I'm sorry I'm about to ruin it for you. So what is the debt spiral? Well, Greg and I talked about this about a year ago, and he encouraged me to write an article about it to let people know exactly what the position is of the United States government and many of the sovereigns around the world. But basically, the debt spiral, if you were looking at the United States Treasury and you considered it, if you were looking at it like a company on the New York Stock Exchange, we would call it a zombie company. Now, what do I mean by that? Well, it means that the company isn't covering its interest expense with its earnings, okay? So if you look at the United States Treasury, and we look at all of their expenses, you have mandatory expenses like the Social Security, Medicare, Medicaid, and then those are signed into legislation. They have no choice. They've got to pay these expenses, right? Then you've got big expenses that are signed into long-term contracts like the defense spending. When you add those up and you add interest expenses on the debt, they total more than the United States Treasury takes in earnings, which is really just tax dollars every year. So that creates a deficit. And in the United States, we've been operating in a perpetual deficit for a very long time. And so that deficit leads to us having to borrow more to cover the deficit, which is issuing bonds. And then you have to pay interest on those bonds, and then you have to, that interest that you're paying now creates a larger deficit. And as that deficit grows, it creates a larger interest expense, which creates what? A larger deficit. And eventually it creates the demand for treasuries to fall, which means that you're going to have to pay more interest on that. And as interest rates are rising, you're paying even more interest on the debt that you're issuing, which creates what? A larger deficit. And this is called the
debt spiral. So eloquently put, James, people would argue, well, don't worry. The economy is growing just as fast as the debt is. That's false. total debt to GDP is a very important metric because total debt gets paid by tax revenue on GDP, right? So you have a numerator, total debt, you have your denominator, GDP. The fact of the matter is that your total debt is growing faster than your sales growth or GDP. Larry.
Yeah, so in 2008, when John Law was running the Federal Reserve, Ben Bernanke was running the Federal Reserve, things changed. And the U.S. national debt since that date has grown at a rate of 8.5%, and the GDP has grown at a rate of 4%. That's the fundamental problem. The GDP is necessary to pay the interest on the debt. And so the Keynesian experiment, as we know it, it's toast. It's all over. These guys have been lying. We know it. They know we know. And we're about to put them in their grave.
So if you want to put a number on it, I'm going to turn it over to Preston here, but if you want to put a number on it, the United States added $500 billion of debt in the last 2 weeks. So now we have borrowed $33.5 trillion. So we just crossed $33 trillion, and we just added another 500 to it in 2 weeks.
I just want to put context on that number. So we hear these numbers, 500 billion in the last 2 weeks. And for most people, they're just like, oh, that sounds like that's a really big number. If you look at the Department of Defense, they spend, what, 700, 800 billion in a year, okay? We have added 500 billion, almost that same amount in the last 2 weeks. So to really wrap your head around these numbers, think about the meme when people post on Twitter of the aircraft carrier going through the sea with the fighter jets and all the training and all the personnel and all the bases. You go to Texas, there's a road at Fort Hood. It's 7-8 miles long with tanks for 7 or 8 miles. To fund all of that, the people, the material, the R&D, all of it, $700 billion. We've added $500 billion in the last 2 weeks. So when you're trying to wrap your head around the magnitude of these numbers, you have to think in terms of the context of what this is. And when we talk about the interest rate, what are we looking at for the interest rate in the coming year right now? It's over $1 trillion?
Oh, so if you're looking at just the interest expense, last year it was about $600 billion. This year it's just under $1 trillion. So it's like an 80% rise, or at least to 70% rise, but it's going to be close to 80% rise in the interest expense in 1 year.
So you're to service just the interest, not any productivity, not anything, right? Just the interest is exceeding the budget of DoD and all of that spending that's taking place. To kind of wrap your head around where we're at.
They borrowed $500 billion in 2 weeks. That's the entire market cap of Bitcoin.
So let that sink in. They borrowed the entire market cap of Bitcoin in 2 weeks. Size or context is always important, and sometimes people lose the context in the big numbers. But let's not rein it in. But
Greg, real fast, one point to this. We are talking about the best fiat currency in the world right now. This is the best one. The rest of the world is dealing with, this thing's only debasing, or at least it's only debased over the last 10 years based on the compound annual growth rate of 7 or 8%. That's the best one that we're talking about. Everything else is worse than that everybody else in the world and the planet is dealing with, just to put it in context.
So we talk about event horizons and whether we're approaching an event, whether we're in an event. So today was the jobs number. I don't know if people saw it. And initially, when it was announced, the U.S. Treasury 10-year note spiked up 12 or 13 basis points to a new high of about 4.85%. This is a new high yield in the U.S. 10-year note since 2007-ish. But as these rates go higher, obviously when the Treasury refunds or rolls over their debt, they have to pay higher rates. So therefore, the debt spiral accelerates. Let's talk about that.
So fundamentally, what we have here is a sovereign debt crisis. And the United States is starting to look like a third world country. You know, we've seen this pattern before. This is not new. We've never seen it in the world's reserve currency, which is what we have here. But we've seen it in Argentina, we've seen it in Venezuela, we've seen it in Zimbabwe, we've seen it in Weimar, you know, time and time again. And the fact of the matter is that as deficits continue to grow, the bond market feels the stress of that as we have to issue more debt, interest rates go up, and there's no way out. I mean, these people, the people who run the Fed are completely, totally, and utterly fucked. They are going to lose this battle, and the currency is going to ultimately become worthless. And you can kind of see that. I mean, in Powell's most recent presser, he said he's navigated under cloudy skies with a sextant. I mean, dude, we've got GPS. I mean, what the fuck? You know, I mean, the guy has no clue what he's doing, and you're seeing him start to indicate that they're going to have to pivot. And I think in terms of an event horizon, we're all of the belief that that pivot has got to come fairly soon.
So that pivot would indicate resumed QE. I like to say QE infinity is inevitable. But with resumed QE, what you have is accelerated fiat debasement. Now, everyone needs to understand that the US 10-year note basically sets rates for the rest of the world. So what happens in the USA impacts the rest of the world. And it's those other secondary and tertiary fiats that get really, really hurt. So we can look at Bitcoin price in US dollars, but sometimes I encourage you, I'm a Canadian, a G7 country. Canada is a G7 country with an economy that's smaller than the state of California's economy. You guys are very lucky to live in the United States. It's a beautiful, integrated economy, but it sets rates for the rest of the world. And sometimes when the USA catches a cold, everyone else gets very, very sick. So we have to understand the context on a global macro basis. Over to you, King.
Yeah, so something that's really important to understand is we keep talking about QE and how the Fed's going to pivot, they're going to provide liquidity to the market. This is all, the reason why they must do that is exactly what we're talking about. The Treasury must have a market that will buy Treasuries. It must stay liquid. It absolutely has to have a place to dump all these Treasuries. And you're seeing the rates of the Treasuries rise on the long end, looking for price discovery on where these rates are going to go, because they know that the Fed or the Treasury has to have a market for them. It cannot break. So when we talk about QE, quantitative easing, what we're talking about in simple terms is the Treasury pushing a button, putting a bunch of money on the Fed's balance sheet. The Fed tells Citigroup and JP Morgan to go buy a bunch of bonds in the market. We're going to buy them back from you today. The Fed gives them the money and then turns around and holds the Treasuries on its balance sheet, right? So that's QE. They're literally monetizing the debt. And we've seen this happen in Japan, where Japan owns, the Bank of Japan is the largest owner of its own debt. Think through that for a second. They own more than 50% of its own debt. So that's where we're headed as a country. And so, but that's when we talk about QE, we talk about having the Treasury come in to save the market with the Fed, because it must have that market.
And as Greg says, it's just math. And historically, we've seen this many, many times. We saw it in 2008. We saw it in the repo crisis in 2018. We saw it in March of this year. I mean, the Fed actually arguably already has pivoted. BTFP was a small pivot. And so we know that their third mandate, their two mandates are obviously full employment and inflation. They failed at inflation, obviously. We know their third mandate is keeping the system functioning, and every time it doesn't function, they do the exact same thing, which is they pivot. And I want to just read 3 headlines. These are just from yesterday. Nick Tamaros in the Journal: if the bond market keeps this up, the Federal Reserve will have less of a reason to hike rates again. Wonder what that means. Wall Street Journal headline yesterday, rising interest rates mean deficits finally matter. Bond sell-off might force the Fed to rethink shedding assets. What does that mean? Okay. Breaking markets, Fed's daily. With the rise in bond yields, the need to do additional tightening by the Fed is not there. What does that mean? These fuckers are going to print. They're going to print until their fucking eyes bleed. And we know it's going to happen. And so all we've got to do is outlast them and then watch them as they suffer.
I like sitting on stage with it's great to be on stage with Larry Lepard because Foss doesn't look like such a swearing imbecile, okay? So let's hear a bit more from Preston, though. Preston has some excellent takes on the credit markets, and we were talking in the back room, Preston. You know, we got to look at what signals markets are giving us, and you know, the U.S. 10-year rate I talked about hit 4.85, but there's other things that are very concerning, including the debt maturity profile of the United States Treasury. Let's talk about that a little bit. What happens when short-term bonds that are rolling over in the short term need to get refinanced at these higher rates? Wouldn't you have thought that the Treasury would have, when rates were really low, extended their maturity profile so that we had a lot of outstanding debt? No, they didn't do that. So
yeah, I think it's, what's the number, like 45% of the debt, of the U.S. debt, has to be rolled in the coming 12 months. 18 months. Just to say that again?
And in 3 years?
3 years, okay. So it's happening quickly. The amount that they're going to have to do to roll that over and the higher interest rate that they're going to have to do it at only compounds the numbers that we were throwing out there as far as what the interest expense looks like in the coming year. Something else that I think is a really, when you're looking at credit markets and you're looking at yield curves and you're trying to understand what the market's telling you, credit is just, these traders like Greg, when they were pricing bonds, the first thing they're asking themselves is, what is the inflation rate? Is it 3%, 4%? And then what kind of premium can I get on top of that? Well, the bond needs to be yield, if inflation's 4%, well, the bond needs to be paying me like 6% for me to outpace that and for it to be something that I would actually want to own, especially if I want to own it long term. When we look at what's happened over the past 12 months, we've had a disinflationary, where the inflation is slowly, the print's coming down. Prices are still going up, but the rate at which they're going up is coming down from where it was 12 months ago, which means you would expect to be getting a bid in credit markets, but you're not. Credit markets are still selling off. They're still going higher. And so what is that signal telling you? It's telling you the people are finally doing the math. You know, James wrote about this debt spiral a year ago, and people would look at him and be like, well, who's this guy, and what's he talking about? He's wearing a tinfoil hat. But all of a sudden, he's not the one wearing the tinfoil hat. Everybody on Wall Street is now doing that same math, and that's why they're selling the long end of the yield curve, even though we have a quote-unquote disinflationary impact happening, because everybody knows that that's only going to play out for a couple more months or a year before what Larry's describing comes to fruition and is a reality. People are finally doing the math. They're figuring it out. The credit markets are screaming that to the public, whether you want to see it or not in the price action.
Right, and so as this debt rolls off, people are saying, well, okay, well, we're going to hit a recession here at some point, and then the interest rates are going to come down, and it's going to all be fixed. But actually, that doesn't really solve the problem of earnings, because we've already seen the Fed has put out, the Treasury has put out that earnings, tax receipts this year are down 10% already from last year. So what happens when we hit a recession?
That's a really big deal. You're down 10% when you're pretty much at the peak of this cycle, right?
Yeah, so
which is unheard of.
Yeah, so we hear the unemployment rate's low, everything's great, but yet at the same time we hear corporate bankruptcies are going up, right? Which means that profits are tightening, right? So you're getting lower margins, so that means that you're going to have layoffs. But just remember this thing. Remember that when you see a recession, that's when unemployment spikes. Unemployment does not give you an indication you're going to get into a recession. That means you're in it. So every time you hear the Fed say that, unemployment's still low, everything's great, no, it's going to spike after it's too late. And this is part of that perpetual problem. So what they're going to do is they're going to break the market, because the only thing the Fed can do is tighten enough until we just squash demand and cause that big spike in unemployment, the drop in spending. But what does that do? It perpetuates the need for the United States to borrow more money. And so what does that lead to? QE and infinity. They're going to print so much money it'll make your face melt.
I was just going to say, so historically, it would take about 18 months for this lag effect to take place, where they've paused, and then it takes 18 months for a lot of those effects of these higher rates to like percolate into the economy. I'm of the, I kind of think that the amount of stimulus that they're going to have to do on this incoming deflationary collapse that's going to take place, they're going to have to flood liquidity into the masses, similar to what they did during COVID. I'm curious if you guys see it similarly, and I don't even know that lag effect of 18 months is going to take place, because I think the need for UBI and some of these other activities to push liquidity into people's hands is going to be so desirable that you're going to have social unrest unless you act in that way. And I'm curious if you guys have a similar opinion to that.
Yeah, I mean, if you look back and if people talk about the 1980s and Volcker, where he raised rates at the 18, 20%, and just say, well, we could just do that. Well, obviously we can't, because now you all understand that we have a debt problem, right? But we've become addicted to this stimulus because we have so much debt. And that's the great issue. And Greg, if you could explain what a credit event is for everybody, because that, I think, is where we're headed. We're going to have a big credit event that causes this spike down in everything, and then the Fed needing to step in with the Treasury and rescue the market.
Well, as I said, credit runs the world. I've been through 4 credit events in my history. Started with Latin American debt. Next was long-term capital management. I won't run through them, but everyone is different. As Jeff Booth often says, you never know which snowflake causes the avalanche. But typically, we were talking backstage again, it could be a large hedge fund that gets obliterated and taps out. There's been rumors lately in the US Treasury market, the price action in the long bonds has indicated that someone got carted off the floor. You don't know what specific event will trigger it, whether it will be high yield bonds, whether it will be a sovereign nation, whether it will be some sort of leveraged fund blow up like long-term capital management. But generally they are based around the credit markets, as I've said. So you can measure this in credit default swaps. I don't want to get too granular, but I will end the panel with a very important metric. But over to Larry and Preston to see what they think.
Yeah, my view is that a lot of things are all going to break at once. The economy is going to hit the wall. The small and regional banks, we know there's $600 billion of losses in the small and regional banks. You know, they were very close to losing control of the whole thing in March when Silicon Valley Bank went down. I mean, they thank their lucky stars that the BTFP worked and that, you know, Aunt Janet was able to bluff everybody into believing that they would cover all the deposits, because there's $17 trillion in bank deposits. The FDIC cannot cover that amount. But those banks are still hurting. I mean, 50 to 60% of the banks probably have negative equity right now. And, you know, wait until the wages from all these labor movements start to flow through the earnings statements of all these companies. I mean, I feel terrible for these people who are striking. I understand why they're striking. The strike is they're getting roasted by inflation, but they're about to lose. They're about to realize they got a bigger problem than inflation. They're about to lose their job because the companies are going to fail, and then they're going to be out of work. I mean, guys, I mean, sadly, this is going to be an unbelievable shit show, in my view, in the next 12 months. And my sense is that politicians are going to respond the way they've always responded, which is to cover their own ass, to try and protect their own ass. And the lowest hanging fruit, the easiest way for them to do it is going to be to chop rates and send out UBI. And to answer your question, Preston, I think it's going to be unbelievable. I think the Fed balance sheet is going to 20 billion or 20 trillion on the next cycle. They're going to have to, because once again, you know, they're steering this car between these guardrails of too much inflation and too much deflation. I mean, we've got negative M2 growth today. We haven't seen that since 1930. which was the Great Depression. And so if they think they can do the same thing and not have the same result, good luck. It's going to be a mess.
So I guess I would say, I think in the coming 12 months, we're going to be, as Bitcoiners, going to be kind of surprised at some of the things that we see. In particular, I think one of the things that's going to surprise us most is I think you're going to actually see a large bank, call it Fidelity, BlackRock, or whatever. I think they're going to actually, I think the ETF's going to get approved. I think you're going to see one of these large banks actually start to recommend Bitcoin as a percent of the standard portfolio for people. And I know that sounds crazy for people listening to that. I think that's happening in the coming 12 months, where I could see a BlackRock say, we think it's appropriate for 1% of a person's portfolio to be in Bitcoin.
Oh, and by the way, we have this ETF for you.
And we have this ETF vehicle for you to do it, which I don't think anybody should invest in. I think they should self-custody, buy their own Bitcoin, hold their own keys. But I think that it's their only hope out of this. I think there's people on Wall Street that are actually able to do this math. I think they're somewhat starting to see what the value prop of Bitcoin is, in that it actually provides salvation to this disastrous scenario. And I'm very hopeful that that it'll be hopefully enough to kind of bridge this transition. And I think hang on to your hats, because I think the next 12 months for Bitcoiners is going to be one hell of a ride.
Yeah, go ahead. So what we did, four clowns over the age of, Preston's the youngest, I don't know how old you are, but four clowns with
he's just a millennial.
With an age averaging, I'm going to say 57. No, yeah, 57-ish, okay? We put together
really
30,
old.
We have 30 slides. We have 30 slides that we put together. Larry has them in his lap here, but then they told us you're not smart enough to operate a monitor, okay? Which is me. So all of these slides are under Larry Lepard's Twitter handle. Please look at them and try and understand some of the mathematics that we're referencing here. This is scary stuff, but it's education. It's not, we're not making these numbers up. These are grade 11 mathematical equations. We have 3 minutes left. We're going to try and summarize any points here, panelist by panelist.
So really quickly, when we talk about QE and we talk about printing so much money your face melts, well, what we're talking about is the need for the United States, for the Treasury to continue to have inflation, to have a higher GDP number on nominal terms, meaning just more money to tax, higher tax receipts to pay down all that debt that they're issuing. So what does that mean? That means that there's going to be asset inflation. If they create all this money, then you want to own things like Bitcoin, because that cannot be inflated. That will be your ultimate hedge against this disaster scenario where they print so much money that your eyes bleed.
I don't have anything else to say. I know we're short on time.
Yeah,
so
I really don't have much to add either. I think that everybody's here obviously understands the issues and the problems. A lot of people ask when, and none of us know when. It feels to me like we're in it right now with what the 10-year is doing. I'd be shocked if it takes more than a year for this thing to come unglued and for them to have to pivot massively. Shocked. But I've been wrong a lot. So I think by 2030, the dollar is worthless. We've got full-fledged hyperinflation.
So thank God for Bitcoin.
Yeah, thank God for Bitcoin.
I have an expression, all I bring to the table is 35 years of mistakes. Don't let your mistakes kill you, though. Our good friend Lynn Alden, in Larry's chart, chart number 4, page 4. Fiat debasement is 100% certain. When you're given a certainty of an outcome, you need to protect yourself. Very few things in finance are 100% certain. Fiat debasement is 100% certain. Hence, own hard assets. What's the best hard asset? Here's a shout out to Swan. You guys know they have this brilliant CIO. His name is Hoffa. He put together something called the NakamotoPortfolio.com. It's a open source platform that measures, or it gives you the ability to analyze anybody's portfolio to see how much Bitcoin should be in that portfolio to optimize Sharpe ratios, a way of saying what is the best way to increase return and maintain the same level of risk, or reduce your risk and keep the same level of return. Hoffa was kind enough to put my CDS model on the portfolio, which values Bitcoin using credit default swaps on sovereign nations around the world. One of my slides, the only one, was to show the value of Bitcoin according to the NakamotoPortfolio.com. I can't show it to you, but on that methodology, in today's numbers, Bitcoin's worth over $300,000 US per coin. And that's before we've hit the credit event. That's just using open market rates. Guys, learn mathematics. It's that simple. Manage risk accordingly. Buy Bitcoin for the kids. Thank you.
Since 2013, institutions have trusted BitGo for their digital asset needs. Backed by Goldman Sachs and other top investors, BitGo brings together the best of Wall Street and Silicon Valley to deliver institutional-grade security, compliance, and financial services.
All right, so Greg Foss and the guys just took us back to school, year 11 maths. Who's good at year 11 maths? I've forgotten it, I'll be honest. But we have so many problems with government debt around the world, and I really found that there was a lot of useful insight there. So I hope you took some useful insight out of that panel, and that you can share that also with your family and friends also. So before we move on, a quick message. Shout out for Marathon, the official mining partner of Pacific Bitcoin. And now coming up next, we're going to be talking about investing in Bitcoin's ecosystem. And joining us for this are our two speakers. So firstly is Christopher Calicott. He is managing partner of Trammell Venture Partners. And also Mike Jarmaz. He is managing partner of Lightning Ventures. And as the moderator, well, you already know that guy. It's me. So please welcome our speakers to the stage.
Welcome, the fire starter. Watch this.
Well, firstly, thank you for joining me, gents. It's a great time to be talking about investing in Bitcoin companies. So we're going to get into all of these questions. I think a common question that many people in the audience may have is, of course, why invest in Bitcoin companies? Could I hold Bitcoin instead? And maybe Bitcoin is the benchmark. So I know you guys will have some interesting thoughts on this. So maybe Mike, do you want to start?
Yeah, hello. Good morning. Is everyone excited? All right. Bitcoin VCs probably face that question more than any other VC, right? If you're just investing in a fund, you're probably not grilling the general partner about whether it's going to outperform the price of Bitcoin, because Bitcoin isn't really on your radar. And it's hard for the Bitcoin VCs because we're up against the best performing asset ever, right? And if we didn't think that investing in early stage Bitcoin startups was going to outperform Bitcoin, we wouldn't do this. We would be doing something else. And Christopher has some numbers here on Coinbase and Kraken, right? There's not really too many exits in the Bitcoin space that are relevant, but over 5-year periods, Coinbase is up probably over 300x over a 5-year period compared to Bitcoin, which might be up 50x. And same thing with Kraken over the same type of period. Maybe it's up 50x versus, I don't know, maybe 10x in Bitcoin. So historically, it's supposed to outperform, but a lot of that has to do with timing, right? You can invest in a poor time, and it's a completely different story. But the one thing for sure is that both of us are definitely going to outperform Alameda and a lot of the crypto funds. So we've got that going for us.
We're already winning.
So Christopher, do you want to add your thoughts?
Yeah. Look, I think there's something very powerful about competition. I am one of those awful capitalists you hear about on the news media all the time. And what's interesting for a Bitcoin native context is that if you think about all the patterns that have gotten picked up, where markets have said, this is validated, I need this, in large markets and large volumes of transactions, that tends to be a function of a business competing with other business in the process of solving the needs, lowering UX frictions, and actually onboarding users, which long-term means there's more demand on the native asset to the Bitcoin network itself, which is very strong alignment. And so I think, I talk sometimes about, and as a community, we all recognize that and have a sense of an inevitability for Bitcoin. And I think two things that almost seem in contradiction can both be true. There can be an inevitability for Bitcoin, but there can also, at the same time, be a circuitous and indeterminate length of path or time to true Bitcoinization in the future. And I think the companies that are helping build that future, they're sort of pulling that inevitability and that uncertainty a little closer to the present. And so there's a little bit of a virtuous circle where you're getting returns on the companies that are bringing that forward to the future. You're driving adoption. That's also helping your bag of Bitcoin as well. And so it's actually very well aligned, and it's very disciplined. I would say that we talk about things like time preference, and those things matter. If you want to practice time preference, venture capital, it takes 10, 15 years to make a truly globally recognized hallmark, marquee brand. And so it's very much aligned with the long-term vision of Bitcoin as well. And so for me, we feel like at the end of the day, we all work for Bitcoin. And for me, if I have some edge, some expertise in company building, that's where I can do my work for Bitcoin on a daily basis, and we all have our lane, we all find our specialization in the way that we can contribute. For me, it's a matter of mission, it's a matter of values alignment, and it's a matter of me doing the work that I feel like, and everybody on my team, we almost are driven from this place of almost like a sense of calling. There's passion and mission alignment, and mission can do some powerful things for companies.
Yeah, really excellent way to look at it. In some sense, there's an ideological aspect, like we think there's a moral component to Bitcoin, and that fiat currency and central banking and fractional reserve is immoral, and Bitcoin is the answer to that. But then there's also a component, as Mike was mentioning, that some of these companies will go on to outperform as well. Now, we don't know in advance which ones those will be, and as part of the venture capital model, you're obviously investing in a range of companies, and some of those will go big, and some of those maybe not as big. So you had something to add?
Well, also in terms of timing, which everything's great hindsight. Some of these Bitcoin venture funds, they might accept Bitcoin, right? You might be able to make your LP capital contribution with Bitcoin, with some sort of like lending component, right? Or borrowing against your Bitcoin. And in a bull market, when everything's going the right way, that's incredible. It's incredible to be able to post a certain amount of Bitcoin, borrow against it, and watch the price go up. And if you get caught on the other side of that, you just have to deal with it. So like we have a very small pilot fund, and Bitcoin was 60,000. So somebody who may be committed for $25,000 to our fund, they sold half of a Bitcoin and they made that contribution in cash. We have a very small positive IRR for our fund at this point in time, right? It's not, we're 2 years in. Small positive IRR based on that cash contribution, right? And if you were just measuring your wealth in dollars holding Bitcoin, you know, you'd be down 50% over the same time period. So you can never predict the timing, and that's a big part of it.
Yeah, with interest rates in this environment being higher, when you can, and you being the general public would have the perception of I can get 5% or more with you know, something that looks like risk-free to the average person, you need a higher internal rate of return in terms of performance. And through an asset class like venture capital, you know, and I'm, look, there's definitely a philosophical or ideological component that drives the mission piece, but I'm here for the returns. I mean, I really believe the outperformance is possible. And I sometimes share with people that are thinking around this question. It's there's a storied venture capitalist. He was the founder of Sequoia Capital, Don Valentine. And Don used to like to say, give me a B team in an A market. And why? It's not because Sequoia is looking for B teams, to be sure. What he's saying is when there is a strong tidal force that's moving a market in a direction that you can almost make some mistakes and still have outsized returns. The internet age and the global monetary revolution that's happening with Bitcoin, in my view, my market view and a core thesis is that's going to be the mother of all waves. And so that's part and parcel to why we do what we do. So there's a mission component and there's absolutely a strong returns component.
Fantastic. And so let's move on to the next topic. This is an area that I know the Trammell Venture Partners recently put out a report on this in terms of, you know, assessing the space in terms of Bitcoin and so-called, you know, quote-unquote crypto, even though I don't really like that term, but we're going to get into that, of course. And of course, let's talk a little bit about the size of the capital. How much money is going into some of these Bitcoin startups? So, Christopher, let's start with yourself.
Yeah, appreciate that. It's TVP, we've been around. I should introduce myself. Christopher Callicott, founder and managing director at TVP. And we've been around since the very early days with Bitcoin. We were Series A investors in 2014 and a Series A bridge for Kraken when it was called Kraken Bitcoin Exchange. We've been investors in Unchained Capital, Voltage, and many other brands that you would know in the Bitcoin native space. So we're in a very, I would say, unique position to be able to instrument, at least currently, before it grows at an accelerated pace, the universe of Bitcoin native companies as we understand what that means. And so over the last few years, we've been doing our homework through 2019, 2021, and 22 to understand all of the deals that are happening from pre-seed to Series B. And so we were able to put this together and call out some highlights. Importantly, for guys like Mike and myself and others that are on mission with Bitcoin investing, we've got to sort of soften up the institutional allocator mindset, which has been set by a bunch of crypto VCs that says the innovation's not happening on Bitcoin, which is utter bullshit. And it'd be a shame to put tens of billions of dollars into a bunch of stuff that doesn't go anywhere and miss the monetary revolution of the internet age. And so we've got to poke at that, challenge assumptions. And so a couple of highlights, and by the way, you can download this research for free on the TVP website. First, 2022 was, in terms of crypto spot markets, down bad. If you look at crypto venture apart from Bitcoin, it was roughly flat. It was up about 1%. Bitcoin native as a category was actually a breakout category in 2022. It was up about 53%. And so I think that's really exciting. I think one of the things we saw in earlier waves with Bitcoin native, before there was even sufficient deal flow to give rise to a dedicated mandate, was that founders wanted aligned capital, not just any old capital that get the Bitcoin component. And for us, we wanted to say, okay, in bear markets, these companies can't be facing an existential threat. And so this proved that out. There was money for Bitcoin-focused founders during this bear cycle. And so anyway, appreciate the call out. And I think you have any thoughts on that? Or?
Yeah, it's a great report too. I think it was published around in April versus crypto versus Bitcoin. And we always talk about Bitcoin dominance, right? It's been a thing that people have talked about forever. The Bitcoin dominance of venture capital referenced in the report, it's about 40% compared to crypto. And over this 2022, which was a terrible year, the total dollars in Bitcoin VC was up maybe almost 15% or so. And the total number of companies was up maybe 70%, right? So there's more going on. And there were some other interesting figures in there, like wrapped Bitcoin, right? Like nobody in this room has that garbage. But the way that that's kind of fallen apart versus, the Lightning Network. And, the crypto VCs are definitely looking at Bitcoin again. I do a lot of calls with them. Somebody on the other side of the world who has a crypto fund, they want to know about Bitcoin, and they say things like, we weren't watching it, but now it's a part of the narrative. Now we're looking at it. It's sad that the reason they're looking at it is because, of recursive inscriptions and ordinals and kind of everything else. But it's nice that there's a renewed enthusiasm with the crypto VCs who are finally looking at it. The things like, we were interested in crypto, but now we're looking more at Bitcoin only. We're interested more in Bitcoin only. I mean, I've been hearing that a lot. So it's good to get some of those crypto VCs in. They're so focused on tokens and exits and like all of this sort of things that we look at as nonsense. But in a terrible market, which now is probably about as bad as it could possibly be, not to be negative, but that is the reality. It's great that the Bitcoin VC funding, basically every KPI and metric you can look at is up year over year.
Yeah, interesting. One last little data point. You flagged the market dominance for Bitcoin. Low 40s percentile, and that's inclusive. If you look for every dollar pegged asset, every euro pegged asset on any one of these smart contract platforms, so that's being as conservative as you can. It's still a very high number. 1.31% was the grand total of the venture dollars that went to Bitcoin native companies. So there is a very clear gap and opportunity to grow this over the coming years.
Right, and so there's so much opportunity, and as Mike just mentioned, there are a lot of companies now that are looking for funding, and let's talk a little bit about that. So, as you said, it's a quote-unquote, let's say the market is down from the high, and so there's a lot of people, but on the upside then, as an investor, potentially maybe the valuations are a little more, let's say, reasonable for you to invest in rather than you feel like you're having to invest at a very high multiple in some of the companies. Any comments there?
Yeah, look, TVP cares about price. I think we got to get it right. It can be attractive when someone's like talking some big numbers in terms of dollars raised that ends up implying a valuation that's out of step. And I say, look, focus on dilution. What amount of capital, what's the quantum of capital you need to operate for the next 18 to 24 months? And think about it from a dilution standpoint. Don't get hung up on these vanity metrics, because there is cyclicality, and there always has been and there always will be across the cycle. And so think long term, don't get hung up on the vanity metrics, and demonstrate some very clear progress. Understand like the old adage for it's very similar to what they teach you when you're giving presentations. You tell them what you're going to tell them, then you tell them what you told them. That's like the classic, like, do it that way. It's very similar with working with investors, and just set some expectations of what the milestones are, go back, say, like, we did that, actually we did these other two things, and demonstrate some track record and build a partnership with your capital partners along the way that you're building companies. And you don't have to get stuck in this, right? Because, by the way, if you're way outside on a valuation, no one wants to do down rounds. You can be faced with an avoidable existential moment later in the company's life. So it really is about dilution at the end of the day and what's necessary to get what you need to build a company.
So Stefan's being nice, saying, we're off the highs, but the fact of the matter is it's very hard. It's impossible. Everyone is exhausted. Okay, this is just my opinion. I'm not speaking for Christopher, but everyone's exhausted. Everyone is just asking everyone else for money. I mean, the LPs have to be exhausted from being pitched constantly, because a lot of this Bitcoin is an emerging VC niche area, right? A lot of those funds were deployed and raised around the same period, right? So you've got multiple Bitcoin VCs that are raising or preparing to raise their next fund, right? So they're pitching LPs, all right? And they're also pitching the angel investors. And then you've got every company that's raising money right now. Every company is raising money, so they're pitching the angels, and everyone is just asking everyone for money all the time. Half of this room is probably asking the other half for money in the back out there. But I mean, and you're the LP and you have cash and you're getting paid 5% not to invest. And that's not a bad place to be either. Okay, we had a frothy time. The everything oversubscribed, that's done. I mean, that's done. There's a few rounds that have happened recently where, they've filled, 7+ figures, and that's great. But for the most part, founder goes out. Maybe they're going to raise this amount of money. They raise 50% to 70%, and they get tired. They get exhausted because you can only do one thing, right? You're either raising funds or you're building your company. And then you're tired of raising. You got 70% of the way there, and you go into this kind of passive fundraising mode where you answer the phone, or maybe you take the incoming calls for the rest of it, but you go back to building, and most of the rounds are in that place right now, and I like calm and orderly. Before 2 years ago, year and a half ago, you circle back with a company that you plan to invest in. 2 weeks later, we'll see you at the next round, and you get shut out, and that has not happened in a while. So it's which also leads, blood on the streets and everything that they say. This is like the best time to invest. This is the best time to become an LP and invest in Bitcoin venture capital, or to do angel investing, or one of the syndicates, or get started with supporting these companies, because the valuations have contracted, along with egos and expectations, and profitability matters, right? It's not just let's raise $2 million to buy 20 months of runway. It's milestone-based financing. People are really looking at the next step, cutting their burn and getting to a cash flow break-even, which should have mattered the whole time, right? But in a defensive high interest rate environment, those things matter more than burning and growing. So I like orderly and calm markets. This is like, tumbleweeds blowing around and stuff like that. It's pretty tough out there. So if anyone's thinking about investing in Bitcoin startups, now would be a great time to get rolling.
I might have a slightly,
Uh-oh, shots fired.
Shots fired. Yeah, look, I don't want to leave the impression that there's actual tumbleweeds floating around. Like, deals are getting done. There's an up round right now, and it's happening in flight. Over the last few weeks, I'm working on 2 deals, and both of them are going to be marks up, and certainly one's going to be oversubscribed. So anyway, it's a good time. It's a consistent time. This is a moment, though, where speculation gets rationalized. And that's good. That's a healthy thing. That's how markets are supposed to work. Of course, correct. It's a forcing function. That's why you don't raise more money than you need, because it's very easy for that cash to just go right out the door. It's not a forcing function on discipline, and those kinds of things ultimately always matter, even if it feels like momentarily they don't. So it's an exciting time. But I think, to be fair, sure, the valuations are ever more attractive at the moment. And but I will say this: we've been around for a long time, and I think you would probably agree, if this were 2019, 4 years ago, like, there wouldn't be hundreds of people sitting in a conference. Like, things are a step function stronger, even in what some might describe as a bear market. I am an eternal bull, and I'm here for it.
Yeah, that's a great comment about the difference between 2019 and today, here in 2023, with so much more advancement in education and the community and the businesses, of course, and the ecosystem and the people who are doing investing as well at all levels, whether that's venture capitalists, the LPs who are contributing funds to them, the angel investors in the space. It's all growing. An interesting area that I find interesting, and I'm curious to hear what you guys think. This is a sentiment I sometimes see in social media amongst Bitcoiners, where maybe it's a slight confusion of the open source ethos. There's almost this kind of everything should be free kind of idea. And that doesn't necessarily jive well for, let's say,
fiat thinking, isn't it?
Right. It's
zero marginal cost.
Right, because people have this idea that, the product should be free as well, open source, right? It's like, wait a minute, we need there to be profitable businesses in order for those businesses to be sustainable And then obviously you guys as investors are looking for profitable businesses. So do you have any comment on that? Is that a sentiment in the community? Is it a mismanaged expectation? What do you put it down to?
Look, we've been strong supporters longitudinally for free and open source software contributions from our companies. Famously in this room, I'm certain, Caravan is a key component to multi-party multi-sig, or as Unchained coined it, collaborative custody. When it touches on things like security, you want as many advanced, smart eyes in the world looking at that. It's a give to the community. It's a foundation for someone else to actually build in a competitive way. But ultimately, if you feel like the view is that the world is better, it's more secure when people work together with multiple keys to secure an asset, then that's actually a great trade, and you can focus on the brand and customer relationship side and the sticky parts of the long-term business. So we absolutely support that. It's not always the best case, and we certainly don't invest from like an altruistic standpoint. We don't do grants. I think there's actually a very clear and strong place for that, by the way. We see that with core contributors getting grants. I think there's another, if we're honest, there's a glaring gap that we should actually talk about as a community. How can we pool capital that's not a fit for businesses, business building, company building, but nevertheless, we're still behind the 8 ball a little bit, if we're honest. They've done so much token printing elsewhere. They've funded developer tooling and a lot of things that are definitely not a venture backable kind of asset, but nevertheless make it very quick, very rapid to build an application and deploy it. We're coming to a time where we need more of that, and so there's actually a space there. It's not venture capital, but we certainly could help put those groups of people together that want to contribute to something that's not necessarily in the VC lane, which is only actually a small part of even the businesses of the world.
So you think about open source software and you think about some of these making it profitable, right? I think the biggest one is probably Linux, Red Hat systems. I think Microsoft acquired it for $30 or more billion. That's an example of open source that is very profitable. You have MongoDB, you have things like Docker, where it might be open source, but there's enterprise solutions and other ways to make wildly profitable big businesses. So the misconception that open source means free and open source means no money, it's all in how you scale that business. At the same time, there's tons of grants, just like Christopher said. There's so many people being supported for their work, and there's only going to be more of that.
Yeah.
So one other area that's sort of not exactly Bitcoin, but sort of tangential is Nostra, right? So there's a lot of Bitcoin people interested in Nostra. Is that something interesting to you guys, or do you think maybe it's early yet, or there's not enough users there? Do you have any thoughts?
Look, I think Nostra is cool as shit. I do feel like it is extremely early days. Most people think in the box of social media. I really kind of see Nostr as a communications coordination function that can enable maybe even distribution. We have companies that are playing with that to understand how their distribution models might ultimately play out. One of the things that's great with something that I might describe as sort of Bitcoin adjacent, like a Nostr, is the way that these patterns evolve over multiple decades is that there'll be an experiment, maybe it's an open source experiment, and there'll be some key learning, that evolves and sticks with it. This is, and I would say if there's one thing that we've learned about Nostr, you mentioned, zero. We were talking about zero marginal cost and altruism and what that means. For me, if I look at Nostr versus a like on Facebook or thumbs up on Twitter, if you think about it, that's really pretty fiat like zero marginal cost kind of activity. You're like, yeah, hey, and it invites like, let me try to get as many of those from an ego perspective as possible. But going from zero actual value expression other than the time to some value is actually many, many, many step functions greater and more powerful. And if you look at the Zap, it feels so incredible. There's a way to express value for something, some value that was given in this value for value thesis, which is really, it's a hypothesis today. I think that's what we're saying. And so if you look at a Nostr, whether or not in 10 years Nostr has survived or evolved, I can't say, but what I can say is that design primitive of the actual value expression through a Zap or on a company in our portfolio like a Wavelake, a Boost, same primitive, different name, to be able to give to a creator directly a value. So creator, fan, artist fan, writer, reader, that is absolutely novel. And I would say the market has said, absolutely. I find myself being a little too giving on Wavelake. I'm sprinkling sats all over these artists. It's the funnest thing in the world. It's super validated. If you haven't tried it, you absolutely should. But anyway, so I think whether Nostr lives or dies, I don't know, but I do know that we are learning some very important things, and that value for value expression, and in particular in like a Zap context, is highly validated by the market.
Nostr and venture capital, okay? So we're 14 years almost into Bitcoin, and no one is using Bitcoin, right? Look at how slow this adoption has happened, right? We're all waiting. We all know hyper-Bitcoinization in the future and everything. We're 14 years, okay? And it's hard enough to invest in just one thing. It's hard enough to just specialize in investing in Bitcoin stuff. And you look at Nostr, and maybe it's 10,000 daily active users, right? If you got $3 or $10 even from every one of those daily active users at this point in time, you still wouldn't have a big business in comparison with what the Bitcoin startups are going for. And actually, the biggest mistake that I see a lot of our founders make, or that I feel they're making, is by saying, okay, we're going to spend this next month, we're going to integrate Nostr. We're going to do this NIP05, we're going to put all these resources in. It's like, for who? For who? You got a billion things trying to kill you every day. You have your core business that you're trying to do, whatever you're trying to do. Now, maybe it's integral to a company like Wavelake or some of these other startups, right, that are really focusing on it. But if you're spending the next month to integrate Nostr into your Bitcoin startup for 10 people, that it really isn't even going to add to your bottom line and your revenue. I just think that there's better resources that you can deploy and better focus, right? It's kind of a distraction. It's kind of a distraction at this point. Facebook had 1 million dailies after a year of launching. Is Nostr going to have that? I don't know. Is it cool as shit? Hell yeah. Right? It's super cool. But as far as investing in it, there really isn't even too much to invest in, there's Primal did a round. That was probably the one that we all missed, right? All the Bitcoin VCs, maybe we have Primal envy. But, that was a fairly big round, and I know Max Webster is really interested in it the most. But it's just really hard to just invest in Bitcoin startups, and to start thinking about it. However, when some dedicated capital goes into Nostr, I'm 100% convinced that it will be a Bitcoin VC who's really spearheading that.
Yeah. Fantastic. Well, I think that's just about all we've got time for. So I guess let's close out here with, Bitcoin companies, many of them need investment. So it's a great thing that there are Bitcoin investors who are willing to invest in those companies. So thank you to Christopher and Mike. Everyone, please put your hands together for them and their insights. Thank you.
Welcome, the fire starter. Watch this.
How's everybody doing? Welcome to the second Pacific Bitcoin. It's been such a great time being here with you guys yesterday and today. Tons of great stuff coming today. I'm really excited for this schedule. So my name is Steven Lupka, and I run Swan's private wealth team, and I also oversee Swan Business. It's been an amazing experience watching just the change in the sorts of people we're talking to over the last 3 years, and seeing who is interested in holding Bitcoin on their balance sheet, what sort of entrepreneurs are setting up Swan accounts, setting up trust accounts, setting up these various things. And there's really been a striking shift in not just the education and how much these people understand Bitcoin and what they're doing with their balance sheet, their corporate treasury, It's come so far in a few years, and it's just remarkable how the world is, I think, waking up to Bitcoin more. So I wanted to share a little bit about Swan Business with you guys. We have the absolute fastest place to onboard LLCs, S-Corps, C-Corps, any sort of business entity you control. If you want to get Bitcoin on your balance sheet, or we even have something called the Bitcoin Benefit Program. So this is a way to show your employees some love and give them a little bit of Bitcoin every month so they can start learning about Bitcoin. Comes with free education. And it's a really nice perk to start a conversation around Bitcoin in your company. Swan takes care of all of it. But if you have you have cash on your balance sheet that you'd like to have some of that in Bitcoin, we're the fastest place to set up an account. It can be done in as little as 2 to 3 days. A lot of our competitors, you're looking at months. We make it super easy. It comes with full Swan support. You can always talk to somebody. You can always get on the phone with real humans on the private or the business team that'll help take care of everything. And so it's a great way to simplify getting that exposure, make it easy, and start conversations, in your company about Bitcoin. And it also applies for trusts and single member LLCs and anything you're looking to do. And, I think seeing some level of corporate adoption and seeing founders and entrepreneurs starting this conversation in their organizations, it's a key part of Bitcoin adoption. It's something where, you work with these people every day and you're running a business, and a business is an economic machine, right? You're doing something. That something's probably not Bitcoin, but you're trying to create a product, you're trying to make money, you're trying to manage supply chains, your workforce. And it's something we've seen is that Bitcoin can be a bit of a superpower for founders and for businesses. I was actually talking with Peter McCormick the other day, and you guys probably all know that he owns Real Bedford. It's a soccer team in England, and they're the Bitcoin soccer team. And even though Bitcoin doesn't on the surface have anything to do with soccer, he's found that just having that Bitcoin identity attached to his business, which is a soccer team, has sparked so many conversations with sponsors, with fans, with just the people, employees, with the people he's interacting with. Bitcoin has given a way to just attract people who love Bitcoin. And those people are out there. It's like something I think I've seen in life is it's better to have like a small number of people who absolutely love what you're doing than for everyone to feel okay about you. And having some sort of Bitcoin adoption, I've seen for entrepreneurs, you get those super fans. So if you're looking to look into this, to have a conversation with the business team, just come over to the website, click on business. You can set up an actual phone call with knowledgeable experts from Swan. We hold your hand, we take care of everything. And that's just not just an onboarding, it's along the way. So as long as you're with us, you get the absolute best service in this industry. We make it easy, we make it quick, we make it secure. So start those conversations. If you're a founder, if you're an entrepreneur, if you're an operator, and you love Bitcoin, I mean, you're here, you must love Bitcoin. Start that conversation in your company. It's just another way that adoption takes place. So I hope you guys enjoy the rest of the scheduling this day. There's a ton of talks I am really excited about, and great to see you all. Have a great Pacific Bitcoin.
Self-custody is easy. Use Jade how you want. Access the Liquid network. Use Jade fully air-gapped. Blind Oracle pin protection. Ultra-random key generation. Seed QR support. BIP85 support for Uncle Jim's. It's fully open source. The only Bitcoin hardware wallet you'll ever need. Self-custody is easy.
Keep it on the level. Keep it on the level. Keep it on the level. I'm climbing up the. Keep it on the level. Keep it on the level. I'm climbing up the ladder while you in need of a shovel.
I can do this all day, I can do this all night.
I could do this all day, I could do this all night.
I could do this all day, I could do this all night, all month, all year, for my whole entire life. Who you know got a home, but seen to live on the road, looking like a black gypsy in a caravan of bros.
All right, and we're back. I hope you're enjoying. I hope you're getting some valuable insights out of the sessions today. Before we move on, a quick shout out for our sponsor, CleanSpark. They are responsibly developing infrastructure for Bitcoin. They invest in communities, sourcing wind, solar, nuclear, and hydro. And now, next up is going to be a talk about the Satoshi Papers, the political economy after Bitcoin. So the speaker for this, you already know her, but for those of you who weren't here, Natalie Smolensky is joining us. She is the founder of the Texas Bitcoin Foundation, and she is also Senior Fellow of Bitcoin Policy Institute. Please welcome Natalie.
What's up? Hey, hey. Pacific Bitcoin, good to see you. Thank you so much for welcoming me here. Today, I am really excited to give you guys a sneak peek of a project that I've been working on for a while, along with my colleagues at the Texas Bitcoin Foundation. So a little bit about us. We are a 501c3. We are a charity organization dedicated to research and education about Bitcoin and political economy. So I've led a number of lives. In the recent past, I co-founded a startup that built some verification technologies on Bitcoin, exited that startup in 2020. We were the first Bitcoin exit in the world. And that really took me down, an entrepreneurial path. But before I started on that path, I was actually an anthropologist and a historian. And I'm particularly interested in questions of sovereignty, governance, and value. So I saw this time that we're living through together as an opportunity to think more deeply about the relationship between state and society and why Bitcoin matters. So after I exited my company, I worked with some of my friends and colleagues to found the Texas Blockchain Council. We were a lobbying organization representing the Bitcoin industry in Texas. And, we had some successes. We got some bills passed. We're influencing policymakers. But the entire time, the bigger question kind of hanging in the background was, why does this matter? Why does decentralized money matter? Why does Bitcoin matter? Why does censorship resistance matter? And so I found that, I kept having to go upstream from policy discussions, from tactics, which is the actual sausage making of the work of government, to the ideas behind it, and why sometimes legislation is not the answer. More law is not the answer. In fact, it can get in the way of some of the things we're trying to become as a people. So I saw the opportunity to create the Texas Bitcoin Foundation to begin answering some of these questions. And so the Satoshi Papers is the name of our first book, scheduled to be published in 2024, next year. And we have some pretty awesome contributors and thinking that's gone into this work. So a lot of people ask, why do we need Bitcoin? We already have money. What is this new form of money supposedly doing for us that our current money cannot? So this is where beginning to think through the relationship between money and the state, the relationship between state and society, and then relations between states, international relations, geopolitical balance of power, becomes really important. I also want to thank my colleagues from the Bitcoin Policy Institute, Grant McCarty, David Zell, and their team. They've generously supported our work at the foundation and the Satoshi Papers. So just a quick shout out to them. Our contributors. So you'll notice actually a number of our authors are themselves fellows at the BPI, including Dr. Sarah Krebs, Andrew Bailey, Craig Warmke, and myself. We also have Tor DeMeester, who's contributing. He sits on the board of the Texas Bitcoin Foundation. So it's really an all-star lineup. And now I want to tell you a little bit about my specific contribution. So I'm editing the book. I'm also writing a piece for it. And I thought I'd give you guys a little sneak peek of what that's about. So I don't know if y'all remember, but I've been on Bitcoin Twitter for a while. And back in 2018, there was a kind of standoff debate between, on the one hand, anthropologist David Graeber, and on the other hand, Nick Szabo, about what money is. And this debate was instigated by journalist Michael Casey, who quote tweeted Vitalik and said, you know, all you crypto gold bugs need to pay attention to what Vitalik is saying here, because money, in fact, emerged as a medium of exchange before it was ever a store of value. And Szabo replied, well, that seems to fly in the face of a lot of anthropological evidence. And so then the question became, well, so do you disagree with anthropologist David Graeber's theory of money as originating in credit? And this prompted a whole back and forth. So as an anthropologist, I thought this was very interesting, and it got me digging into anthropological theories of money and how anthropologists have, in fact, thought of money. And I discovered, somewhat predictably, but also somewhat to my dismay, that within the discipline of cultural anthropology, there's sort of this pervasive sense that credit theories of money have won. And that state theories of money, you know, that we didn't really have true money until states started minting coins. That is sort of the disciplinary consensus. And in fact, people invoke this as what anthropologists believe. And so I was like, wait a minute, I'm an anthropologist. I don't believe that. Someone needs to write about it. So that is exactly what I propose to do in my contribution. And in order to do this, you know, I had to go back to the debates about money that were really formative for not just anthropologists, but for economists and sociologists and other social scientists. So in the early 20th century, there was this debate between theorists of money who, on the one hand, posited that money is a creature of law, and on the other, who suggested money is, in fact, a emergent, bottom-up phenomenon that crystallizes in any market. And, you know, these are just a few examples. I'm sure many of you are familiar with at least Mr. von Mises and Carl Menger over there. But, you know, this debate was significant because, in fact, it fractured the social sciences and created significant policy implications, since, you know, in effect, the positions of power that Keynes was able to acquire in his life ensured that the state theory of money sort of became dominant, and the dominantly accepted orthodoxy. Well, I think that calls for a revision. And so what I'm proposing in my paper is that we don't actually have to decide whether money is credit or money is a commodity. In fact, these are two different social technologies. We get confused because they're both called money. And so it's easy to want to collapse them into the same thing. But in fact, credit money and commodity money solve very different social problems. Specifically, credit money is tailor-made to facilitate exchange under conditions of high trust. And so if you are in a high trust situation, extending credit is no problem. In fact, it's much easier than bringing a commodity medium of exchange into the equation. But under conditions where trust breaks down or never existed to begin with, for example, trade with strangers, trade with enemies, or extremely high stakes social agreements, like, for example, a business venture or a marriage or other forms of contract around transmission of property. At that point, people generally want to ratchet up the friction because the outcome of the exchange is so significant and momentous, both for themselves as individuals and for the wider social circles that they are a part of. And so what I'm suggesting is that the 20th century was sort of the apex of the credit theory of money and the state theory of money converging together. The state was able to use its monopoly, ostensible, claimed monopoly on violence to dictate what money is to a degree unprecedented in human history. States have been issuing money for thousands and thousands of years, but never before have they had such a strong monopoly on the issuance and circulation of money. But we are beginning to see the limitations of the power of fiat. And when I say fiat, I mean law. So, of course, fiat is Latin for let it be done. It is the will of the sovereign. The state theory of money suggests that money is a creature of law. And so wherever the rule of law obtains, whatever the state says goes. Well, what we are seeing in real time is the breakdown to the extent that fiat can in fact dictate value. And not coincidentally at all, we see emerging alongside it a new but actually very old type of money, commodity money, except now it's digital commodity money. And that's also something that throws people off. You know, people get really concerned about the form factor of the money. Well, it's digital. How can it be a commodity? Well, the commodity nature of Bitcoin is in the process of self-verification, the cost of verification that the proof of work protocol is achieving. And so what you're paying for, in effect, is the work of verification. That is valuable in and of itself, even though it's not a tangible piece of matter that you can hold on to. And so I think this intervention that money is, that in effect we always, as human beings, exist using two types of money, credit money and commodity money, for different things. I think that's actually a really important, although seemingly very simple and straightforward observation to make. The other thing that the question of money touches on is the relationship between social institutions and individuals. So, you know, this here is just an exemplary list of a few of the social theorists that I'm drawing on, you know, going back to the founder of the discipline of sociology, Emil Durkheim, Marcel Mauss, arguably the most influential anthropologist ever to live, Ronald Coase, of course, well-known economist, Paul Bohannon, anthropologist, economic anthropologist, and Douglas North, economist who sort of pioneered the new institutionalism in economics. These people are all concerned with how human communities solve problems at scale. So what is an institution? When we talk about social institutions, what do we mean? Well, North proposed that an institution is a constraint that human beings agree to in order to solve a social problem. So a constraint can be something like a norm, a value that we all share together. Like, this is good and this is bad. We agree on these things and we direct our behavior in light of those constraints. Constraints can also be formal rules. They can be laws. They can literally be violence. But all human social institutions solve problems by decreasing the costs of cooperation and increasing the costs of defection. And so this is how human beings cooperate, actually, is they create these constraints that then get institutionalized over time. That is important because when we talk about money, we're talking about an institution. You can use any type of money you want in a transaction, but your counterparty's acceptance of that as a means of payment is ultimately what's going to determine whether or not you are able to, in fact, facilitate exchange using that means. And so, the final contribution that my paper makes is introducing a distinction between payment and settlement. So, I can pay you, but if you don't accept that payment as settling the debt that I owe you, then final settlement has not occurred. And it's this notion of settlement that has been under-theorized in the social sciences. So like the Bank for International Settlement, as I was alluding to earlier today, defines it entirely as a creature of law. Well, it sounds a lot like the state theory of money. And indeed it is. It's positing that both money and payment and settlement are all, in the end, legal, within the ambit or jurisdiction of law to decide. But in fact, final settlement is a psychological process in which the creditor accepts payment of the debt and agrees that the debt has been settled. And it's that psychological process that no state, no human institution, whether it's the family or the market or the firm or any other, they do not have final control over that element of the psychological ledger. And so this leads to really interesting and sometimes terrible social outcomes, like the blood feud, for example. How do you repay a debt of a life? If a person is murdered, how can you ever repay their kin? Well, you really can't. There's an inestimable value to a human life. And so what happens is you get this vicious cycle of a ledger, a kind of tit-for-tat violence, where the ledger entries recursively accelerate and can never be finally settled. And so this is where some of the earliest manifestations of the state take form. Their purpose is to simply end the blood feud, to end the cycle of vengeance between individuals and families. But that final settlement, that sort of imposition on final settlement, is always uncertain. At any time, the creditor can decide that the debt has not been paid. And so my point in saying all this is that the rule of law is always resting more fundamentally upon the consensus of the community of law that the overall social ledger is characterized by a base fairness. Doesn't mean perfect equality, doesn't mean perfect fairness or perfect justice, whatever that might mean. But that generally, on the whole, there is the possibility of justice for those who have been wronged. When the community of law begins to lose faith in the structures of law as the mechanisms that deliver that justice, at that point, the law loses its ability to enforce final settlement. and may also lose its ability to define what money is. And so that's the Satoshi Papers, my friends. I'm going to ask for your support. The Texas Bitcoin Foundation is a 501c3. We're a charity. We operate on a shoestring budget. This is entirely a labor of love for me. I make no money from it. I have a full-time software job that I work, and not only do I not make money from this, I actually give my own money to support it. So if you would be so kind, we would love to have any donations you could potentially give, and we look forward to delivering for you a fabulous book next year. Thank you.
Got something for your eardrums. Check it out. I got the S-O-U-L flows that groove well. Rhymes on time like the afternoon school bell. You listen when the teacher's talking, beat got the speakers knocking, top pedigree MC. Speaking on it, put the pen to the paper, then begin to caper. Drop gems in your ear and disappear like a vapor. The dance floor shaker, making bread like a baker. Invest my money, living sunny in Jamaica. Don't make a mistake, I'm a true rhyme sayer, but I gotta feed the family, so I'm canny with the paper. Sharp tongue slice the drum just like a razor, and let the bass drip, taste it, it's something major. Since the days of the pager to the days of the cell phones, zones that I roam are known to swell domes. About time for the chorus, so I'm out of here for now. It's surreal and Fidel in your ear canal.
Got something for your eardrums.
All right. Well, what a great talk. So now, just a shout out for the sponsor, one of the sponsors, Orange Pill app, the official app for Pacific Bitcoin. You can find that in the app stores. Now, next up, we have a panel. It's the answer to life, the universe, and everything. And I believe we had, for those of you who were here last year, we had a similar panel on this last year. So I'm looking forward to hearing what the panelists have to say. So let me just quickly introduce our speakers and panelists. So Brandon Quidham, he is the head of marketing at Swan. He's also the author of the Mycelium of Money. We also have Pierre Rachard. He is the VP of research at Riot, and he's also a prolific author and speaker in the space. And also joining them will be Toma as the moderator, and he is the managing editor of Swan. So please welcome our guests for this panel.
Okay, this thing is working. Let's dive right in. We've only got 25 minutes, and we got to answer the question to life, the universe, and everything. Is Bitcoin the answer? If so, what is the question? So that's what we're going to tackle in this panel. I'll just dive right in. I'll start the first question with you, Brandon. We're going to contemplate a few aspects of the future of Bitcoin. And although the rules of Bitcoin don't change, how we play at Bitcoin has been under constant change. Mining, for example, started on CPUs, it moved to GPUs, FPGUs, then little ASICs, then bigger ASICs, then industrial scale ASIC operations. And it now responds to issues like demand response and CO2 sequestering. How do you see the incentives of Bitcoin mining playing out well into the future, and how far out do you care to speculate?
Absolutely. I think the first obvious thing here is that Bitcoin miners and energy infrastructure are going to merge together. They play a symbiotic relationship with each other, so I think it's good for the grid. It makes sense for miners seeking low-cost power. And I think the next thing for miners, let's say 10 years out, roughly, I believe that almost no miners will be competitive unless they have an ancillary revenue stream. Maybe that's selling energy back to the grid in a demand response setting. Maybe it's capturing waste heat or any number of things that we haven't thought about yet. But I think that's mandatory, otherwise you won't be competitive. The second thing when I look far out in the future is more on the energy track. And I see Bitcoin miners playing a role in bootstrapping net new energy assets all around the globe. And the miners bring, essentially they're the buyer of first resort or the anchor tenant in a potential energy project. And that anchor tenant is the difference between getting an energy project off the ground or having it die on the vine. And so that's a very important thing because energy is the master commodity. And all human flourishing, all industry is downstream of energy. And so more is better. And so the Bitcoin miners will produce more energy at a lower cost, more widely distributed across the planet. One cool example is a company called Gridless, who's solving the last mile energy problem in Africa. Essentially, the power producers, they can't bring power to the rural areas because it's not economical. So all the villages suffer without energy. Enter Gridless. They create microgrids, usually on remote hydro. And the Bitcoin miners purchase all that power from day one, so the energy investment makes sense. And simultaneous, the local people around that energy asset can acquire it at low cost. And it might not sound like much for people in this room, but having electricity after dark to charge your phone, to teach your daughter online, to just have enough cell phone minutes or power to call your family on Sunday, that matters to folks in that environment. So a little goes a long way there. And if we look far, far out in the future, if we play out that same incentive, I could see humans bootstrapping energy assets in the middle of nowhere. Let's say we drop a small modular nuclear reactor somewhere. And around that nuclear reactor, now that we have low-cost energy, you can build industry, you can have humans living around that. You can essentially build startup cities in territories that maybe aren't as popular around the world. And that'll give us an experimentation phase to try out new forms of government, new forms of human organization.
Did you want to add your thoughts on this, Pierre?
So I agree with a lot of that. I think that when I look back at when I first started learning about Bitcoin, I thought that Bitcoin mining would have to take up 51% of all the electricity in the world in order for Bitcoin to be secure. So I was, really wrong about that. I've been wrong about a lot of things. The next thing I was wrong about was I thought that transaction fees would have to go up, and that we need to limit the size of blocks in order for transaction fees to go up. And today, if we look at kind of the backlog of transactions waiting to get into the next block, there isn't that fee pressure that has materialized. Some say it will happen, but I think that the reason I was wrong about that prediction is because Bitcoin's technology, the Bitcoin protocol, is going to continue to have improvements that increase the efficiency with which we use Bitcoin. And so that will always be at odds with driving up transaction fees on Bitcoin. So now, updating kind of the prediction, I think that at the end of the day, it really is going to be about what is the value of Bitcoin. Today, we measure that in dollar terms, but we can just think about it in terms of purchasing power relative to the rest of the economy. And that being on one side, where we're pretty bullish, right? We think the value of Bitcoin is going to increase. On the other hand, for Bitcoin miners, every 4 years worth of blocks, every 210,000 blocks, there's a halving. And so their top line BTC revenue gets cut in half. So the key question is, what's going to matter more? Is it going to be the increase in value, or is it going to be the halving? I think in the medium term, the increase in Bitcoin's value is going to continue to outpace the halvings. And it has historically, and I think that'll continue in the medium term. I think in the long term, that will not be the case. Eventually, Bitcoin will reach some 100% adoption, however we want to define that. I think that we're pretty far from that today. I think we're at less than 1% adoption. And so when Bitcoin's at 100% adoption, its value is going to be increasing at the same pace as the overall growth of the economy. in terms of its Bitcoin's purchasing power. And these halvings, the last halving will be in the year 2140, and 0 new Bitcoin will be getting added to the ledger. It'll purely be about the transaction fees. And if transaction fees are, continue to reflect kind of the steady state we've been in over the past 10 years of being low, not 0, but being low compared to what people's expectations might be, I think that that will actually represent a sizable Bitcoin mining industry because the purchasing power of that transaction fee revenue will still be substantial. So it raises a question of how should we be communicating about Bitcoin's impact on the energy sector, where in the medium term we do think that it's going to dramatically increase, but in the long term it's not going to be 51% of all electricity use, and it's not going to be some kind of catastrophic ecological disaster that the critics really want to highlight. And we can balance that with the question about the security budget, but I'll let Vijay go next.
Yeah, I should say to start off that I'm not an expert in mining, but the thing I find absolutely fascinating is that Bitcoin is becoming critical to the energy grid. And in the places which have realized this, it is critical to the energy grid. I think the narrative on Bitcoin mining as being environmentally harmful is about to flip, and I think it'll flip big time, and I think it'll flip in the next year. It's not just because BlackRock is coming in. I think it's because Bitcoin is obviously good at doing something that if you care about emissions, you should care about, which is capturing flared gas. And I was speaking to the CEO of a small startup called Giga Energy, and they're going around capturing flared methane. And methane is incredibly harmful to the environment. It's 80 times more harmful than CO2. And with Bitcoin, you can now go capture that energy rather than flaring it, which the rate at which you're destroying the methane is much less than if you capture it for Bitcoin mining. So there is an underlying reality here that Bitcoin will be a tool for helping with emissions, and the narrative, just by the fact that these big companies are coming in and talking about Bitcoin as being helpful to the environment, is going to flip and match that underlying reality of miners are going out there and capturing these emissions so they're not going up into the atmosphere.
Yeah, it's amazing that we're already seeing the Bitcoin fixes this. Bitcoin fixing energy production, fixing the environmental consequences of energy production, that these aren't just memes, that they connect to reality. Let's get a little deeper then, as we go into the life of the universe and everything. A couple of days ago, there was a separate mining forum, and Max Kaiser had a few things to say about mining. And one of the things he said, which I found really interesting, he said, people buy gold because they're full of fear. People buy Bitcoin because they're full of faith. And Bitcoin seems to be drawing some kind of connection between faith, truth, and optimism in something that allows you to verify essentially every single aspect of it, not requiring any trust. What is the role of faith in Bitcoin and among Bitcoiners? Pierre, why don't you dive into that first?
Yeah, so I think that first we tend to pit faith versus reason as kind of a dichotomy. And I think that's actually not the right dichotomy. I think that the dichotomy is really faith versus nihilism and apathy. And so I actually do think that faith and reason are simpatico. They go hand in hand. And that faith allows us to really, it guides us towards what we should be reasoning about. And even here today, the fact that we're all coming together to talk about Bitcoin, I think that speaks to the faith that people have in Bitcoin, in the sense that it brings folks together beyond just being a technology, being a financial investment. It really is perceived by the Bitcoin community as being a transformative power in the world for the good. And I think that fundamentally is about faith. And we can then, that gives us the motivation to want to understand Bitcoin and go down the rabbit hole. But ultimately, it starts with a firm belief that Bitcoin is good and that it's going to be good for civilization, for humanity as a whole.
Vijay, did you want to add something to this?
Yeah, I like what Pierre said, and I would say that there is not a dichotomy between faith and reason. I would say it's faith based in reason. And I would also say that this is slightly tangential, but Bitcoin and money in general is an intersubjective reality. It's something that has power only if we all believe it has power. But it's not like we just believe it for no reason. Bitcoin has these fundamental advantages as money. So we have faith in Bitcoin, but it's based in reason. And so I do think, I totally agree with Pierre that those two things can be strongly connected.
Yeah, and the only thing I would add is if we look out in society today, I think we're at about a 90-year low in trust of our institutions. And so I think there's a premium on honesty and transparency, and Bitcoin obviously embodies those values. And so from a faith perspective, we're essentially shifting our faith away from a small group of old white guys in a room setting monetary policy and shifting that over to math, cryptography, and some sort of a public infrastructure protocol that is Bitcoin. And I think that gives us hope and optimism, especially for young people where it's severely lacking today. And as a species, we're best off when we're optimistic about the future, we're thinking long term, and we can invest in the future with large capital projects.
Great, great. Let's talk about freedom. We keep hearing that Bitcoin is freedom, or that Bitcoin can free us. What do you think freedom truly is? And beyond a superficial connection to being permissionless, how is Bitcoin really affecting our freedom? Vijay, do you want to talk about this?
So my view of freedom, I think, is based in the American tradition, and I think freedom is ultimately the freedom to escape. And the Puritans escaped the king, the Quakers escaped the Puritans, the Mormons escaped the Quakers. People always had the freedom in America to leave and find a place that matched their values. I think that's something that Bitcoin allows more than ever is freedom to leave, because it gives you the power to take that which is most important in your life, which is the fruits of your labor, what you've built up over time through your hard work and the work of your family, and take it somewhere else if where you are doesn't match what you want in life. And I always think of the example of the great Austrian economist Ludwig von Mises, who fled the Nazis across Europe and was almost caught by them, but without any of the savings he had built up as one of the great economists in Europe. And he landed in America with just the shirt on his back and had to restart his life as a lowly economist in a not very good university because he didn't have any choice. He didn't have the fruits of his labor that he had built up over time. And I think, what would it have been like if he had Bitcoin and he didn't need to worry about carrying his wealth? His wealth was in his head. He had like 12 words in his head, and he could find a new place and restart his life with the value that he had built up. So for me, freedom is ultimately the freedom to escape, to find the place that matches your values.
I think that along those lines, freedom is about having the free will to do good. And the converse of that in the fiat system is where you're coerced into doing bad. So what I mean by that is, for example, if you're holding dollars, you're indirectly financing a relentless war machine, a government whose policies are antithetical to human flourishing. And so in the fiat system, your time and energy and your wealth is channeled into doing things that are bad. Furthermore, with inflation, you're incentivized to engage in mindless consumerism because you need to drain your bank account before it's worthless. And so you're out there living paycheck to paycheck, just buying plastic junk and really filling your life with materialism, which is antithetical from my perspective to filling your life with good along more spiritual grounds. And furthermore, you're compelled into bad investments, whether it's real estate or junk bonds, etc., that you wouldn't have to do if you have a proper savings vehicle like Bitcoin. So I don't see freedom as an end in of itself, but it's a necessary part of doing good. And that's why I think that Bitcoin has tremendous moral value in that regard.
Yeah, piggybacking off that, I think Bitcoin, from a freedom perspective, to me means it's a universal property rights system for 8 billion people. It doesn't matter what country you're in, the capital controls, the regime. It doesn't matter how old you are, if you have an ID. It doesn't matter if you're a persona non grata or if your opinion doesn't fit the zeitgeist. You can contribute globally in commerce on a single economic language that everyone speaks and no one can prevent you from accessing. So from my perspective, it essentially brings human capital online that's currently stuck in an environment where they can't contribute globally. They don't have savings, they don't have a way to invest, or they can't bring their ideas to market. And so on the individual level, everyone's free to pursue their own economic interests. And at the species level, we're all going to benefit here because there's geniuses stuck right now under some authoritarian regime with an idea that will change the world, and they're not able to bring it to market. Imagine Mozart being born before the piano, how much we would lose from that. And I see Bitcoin doing the same thing for individuals today.
Nice. Hear it. All right, a question to start with you, Brandon. It's a common expression in the Bitcoin community that you don't change Bitcoin, Bitcoin changes you. How does Bitcoin change people? And does the way Bitcoin change people ultimately change Bitcoin?
That's a deep one. So I think the adage is true. Bitcoin changes us way more than we change the system. But when I think about this question, I mean, it's changed me personally. Many other Bitcoiners can report that. But what I'm worried about is that simply just a reflection of us being the early adopters? Right? If we fast forward 20 years from now, are people going to go to a money conference, or people don't go to internet conferences anymore? So it's my belief actually that the more you invest in Bitcoin, the more you participate in this thing, the more it will change you. And so I think we're sort of in this honeymoon stage when it's radically changing us one by one. However, if we look in the long term, I think it will be a much more subtle change. Similar to the way that fiat money today, no one really notices it day to day. Why are we in a consumer society? Why are our morals eroding? Why are infrastructure eroding? The average person does not associate that with fiat money, and I think the same will be true in some future state if we're on a sound money or some sort of Bitcoin standard. We'll just think long term, we'll raise families, and we'll be a better version of our species. Now, will that allow us to then change Bitcoin? I don't think so. I think the primary value of this thing is that it's hard to change. And so it's not 21 million, it's none of these things. It's the fact that humans can't meddle with it. And historically, the reason why monies fail, either technological advancements or, more commonly, human greed takes over. Print money because the barbarians are at the gate, and eventually trust erodes, the money's broken, and we move on. And so the fact that it can't be changed is fundamental here.
I think a big source of change that I've seen that I think is really related to Bitcoin's ability to dematerialize value. So we're able to store our value in 12 words or 24 words. And that just has never been the case throughout human history. Value has always been stored either in third-party institutions, right, or in physical assets like a plant, a factory, or in gold, right? And so being able to dematerialize value, I think that does have a transformative effect on people at a fundamental level, that now they no longer attach so much value to what they see, to this material reality, and they're able to perhaps access a layer of spirituality that was blocked off by the materialism before. And I do think that does change people tremendously.
I think Bitcoin has this ability to extend people's time horizon. I've seen this over and over again, where people get into Bitcoin and they realize that there's only going to be 21 million of them, and their mindset goes from frittering away their savings by spending or investing in things because they're worried about inflation and their savings diminishing over time, to I want to get as much of this as possible. What can I put aside? What purchases do I not really need so I can get more Bitcoin? And it extends people's time horizon. The only thing I think extends people's time horizon as much as buying Bitcoin is having children. So I would encourage everyone to have as many children as you can. That will extend your thoughts about the future, because you want the world to be a better place, and you'll be thinking about how do I produce a good life for my kids, and you'll put things away in the present so that they can benefit in the future. And Bitcoin has that same effect on people. I've seen it so many times.
I think we're probably down to our last question, just looking at the clock up here. So I'm going to ask, how far into the future do you think humanity will be using Bitcoin? Will it be a standard that lasts for 50 to 100 years like fiat? Will it be 500 to 2,000 years like gold? Or is it going to be something that lasts far, far longer?
I personally call the period that we live in right now the fiat money interregnum. It's the short historical anomaly, and it is an anomaly between two hard money periods of existence. The gold standard that existed, for thousands and thousands of years. This short fiat money interregnum, which is a horrible experiment that we're the guinea pigs of this experiment. And hopefully our children and our grandchildren will go back to a sound money standard and enjoy that for the next 5,000 or more years.
I think forever. I mean, we can get into a cosmological argument of, is there going to be an end of time? But I think that ultimately Bitcoin's properties are such that they minimize uncertainty. And by being open source, if there's ever an opportunity to further minimize uncertainty, Bitcoin will certainly be able to adapt and integrate that. And so I do think that Bitcoin will, is kind of the long-term solution to the question of money. And then we can perhaps think about what different forms Bitcoin will take. If it's talking about Bitcoin in space, maybe we only have things like open dimes where you do actually have to physically move the private key rather than trying to broadcast the transaction back to Earth because you're too far from Earth. So those are interesting science fiction questions, but today, when we look at the fundamentals of the Bitcoin system and the software engineering, there's zero doubt in my mind that this can last forever.
Bullish. Satoshi had a quote, it's something like, you can't solve political problems with cryptography, but hopefully Bitcoin will give us a leg up in the arms race of freedom and sovereignty against an encroaching state. And so in that sense, Satoshi sounds a little more bearish than all of us here, but he didn't have much purchase on how Bitcoin would react in the real world when he said that quote. So we're exceeding Satoshi's expectations. And I do think Bitcoin has a chance to be the first 5,000-year money, or maybe survive the heat death of the universe. We'll have to see. But I think the two reasons money fail, as I mentioned earlier, are technological advancements and human greed or co-option. And from the technology side, Bitcoin can integrate new technologies if absolutely necessary, right? That's kind of opposed to you can't change it, but if existential, we can upgrade Bitcoin as needed. And so that sort of solves any future technological advancements superseding Bitcoin. And then, like mentioned, you can't change this thing, so it's essentially out of the reach of humans. We can't trust ourselves with the money printer, so Satoshi took it out of our hands in the same way that Prometheus stole fire from the gods and gave it back to the people. Satoshi stole money out of the central bankers and gave it back to the people.
I think that about wraps up our time. So I want to thank you guys for all your thoughts here today and all the thoughts you continue to put into the Bitcoin ecosystem as we go forward and discover whether or not Bitcoin is indeed the answer to life, the universe, and everything. To everyone in the audience, there's an amazing presentation coming up. I know everyone on this panel wants to get into the audience to see what's up next, so stay tuned. Thank you.
Still my
Bitcoiners! Woohoo! Music and art have the transformational power to awaken hearts and minds and shape culture just like Woodstock and Burning Man. Our next guest is shaping Bitcoin culture and is an analyst turned artist who creates rap and spoken word visual arts. Please give a very warm welcome from New Zealand for her very first live performance titled Reality. Give it up for Tip and Z.
With time, a seed becomes a tree, sheltering us. With time, a skill becomes a talent, empowering us. With time, a technology becomes a tool, enhancing us. By nature, time gives value to almost everything, yet the very thing our society gives value to, our money, loses value over time. This paradox warps our reality by defying the laws of nature, and it stems from the belief that $1 today is worth more than $1 tomorrow, meaning money must always lose value. We built our reality off of this model. Time value of money, we call it, but in reality, this is just dogma. Since we can keep making more of it, we end up destroying our own purchasing power. So we put it in stocks, put it in bonds, put it in land, put it in funds, put it in crypto, put it in gold, but we are not oracles, so what do we know? We know that it's hard to get by. We know some people may never retire. Is time value of money a lie since it discounts the monetary value of our time? If time is money, how are they moving in different directions? We're working longer for less. We end up just giving away our freedom. Give up liberty for policies. Give up our agency to the authorities. Because when our foundation is built on complexity, we simplify humans by giving up our humanity. Reality check, we're straight too far from the truth. The world economy's a wreck when 1 + 1 no longer equals to 2. And if life's created from the truth, along the way something got screwed. And we let our own dogma subjectify value. We divorce action from consequence. We defy the law of physics. We make scarcity infinite. We disregard the language of mathematics. So our systems are built on a fallacy. Our society's based on a fantasy. In the absence of truth, we're living in the shadows of our own reality. And that's the root problem. Man-made rules can be broken. As our trust crumbles, so does the progress of our civilization. But one thing remains constant: no one can cheat nature. So why not use it to architect a stronger base layer? The most beautiful buildings engineered based on these consequences. Natural drives rigor needed to build something enduring, uncompromising on principles that accounts for the flaws. Because when our lives are at stake, the gravity of truth cannot be ignored. So our monetary systems were designed like structures. It would embody energy and matter, so the money itself matters. An unbreakable limit enforced by costliness of creation ensures the structure holds value for many generations. A rule-based system governed by maths builds a transparent ecosystem that can self-error correct. With no one in charge, no words are taken as fact. Only work from computation can actualize truth of timestamps, and like water flowing off a cliff down the path of gravity, computational energy makes time flow one way only. It is this irreversibility which gives value to our money by upholding consensus and scarcity to create one shared reality. Now the map is the territory. Now we're working with high fidelity. Now money is truthfully time and energy bound by finality. Now we have the ability to manifest each of our dreams and build a world that is much more reflective of all of our needs. And that's the purpose of money. Merely a tool to shape our reality, merely a function to harness and express individuality, just a way to live freely, just a means for possibility. Because when we build on integrity, we enhance the beauty of humanity. The most beautiful societies are built from diversity of our thoughts that come to life when we're empowered individually. Because when money tomorrow is worth more than today, we shift from predicting to creating the future ourselves. And when our money grows in value, we grow thoughtful in how we use it. Natural law drives rigor needed to fund something enduring, something truly worth it, something that pushes the sky's limit, something only possible now real value and consequence exist in boundless virtual dimensions. Imagine potential creations, fueled by monetary life force lasting for many generations. We will venture into new territories and unleash these possibilities once we learn to embrace the truth of our reality. Thank you so much. Thank you. Thanks.
Hello, happy Bitcoiners! I am Kristen Thompson. I'm Swan's head of events, and I want to say thank you so much for coming and joining us for 2 amazing days. Have you had a great time so far? I think you do a little better than that. If you've had a good time so far, say Bitcoin! All right, now I believe you. So if you don't know, Swan hosts events all year round, every month. If you don't know about Swan Private, come over to the Swan booth, say hello, and we'll share with you a little bit about our Swan salons that we have every month in LA, in Miami, a great chance to meet Bitcoiners, leaders in the industry, investors, and friends as well. So in your email today, you're going to get a message that will ask for feedback on today's event. We would so appreciate it if you would let us know about your experience, what you loved, what you enjoyed, what you want more of, and ways that we can improve. So we'll count on you for that amazing feedback. And how many of you expect 2024 to be a big year for Bitcoin? Yes, and in keeping with that, we are opening the doors today. So if you would like to be able to come back next year when we make this event even bigger and even better, please head over to pacificbitcoin.com/2024. Tickets are on sale right now, the lowest price they will be until this time next year. Take advantage of that. And can you help me please give a big round of applause to the events team who helps me make this possible for all of you. On the count of 3, a big round of applause. 1, 2, 3. Thank you, Pacific Bitcoin event team. And thank you to all of you who make this event so special. Last year when we hosted this event, the biggest compliment we got was how everyone was able to connect, make new partners, start new businesses, find new investors, and make new Bitcoiner friends. And that is not on us. That is a compliment to all of you out in the audience. So thank you for being amazing Bitcoiners and an amazing part of our growing community. We are going to go on a lunch break, so please enjoy your lunch. We're going to be back at 1:40. Before you go, I want to mention once again, you can get tickets to 2024 at pacificbitcoin.com/2024. Those tickets are the lowest price and fully refundable until February. So you don't need to worry, just grab your seat, have a great time, and we look forward to seeing you back here next year. Enjoy your lunch and have an amazing afternoon. Thank you so much.
The only reason that an investor wouldn't shift their allocation of savings from commercial real estate to Bitcoin is they don't understand Bitcoin.
(1971) Roadrunner.
The year is 1971, and the average price of a new car in America is less than $4,000. Today, the average price is just under $50,000.
These are Phillips 3 for the money performance gasolines.
Oh, Tom, you take all the fun out of shopping.
A gallon of gasoline back then would set you back 36 cents. Today, it'll cost you $3.67.
I'd like to buy the world a home and furnish it with love.
And the median price of a new house in 1971 was around $25,000. Today, that same home will cost you around $400,000.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets. Your dollar will be worth just as much tomorrow as it is today.
Some would say there is nothing as permanent as a temporary government measure. When Nixon closed the gold window in 1971, it never reopened. So what about the claim that the dollar would hang on to its purchasing power? Since 1971, the prices of cars, gasoline, and other goods have gone up by a factor of 10, while real estate prices have jumped up 15 or 20x and sometimes even more.
The money's broken. The inflationary monetary policies continue to devalue the purchasing power of the dollar. People can't save, and so they have to go into assets like real estate and stocks in order to essentially use it as a savings account. And that causes all kinds of distortions because it goes beyond its utility as used as shelter.
Since 1971, as the supply of money in the global financial system has continually increased through money printing, backed by nothing more than a paper promise of repayment, so has the cost of buying a home. That's what broken money does to a society. When inflation, which is defined as the expansion in the supply of money, combines with decades of low interest rate policies where taking on debt is normalized, assets like real estate become savings instruments, and their prices reflect this store of value premium far above their utility value.
Real estate is the #1 store of value in the world. There's around 330 trillion US dollars of global wealth invested into real estate. That's around 67% of global wealth. And real estate is also the #1 collateral used in the world and accepted by financial banks.
We own more houses, not because of the utility value. We own more houses because our money is getting worth less and we're going to pay it back in cheaper nominal terms.
Home ownership is a core component of the American dream. But for more and more Americans, it's becoming unattainable. More and more people are priced out of the market. Millions have become perpetual renters, and studies show many young people don't think they will ever be able to afford a home.
When you were 16, you were making how much?
$20 an hour. $20 an hour when I was 16 as a lifeguard in Vancouver. My kids make $16 an hour as a lifeguard today. That was in 1987. They make $4 less an hour in inflation-adjusted terms. No wonder kids today or your generation can't afford a house.
Some argue there are even broader implications to society of this drastic shift in economic hope and prosperity.
People feel like they can't own a home, and they feel like they can't have the space to have a family anymore. It's simply become unaffordable because the dollar continues to lose purchasing power and their income is not keeping up. And that's really what you see in the statistics in terms of real wages. It's not keeping up with the price appreciation of housing.
A broken fiat system that relies on manipulation results in distorted price signals, misallocation of resources, and an ever-widening wealth gap. It's a house built on quicksand. So what would a different system look like? What if normal, everyday working people didn't also have to become real estate investors or Airbnb managers to protect their savings? What if houses were affordable and served as your nest, your place to live and plant roots, instead of also being the primary nest egg? Proponents of a return to sound money point to Bitcoin as a solution.
Bitcoin represents a paradigm shift. It's the digital transformation of money, property, and energy.
Bitcoin for me is digital real estate. Why? Real estate is not owned by people Because of its utility, people own real estate to store value. Because the inflation in the fiat system has made real estate so expensive, it is impossible for most people to buy real estate, and therefore it's also impossible to build wealth. It's much more accessible, though, to buy Bitcoin.
You don't understand the defects in your property until you see perfect synthetic property or digital property. Just like you don't understand the defects in your currency until you see perfect currency.
Real estate may have been an obvious choice compared to a debasing fiat dollar for people wanting to store their wealth and preserve their purchasing power over the last few decades. But now that we have Bitcoin, we can also see the limitations of real estate.
I happen to pull out a genie in a bottle, and the genie comes out and says, well, Michael, I'll give you infinite wishes. Let's start with real estate, real property, and strip every defect away from it.
Defects of real estate include tax burdens and maintenance cost. Homes are tied to a specific geographic location. They're not easily subdivided into smaller units. They're not quickly and easily bought and sold without significant broker's fees. They could be subject to government confiscation and natural disasters, and the list goes on. Satoshi Nakamoto created a virtual asset that suffers from none of the defects of this tangible physical asset. It dematerializes property and turns it into information, like Netflix did to Blockbuster and like email did to the fax machine.
I say to the genie, I like the way you fixed my property and made it maintenance-free and indestructible and immortal and allow me to program on a computer and move at the speed of light and make it non-confiscatable. But now I'd like you to guarantee me that you don't sell more than 21 million blocks of this in the universe forever. If you actually could get the universe to agree that there'll never be more than 21 million blocks of perfect property, that's the icing on the cake, right? When I did everything else, I created digital property, but when I capped it at 21 million blocks, I made it digital scarcity, or the ultimate scarce property.
What makes Bitcoin digital property is you actually own it. You don't actually own real estate. You own a deed from the government that says you own a home. With Bitcoin, you can actually see on the blockchain that you own the Bitcoin. And on top of that, Bitcoin is a better form of money. It's a better way to save over time.
As the central bankers were flooding the economy with excess currency, the currency is trying to find a tangible asset that will hold its value as the currency debases. And everybody chooses a different one depending upon what they know and what they're comfortable with. Bitcoin is one of those assets which is now being monetized, and it is rising through this chaos to be the apex property asset or the apex monetizing asset.
Bitcoin represents infinite monetary density, transportable across time and space, accessible to anyone on the planet, whether they have 500, or 500 million in any currency to save. And no government or central authority can debase it, confiscate it, or tell you what you can spend it on or who you can transact with. It's the apex form of real estate in cyberspace.
What if I could store a 10,000 floor building and I could wear it around my finger? Infinite economic density, the black hole, the white dwarf of money. The only reason that a casual investor wouldn't start to shift their allocation of savings from commercial real estate to Bitcoin is they don't understand Bitcoin.
Bitcoin is worthless artificial gold.
I would short it if there was an easy way to do it.
I think it's a scumball activity.
Bitcoin is the most superior monetary technology that has ever existed.
It's one of the crazier speculative times. It's a very hard asset.
Bitcoin's hope.
The year is 1948. The world is in turmoil. There has been global devastation. Untold numbers of families from Europe, China, Russia, and elsewhere have lost nearly everything. Their factories, their real estate, their stores, their farms, their gold, their art, everything but their very lives. They escape, penniless to new lands. Amidst all this wreckage, with millions dead from World War II, there remain many millions more who must rebuild everything from the rubble. Yet, despite the turmoil, there is hope. There is the unceasing human spirit of creation. The survivors, our story's families, begin to rebuild. They teach their children this history. They warn of the dangers of tyrants that rise in the shadow of the collapse of money and property rights. But issuing warnings is all they can do. They have no defense against the return of tyranny and monetary debasement, should it happen again. The year is 2008. 60 years have passed. So much has been rebuilt that more abundance exists now than ever before. Humanity is flourishing. Global information and trading networks unify the world. They far exceed anything that came before. Cities have been erected by the thousands. Billions live in comfort. Art was preserved and restored. Entrepreneurship is thriving. But not all is well. Our families observe the early signs of collapse, once again rising to cast their dark shadows. Banks suddenly fail across the globe. Governments step in to protect them. They utilize cheap debt and money printing. It comes at a cost. That cost is the principle of fairness. Once they start to drink from this chalice of easy money, governments and those who benefit cannot stop themselves from gorging upon it. They help themselves to hundreds of billions of dollars of unearned wealth. It is a looting that far exceeds any that came before. Meanwhile, quietly, in the dark and nearly deserted recesses of the information network that now spans the earth, a sole engineer toils to combine cryptographic functions and peer-to-peer technologies to invent something new, something which he hopes might someday serve as money that can never be looted or corrupted by governments, tyrants, thieves, or fools. The year is 2021. A cycle that leads to tyranny and war appears to be repeating. Money is debased. Governments take control of industries through mandates and decrees. International disputes upset a fragile balance where some nations became dependent on others for their necessities. A tyranny has become the largest exporter in the world. People are easily frightened into hysteria. Even within nations, divisiveness has reached record levels, even within families. There is a battle, but it is not a military conflict. It is not fought between nations. It is an undeclared war. It is a war over property, wealth, power, and money. It is a war between this story's families who seek freedom and those who seek easy rewards at others' expense. Freedom requires living with the consequences of the actions one takes. Freedom requires risk-taking, setbacks, losses, and failures before achieving success. Freedom's opponents seek to avoid this work. They demand results without doing the needed work. This does not work. Every time this path is taken, it leads to tyranny. It is a dead end. Literally, it ends in death. Yet freedom's enemies now possess power in every nation on earth. They meddle in every industry. They promise to fix everything,
if everyone just obeys their orders. They demonize the disobedient and blame them for the world's problems. Once again, the world is in turmoil. Meanwhile, in relative obscurity, the something that was invented by that sole engineer and released into the world in 2009 is taking root and growing. Its mysterious maker has disappeared. This was part of his design. It is taking on a life of its own. Many families now see it as a source of shelter and protection from the turmoil they see happening around them. They are now using it to protect their wealth, their property, and freedom. The year is 2048. 100 years have passed since 1948. As happened then, many of the world's currencies collapsed. Many nations fell. Many businesses dissolved. But, unlike 1948, it is not a time of poverty, of devastation, or of war. Instead, it is a time of abundance, creativity, and peace. Our families, who spent generations rebuilding since 1948, were not ruined this time because their money did not collapse. Their money protected them, just as they had planned. It protected their property, their real estate, their farmlands, their factories, their businesses, their charities, and their art collections. Moreover, it protected human beings. It protected responsible, hardworking, honest human beings. It protected freedom. Their money, Bitcoin, the something that sole engineer released in 2009, was the key technology that prevented a repeat of the destructive tragedies of the 20th century. The people and families who embraced this incorruptible money were saved. They now engage in multi-generational enterprises which are taking human flourishing to new heights. Agriculture is revolutionized. Gone are the days where farmers are beholden to giant monopolies. Gone are unnecessary pesticides, herbicides, and fungicides. Gone is dead, dry dirt. Gone is low-nutrient food. Gone is the unsustainable monocrop, unhealthy agriculture of the late 20th and early 21st century. Gone are antibiotics and hormones in livestock. Some of our families restored the land with an agriculture rich in diversity, grown on soil that has naturally regenerated. Livestock, formerly imprisoned in pens, now pastures freely on the plains, contributing to this regeneration. In just 20 years, the earth, the dirt, the land, the soil has healed. The food is delicious, it is nutritious, and it is produced ethically and sustainably. Other families revolutionized education. Gone are national curriculums which commanded that all children must learn the same material at the same age, at the same pace. Gone are costly yet worthless degrees. These are replaced with individualized instruction, allowing everyone to learn at their own speed. Each child focuses on their own towering strengths so they can spend their lives doing what they love and sharing their gifts and talents with others. Abundant and free education feeds everyone's minds whenever they are hungry for new knowledge. There is ample, beautiful, and practical housing throughout the world. Everyone has access to water, power, heat, internet, roadways, stores, and all the local cultural amenities. This too is thanks to the efforts of families whose wealth was protected by sound money. New manufacturing techniques and the elimination of bureaucracy have helped make housing accessible. But most importantly, the end of home price inflation, driven by fractional reserve lending, is gone. Housing is now affordable to billions. Land serves only as an employed commodity for residences or other productive endeavors. Or, as so much of it now is, to be preserved for nature to do with as she pleases. The energy humanity uses has been revolutionized. Inexpensive, small, safe, and clean nuclear generators are deployed all over the world, providing nearly unlimited access to energy for all. Thanks to local energy production everywhere, gone are wars fought over it. This energy abundance exists because it pays to produce energy, since the world's money is earned and secured by energy itself. With defensible freedom, these families ushered in a second renaissance of art and culture. Art celebrating the human spirit of creativity and responsibility. Art exhibiting splendor, beauty, and intelligence. Art that represents civilization's new treasures. It is commissioned, protected, and preserved by those whose wealth is protected and preserved by sound money. This is an age of optimism, hope, creativity, and productivity. The world is building wealth that is no longer measured in the quantity of currency, since the amount of currency is hardly changing. What has wealth become? It is now the sustainable, expanding, uncorrupted productivity of all humanity, enjoyed by all. It is measured in the quality of life of all mankind. The year is 2109. 100 years have passed since the launch of Bitcoin. What began as an obscure project in an unknown place by an unknown person has changed the course of human history. The threat of tyranny arising from monetary debasement is gone. There are no economic crashes. There is sustainable abundance that itself regularly leaps forward thanks to the innovation of free people who combine humanity's cumulative knowledge with their own creativity. It propels mankind forward time and again. We are healthy, our bodies are fit, our minds are sound. Our species is in harmony with nature and the earth. We are done with war. There is neither a reason to nor an ability to seize the wealth of a neighboring group of people. It is far more rewarding to visit them with love than with violence. Those that recognized and took action to protect their wealth for generations in the 2020s formed new dynasties. They create value for the ages. They teach their children the importance of hard, smart, and honest work. They protect the future by preserving the decentralization of Bitcoin. This will go on, undisturbed, for thousands of years.
The beauty of Bitcoin is it's going to be a digital foundation for a return to an analog existence. And when I say analog, I mean our relationships with the people around us.
The sun comes up. There's not a cloud in the sky. The birds chirp. The flowers open. Forest creatures scurry about. It's gonna be a beautiful day. Nature is beautiful. The beautiful sun shines its beautiful energy as warm, beautiful light on the beautiful earth. And beautiful life beautifully comes alive. Inside the sun, the immense work of intense gravity creates the energy that makes all this beauty possible. On Earth, beautiful variety blossoms. The herbs spread across the forest floor. The grasses take the plains. The oceans and seas teem with life. Everywhere you look on planet Earth, there is beauty. Human civilization is beautiful. And civilization is what emerges from what is unique about humans. No other animal specializes as we do. No other creature develops knowledge at the scale that humans do. We apply our knowledge in the specialized work we each do. We make beautiful things for each other. Beautiful clothes, beautiful homes, beautiful art, beautiful music, beauty everywhere. This is the beauty of civilization. Humans are beautiful. To achieve this beauty, we each need to know that when we work to create something beautiful for somebody else, we will be able to trade that work of ours for their work in return. Money enables this. A beautiful civilization needs beautiful money. Tragically, we live in a world of ugly money. Money that does not reward creative, hard workers for their beautiful work. It's money that is used to obtain and sustain power by those who don't work and offer back something ugly that took no work to create. This is how the beauty of our civilization is lost. For those of us who love beauty, who wish to bring it back into our civilization, we need beautiful money. Bitcoin is beautiful money. Bitcoin can only be created by good, honest work. It cannot be created effortlessly by those with money and power. They cannot give themselves more Bitcoin. Bitcoin isn't just any money. It's money that is just. No one can control it. And this is why Bitcoin is beautiful.
Africa is the oldest inhabited continent in the world, the birthplace of the human race, which is why it's sometimes referred to as the mother continent. Africa is also unmatched as far as mineral resources, home to the world's largest reserves of cobalt, diamonds, platinum, and uranium. It's also abundant in gold, renewable fresh water sources, and petroleum. So it should come as a surprise that a land so rich in natural capital, home to nearly 20% of the global population, is also home to some of the poorest and most indebted countries in the world. More than a quarter of the world's hungry live in Africa, and dozens of its nations still don't have monetary independence from Western central banks.
80% of inter-African financial payments are processed by an American or European company, which is insane. I mean, that's just like, colonialism, basically.
Which is why Africa is now fertile ground for a unifying, revolutionary monetary technology taking root and growing at lightning speed. Bitcoin and Lightning adoption is happening here faster than anywhere in the world, and it's currently trading at a massive premium in places like Nigeria when compared with the official exchange rate of the local currency, the Nigerian naira to the US dollar.
What Nigerians want is freedom. They want money they can be in control of as an individual.
From Nigeria to the Congo to the Central African Republic, which became the second nation in the world to adopt Bitcoin as legal tender, to Togo, African Bitcoiners have been fighting for freedom money as a way to drive away corruption and dictatorship from their countries. Among the most well-known of those activists is Farida Naburema, who lives in exile from Togo due to her political activism for a more democratic form of money.
Initially, for me, it was just a tool. Then eventually down the line, I started reading more about it, trying to understand the whole philosophy of Bitcoin. And then when I understood the philosophy of Bitcoin, something clicked in my mind. The struggle we have been fighting for in Togo for freedom is completely tied to our decision to have an independent currency.
Farida grew up watching her father and grandfather fight for economic independence, and her family has even faced imprisonment for speaking out against the regime. The currency in Togo, the CFA franc, is controlled and printed by the French treasury, and her family has seen their life savings devalued time and time again. Farida questions why France keeps Togo's reserves in its banks, money that's earned by the Togolese people, and then is used to buy French debt to finance the living standards of French people.
Why can't we just use Bitcoin, which is more like a nation-less currency, a currency that is not tied to a country, a race, an identity, a currency that belongs to everyone. And the most powerful part about it is the fact that it's immutable. The rules cannot be changed. Someone cannot wake up every day and announce that they are slashing its value by 50% and get us all poorer.
In West Africa right now, we have about 15 countries for whom basically France controls the currency itself. The CFA got devaluated by 50%. So what it means is that overnight, the money that my dad saved for me to go to college was divided by half. The Senegalese people didn't have nothing to say about it. They couldn't vote.
And as the U.S. exports the worst effects of the global reserve currency inflation on the developing world, the need for sound money is extremely obvious to most Africans, even as Western economists seem blinded by their financial privilege.
The Bitcoiners in a place like the United States are overwhelmingly out of desire, whereas a lot of the people adopting Bitcoin in a place like Nigeria or Ghana aren't doing it out of comfort and hope. They're doing it out of, this doesn't work, I need this now. They're doing it out of need.
While the devaluation of the dollar, of the euro, of all these other things are happening, it has a trickle-down effect to our third-order currencies of the Kenya shilling and others across Africa, where we get burned even worse.
Eric Hersman, who was raised in Sudan and Kenya, is the co-founder and CEO of Gridless, a startup that works with energy producers to promote growth and sustainability through Bitcoin mining.
Really what you have in Africa is a lot of people who don't have electricity and grids that aren't well built. And so what they need is they need somebody who can come in and use that energy and help provide some sustainability to their own economic model. And then what we do at the same time is we provide some confidence that they can push out further to other locations and that they'll have a buyer of last resort.
Unlike the US, for example, where there are just a few interconnected and robust power grids, Africa is covered by small, local mini-grids, often running on hydro, solar, or geothermal sources of energy. But the problem with renewables is what to do with the excess power that's produced during periods of off-peak demand.
The use during the daytime is very low in these communities, and the use in the mornings and the evenings is higher. That meant they have a ton of stranded energy. Like the energy is sitting there, is literally being wasted, and it's being turned into heat and dissipated. And so we said, we have a better way of turning into heat and dissipating it. Let's put a Bitcoin miner on it. Then we can pay you for it.
Gridless and others are able to use Bitcoin mining as a profitable way to incentivize growth of local grids, providing a buyer of last resort for previously stranded energy, and thereby de-risking the development of many projects that can now serve more and more rural communities for the first time ever.
You're making the grid more efficient, but you're also providing sustainability. I call it a win-win-win situation. So you have a win for us, we're mining Bitcoin. You have a win for the energy generation, the mini grid, because they're able to sell all their power now. And you have a win for the community because they have more power, more efficient power, and cheaper power.
And then you have jobs that are created in that sector alone, but new business opportunities and economic growth that are coming out of this because now people have access to energy and electricity, and they can use it for many other things, such as farming, such as producing goods and providing services.
But there are still many obstacles to Bitcoin adoption in Africa. Most people have mobile phones, but many have no internet access. And this image of Africa at night is telling. It illustrates something more foundational. Many communities lack access to electricity.
The numbers are, I think it's 37% who can get access to electricity, but even those who can get access aren't always able to afford it. And so you have this kind of doubling down problem. So access and affordability are closely linked for both internet and power.
Two of the most recent innovations to overcome the connectivity issues facing Africans are Machinkura and BitNob.
My name is Bernard Para, CEO of BitNob, a Pan-African company building financial services on Bitcoin. What if we approached financial inclusion from a human rights perspective? What if we put the privacy, autonomy, and dignity of the individual at the center of how we tackle financial inclusion?
BitNob is using the Lightning Network to enable super fast and cheap remittances from outside Africa directly to users on the ground.
This is me doing like good things with Bitcoin, right? So I decided to say Bitcoin, it's noble, right? So it's a combination of Bitcoin and noble, right? So that's what we call people who use BitNob nobles, right?
Wow, that's very, very, very smart and cool.
Machinkura provides a service to send Bitcoin over the Lightning Network through traditional SMS text messages, bypassing the need for a smartphone.
The simple reason why this is so disruptive is the fact that if you need Bitcoin, you don't need the internet. Bitcoin and the internet have been so interlinked that now what Machinkura is doing is removing the two and bringing in accessibility.
Solutions are being developed every day. And what I tell young entrepreneurs, specifically the tech developers in Africa, is that there's so many barriers to adopting Bitcoin in our countries. But despite those barriers, you still have the fastest adoption rates in the world, which means people are finding ways to counter those barriers.
As Farida points out, these new business and growth opportunities have potentially transformational effects on quality of life and economic development in a part of the world that has historically been subjected to centuries of corruption and exploitation.
What I find beautiful about Bitcoin is that it's technology that is extremely limitless. It's just like electricity. When electricity was invented, nobody would think that it would power computers today, and when I will be speaking thousands of miles away.
Right.
And same with the internet.
Yes.
So same with Bitcoin. It's a technology, and we don't know what it can achieve for us in 20 or 30 years down the line. It's still a very huge terrain.
If you're going to spend your life doing something, build something that makes the world a better place, makes it more meaningful. I think that's where I sit. Help proliferate a better human condition. I grew up here and I've seen the damage that NGOs and government can do. And I think if you actually want to make change happen in Africa, then you build businesses, you grow wealth.
Africans want to build businesses. They want to be in charge of their own economic destiny. They want freedom, and Bitcoin is helping them to achieve this.
But what does the world look like when everybody's using Bitcoin, when there are billions of people using Bitcoin?
This prescient quote about Ben Franklin, who conducted his famous experiment with lightning almost 300 years ago, describes how he would change the course of history, but it also speaks to a greater truth about human ingenuity. The discovery that lightning was a form of electrical energy that could be harnessed and directed for the advancement of civilization laid the path for a paradigm shift in our standard of living, on par with the discovery and mastery of fire. It led to light bulbs, television, the internet, and ultimately Bitcoin. It's fitting then that the latest innovation in digital money is the Lightning Network.
Lightning Network is a way to transact Bitcoin instantly.
It enables people to send instant high volume transactions for low fees over Bitcoin.
Cheaper, faster, more open, more inclusive, more freedom-based payments.
The Lightning Network is the solution to Bitcoin's greatest challenge: how to scale a steel-strong time chain.
We are able to combine the slower moving Bitcoin, which is backed by its mining network, backed by all of this computational energy, with an instant transaction network.
Protocols develop in layers, and they take a long time because you want to harden that first layer before you add the next layer. Otherwise, you're building castles on the sand.
New tech, like life, is all about trade-offs. Optimizing for one attribute can come at the cost of another. Jeff Booth describes this as the blockchain trilemma.
You can solve 2 of 3 sides of that triangle. So decentralization, security, or scalability. But you can only choose 2 of 3.
Pick 2 because it appeared that you couldn't achieve all 3, and until Lightning, no blockchain had.
And Bitcoin solved decentralization and security for the first time that humanity has ever seen decentralization and security together. Then it would create a natural free market opening to solve scalability. Because Bitcoin hadn't solved on layer 1 scalability.
The innovation is reliably solving the scalability problem with an optimized layer 2 technology built on top of the base layer. The Lightning Network allows participants to establish channels with a certain amount of Bitcoin dedicated to Lightning, so that micropayments can be conducted directly peer-to-peer without broadcasting to the slower base chain.
But there are some important characteristics of the base chain that make Lightning work. We have to create the best, hardest money first for the layer on top.
Yes, Lightning only works because the base chain works. Some of the initial designs of how to increase throughput were like, okay, we'll just add block size and block times. But then the problem is that individual nodes become so hard to run that you basically need to be a data center. You need enterprise-grade bandwidth and storage to run a node. You basically turn into Visa. So if you increase that way, that's a problem. The Bitcoin stack has instead gone vertical and said, look, we're going to keep the nodes small. And so you have small blocks, small bandwidth, limited number of transactions.
Now we have over 4,000 Bitcoin dedicated to the Lightning Network. Now I realize that this is still a small number in dollar terms, only about $100 million today, but still the growth has been steady in Bitcoin terms and the trend is undeniable.
The first couple years of Lightning is very low liquidity, but we've hit kind of a critical mass now where it's quite liquid and the wallet solutions and things like that are pretty good. So even though there's still work to be done, there's still limitations, there's still privacy improvements that can be made, this is now a very workable system with a very strong network effect.
The rise of the Lightning Network as an ingenious answer to scaling Bitcoin into a useful medium of exchange has actually highlighted the importance of a stable, decentralized underlying asset.
The layer 1 is the foundation for the entire cyber economy. We don't want it to move fast. What we want is immortal, incorruptible, indestructible. That's what you want, integrity from the layer 1.
Alternative solutions like increasing the block size actually present crippling vulnerabilities to the robust network that has been chugging along for 13 years. As Lynn Alden said, to increase the block size would present huge barriers to entry for average plebs that run nodes all over the world, thereby promoting centralization of the network.
There is no banking license required here to enter the Lightning Network. The barriers to entry to enter the Lightning Network are basically nothing. All you need is a laptop and some Bitcoin to dedicate to get started here.
Jack Mahler, Strike founder and CEO, describes his company's vision for using the open source Lightning Network for transferring value around the world instantly at little to no cost, even as he separately believes in the future of the underlying Bitcoin asset.
That is our thesis. It's a Bitcoin native neobank in your pocket that's built directly on top of these new monetary networks known as Bitcoin and the Lightning Network. The asset you should use as your savings account, the asset you should protect your wealth and ensure that inflation and the assets around you don't run away from you in expense. But the network can help your everyday life in making and receiving remittance payments and essentially banking yourself through stablecoins and this new monetary network.
There are 6 billion people around the world that are living in places that don't have access to good financial services.
When you buy Bitcoin, you're not just buying Bitcoin. You're buying Bitcoin that is enabled with the Lightning Network now. Every serious player in the Bitcoin industry is involved in Lightning Network because they all believe this is how we scale Bitcoin into an entire monetary and financial system without the use of alternative cryptocurrencies.
In other words, fix the money, then send it at lightning speed and fix the world.
Get your head flown 3 blocks. L key rappers hearts pumping like Reeboks. And every year I gain clout and my name sprouts. Some brothers that still be virgins, the frat never came out. I got the wild style, always been a foul child. My guns go boom boom and your guns go pow pow. I know to have a hottie open, I keep the shotty smoking. Front and get half the bones and your body broken. And when it comes to getting nookie, I'm not a rookie. I got girls that make that chick Tony Braxton look like Whoopi. I run with sturdy clicks, I'm never hitting dirty chicks. Got 35 bodies, buddy, don't make it 36. Step to this, your good is gone. Word is born, I leave mics torn when I put it on. So put it on, Big L, put it on. Come on, put it on and on and on. Come on, put it on, Big L, put it on. Come on, put it on, represent, put it on. Come on. I need love. Nobody can take nothing from Big L but a lost chief. The last punk who fronted got him out full of force teeth. I'm known to gas a hottie and blast the shotty. Got more cash than Gotti, you don't know? You better ask somebody. Big L is a crazy brother, and I'm a lady lover. A smooth kid that'll run up in your baby mother. I push a slick Benz. I'm known to hit skins and get ins and commit sins with sick friends. Cause I'm a money getter, also a honey hitter. You think you nice and see haha, you's a funny nigga. I flows, so one of my shows wouldn't be clever than this. I'm leaving competitors pissed to tell you the truth, it gets no better than this. I'm catching wreck to the break of dawn. And it's song, yo, it's a must that I put it on. Yeah, so put it on, Big L, put it on. Come on, put it on, big fella, put it on and on. Put it on, Big L, put it on, represent, put it on, represent, put it on, come on.
Some boy see we gun nozzle and take a whiffy choke. Boy, you're going dead before you see we gun smoke. See we gun nozzle and take me fi choke. You're going dead. Come at me, you provoke.
I drink my wet, not Beck's beer. I stay dressed in slick gear. Peace to my homies in the gangster lane. I see you when I get there. And it's the fact I keep forgetting my arm reach. I charm freaks and bomb geeks from here to Palm Beach. I'm putting rappers in the real shit. Big L is the villain you still fear. Cause I be hanging it harder, but shit is for real here. If you battle well, you pick the wrong head. I smash mics like cornbread. You can't kill me, I was born dead. And I'm known to pull steel strings and kill pigs. I run with ill kids and real niggas who peel wigs.
this all night. I could do this all day. I could do this all night.
I could do this all day, I could do this all night, all month, all year, for my whole entire life. Who you know got a home, was seen to live on the road, looking like a black gypsy in a caravan of bros. Music for the people, I used to rap on the train. Now I rap on the stage and I'm used to capital gain. I ain't asking for change, I'm good at coining the phrase. What I want is more than ever and never to fade away. Is that too much to ask? Good, cause I ain't asking. Already into action, I had your answer retracted. So stay about my business, is crowded enough with me. You added is just a witness, I'd rather not even see. I'm good with the folks around me, get from around me before we commence the clowning. Yeah, keep it on the level, yeah, keep it on the level. I'm climbing up the ladder while you in need of a shovel. Let's get at 'em.
I'm climbing up the. Keep it on the level, keep it on the level. I'm climbing up the. I'm climbing up the. Keep it on the level, keep it on the level. I'm climbing up the ladder while you in need of a shovel.
Yeah. Don't give it to me easy, I like a little challenge. When it feels better when you take a little damage. Slow, learning fast, earning, stay burning, wheels turning, it's an ongoing thing. Don't give it to me easy, I like a little challenge. When it feels better when you take a little damage. Slow, learning fast, earning, stay burning, wheels turning, it's an ongoing thing.
I'm climbing up the. I'm climbing up the. I'm climbing up the. I'm climbing up the. Keep it on the level, keep it on the level. I'm climbing up the, climbing up the, climbing up the. Keep it on the level, keep it on the level. I'm climbing up the ladder while you in need of a shovel.
I could do this all day, I could do this all night. Do this all night.
I could do this all day, I could do this all night. All night, do this all night.
I could do this all day, I could do this all night. Do this all night.
I could do this all
Hey, what's up, everybody? We're in the home stretch, the last quarter, you might say, of Pacific Bitcoin. At the hard money stage, thank you to Marathon, our official mining sponsor, for making all of this possible, helping to make it all possible. We're going to kick off the afternoon with a great panel. Anil Patel has an absolute gift for simplifying Bitcoin concepts and economic concepts into beautiful graphs and images. And so today we're going to have Jan Pritzker, Anil, and Stefan Livera go through some Bitcoin core concepts. Let's give them a round of applause.
Yeah, we got a good song for that one.
That's a great
job. All right, so we're going to talk about some interesting concepts. Bitcoin is a very multidisciplinary thing, and it's also quite confusing. And so we're going to try and illuminate some of these by going through, actually, some of Anil's work. So Anil, do you want to just quickly explain a little bit about what you've done with this?
So I make little tiny pictures that I hope help people grok Bitcoin, because I don't like it when people feel intimidated by Bitcoin. I think everyone has the capacity to understand it, and I think that's really important.
Great. Okay, so let's go to the screen. We can get these slides up. Okay, there we go. So there's the first one. And so we're going to talk through some of the concepts here, and hopefully that will be interesting for you out here, and it might also be interesting when you're explaining these concepts out to your family and friends so they can learn about Bitcoin too. So Anil, let's start with you. What's going on here?
Very simple. Money is not some static thing. It changes over time, and it changes because technology alters the incentives of holding one form over another.
Yeah. Jan, you want to add anything there?
Yeah, I think one of the things that I use when I explain Bitcoin to people is when they're really not familiar with the idea at all, is first sort of prime them on the evolution of money, right? We had barter, potentially, commodity money, precious metals, that kind of thing. And these days, money is going digital. I think that's something that a lot of people, kind of implicitly know, but you have to point it out sometimes because they don't really think about it, right? They go to the grocery store, they take their iPhone, they pay Apple Pay, and that's money now, right? So when you point out that most money is already digital, it's much easier to kind of discuss Bitcoin because you say, okay, you know what digital money is, you're already using it, but there is a difference because one of these is run by the government and the banks, and the other one is run by the people. So it's a much easier framing when you kind of focus on that evolutionary path.
And something else to add there is just how people find it so confusing when you try to explain Bitcoin to them. But here's the other reality. Ask them, do you know how the fiat system works? Do you know how Fedwire works? Do you know how the SWIFT system works? Because the reality is many people are using these systems all the time without even knowing. And the other aspect that we can understand from the history of money is this concept that the technology sometimes is a limitation. Gold may have been technologically limited in some ways because of the cost of sending it around the world, the cost of verification. And so, interestingly, as you called out in this slide, you might recall that Anil had, it was orange, gold in the gold side, green on the fiat side, and orange again on the Bitcoin side, right? The fiat, as our friend Vijay Boyapati says, we're living in the fiat interregnum. It is a temporary phenomenon, and in some ways we're returning back to what used to work, which was hard money. Okay, so we're going to move on now. We'll move to the next slide. Okay, so Anil, do you want to start here again?
Walking around Santa Monica, every conversation I've overheard since I've been here is dominated by rising prices. It's all about inflation. And call me a psychopath, call me toxic, slap whatever label you want on me. I believe you should not have your purchasing power arbitrarily debased through no fault of your own. So, people unfortunately are feeling the effects of that right now, and it's leading them to look for answers. And the root cause of that lies in central banking, manipulating the money supply. And I like to think of this image as the Bitcoin marketing funnel, and everyone's kind of entering the funnel now through that pain of rising real prices. And the mistake I used to make all the time was skipping forward to the solution. When people aren't open and receptive to a solution until they understand the problem. Help them understand how they're being screwed by the current system, and maybe then they'll want to opt out.
Jan, one common thing that we find when we're out here trying to educate people about Bitcoin is that it might be very easy to have a conversation about the rising cost of living with people because that will resonate very clearly with them. But what's more difficult is drawing that and tracing the chain, let's say, of causation back. Do you have any tips on trying to help people understand that?
Yeah, I think, first of all, from my personal experience, I grew up and nobody ever sort of told me anything about inflation, right? I just kind of saw prices rising. I used to go to the gas station and it was like $1, then it was like $2, then it was $3, right? You kind of just live your life with the implicit understanding that prices rise, okay? Things get more expensive over time. It's not really clear why. And then you live through a period like we've lived through in the last couple of years where you see an acceleration. And all of a sudden, you start to wake up a bit more because what used to be kind of this like slow boiling has become a lot more visible. And now you're saying like, well, I used to be able to afford this amount of stuff when I went to the grocery store. Like, I walked out with 3 bags of groceries for $100. Now I get 1 bag of groceries for $100. Something's changed, right? And I think when you look at, a lot of the mainstream media and a lot of discussions in the media around inflation, there's all these sort of, economists and academics writing about how complicated inflation is and how many different things are, go into it and how do we measure it and, what's really true and what's really not true. And in my opinion, it clouds the issue, right? Because if you actually go back to a very simple concept that I think most people intuitively understand, which is supply and demand, you have a certain supply of something, certain demand for something. I mean, if you just increase the amount of stuff that you have, to pay with, of course, it's going to devalue that stuff that you're paying with, right? So there are simply more dollars. It's not really complicated when you explain it to people that way and you say, more dollars have been created, therefore the value of each individual dollar is less. And I think that is a really simple thing, but so few people actually know that that's what's been going on, right? Like, they don't understand that the supply of money has been increasing.
Great, okay, let's move to the next one. Okay, so here we're talking about systems of measurement. And so I think for me, the first reaction for me is my friend Pierre Rochard, who's also a speaker at this conference, legendary in the space. And one way he likes to frame it and explain Bitcoin is it's the least uncertain monetary system, right? Because everybody knows, or at least everybody here knows, there'll never be more than 21 million Bitcoin. And that gives us more confidence in this particular system. So any reflections to add there, guys?
I'm not sure where I read this analogy. It might have been Saifedean, actually, about kind of using like a rubber ruler, right, to measure things. And if you think about money as a way to measure value or as a way to transmit information, right? Like if I want to say, I'm interested in whatever service you're providing, I'm willing to pay $100 for it, and somebody else comes in and say, I'm willing to pay $200 for it, that's information, and that information causes the supply chain to adjust, right? So more demand comes in, that's information saying we want to have more of this good, and that helps the producer of the good or the service to increase the production and to pay for the production, right? But if you are not using some sort of rigid thing, like to actually poke and send that information, and that thing is wobbly and stretchy, then the information is lost. And actually, I grew up in the Soviet Union, where prices were basically fixed entirely by the government, right? So you actually had complete breakdown of the transmission of pricing information. And so, for example, you could get an apartment for free. The only problem there was you would have to wait for 20 years because obviously there was a shortage of supply, right? So just because somebody said it should be free, all of a sudden it caused a huge problem in the market. You know, we're not going to produce more inventory if it's free, right? That's a big problem. On the other hand, like a pair of jeans, you know, would cost you a month's salary because they were in short supply and high demand. Everybody wanted to be, you know, sort of have that Western cool look. So I think it's really important that prices are being able to transmit directly, and we can actually influence the information in the supply chain to actually make goods and services available when they're needed.
Yeah, absolutely. And I think people adopt the systems that are more inherently useful to them. And Bitcoin having a perfectly inelastic supply does that. It gives you a measuring stick, a barometer to compare prices over long periods of time, something that's like grossly lacking in our current system. So I think many of you here, myself included, are drawn to Bitcoin because it provides that long-term certainty. And at the end of the day, we're just uncertainty reduction machines trying to survive and reproduce. So, yeah.
And related to what Anil was saying, I think I'll add one more angle here. For many people who are long-time Bitcoiners, they think of their net worth in Bitcoin terms. That might be an interesting frame of mind for you to do, because you might be thinking, well, do I buy this house or not? Do I engage in this project or not? Now, of course, there are other angles other than financial, but if you're just thinking from a financial perspective, think about that next time. And if you looked at, let's say, the house price 5 years ago, priced in Bitcoin versus the house price today, you'll find a very big difference. So it's actually quite a useful thing. And as Anil was saying, you can adopt a framework that's useful for you today, even if the rest of the world does not.
Yeah, just one last point. If you price any long-term or significant purchase in your life in Bitcoin, and maybe just look at that chart a few years back, it just highlights and hammers home the true opportunity cost of parting with your Bitcoin today. And that's what you want in something that can accurately signal deflationary prices over time.
Fantastic. So we'll move on. Okay, so here we're seeing different types of things that can be used as money or potentially even housing. So Anil, do you want to explain a bit further?
The idea here is that money is not some thing we randomly choose. Currently, we live in a system where it's forced upon us, but ultimately, people independently assess all options they have to use as money. So they survey a range of monetary goods across several monetary properties. Scarcity, divisibility, portability, there are several. And a great essay that will really hammer this home, if you have time to read it, I really suggest you do that, is by Parker Lewis. It's called Bitcoin Obsoletes All Other Money. And a key idea from that essay is that all forms of money compete with all other forms of money for every transaction. And you see Bitcoiners or people adopting Bitcoin as their unit of account. You don't see many Bitcoiners going back to fiat. So money is a winner-take-all market. There is no prize for being second best. So get Bitcoin or get demonetized is basically the thesis of this.
Yeah, I just wanted to add to that this concept that people survey the market and choose the best money might seem not true in America because we have dollars, right? We don't really survey the market and choose the best money, except for the people in this room, of course, who have actually done that. Most people don't actually have a variety of things to select from. But I think if you go outside of the US, you see a different pattern because you have people with typically a native currency in their country. Typically that native currency is not doing well. And so they actually have multiple choices. They have their native currency, they've got their dollar, sometimes they can have access to that, and they have Bitcoin. So in other countries where there is actual like debilitating inflation, right? We could say in America it's pretty bad, but it's really not compared to a lot of the world, places like Turkey or Argentina or Iran or really anywhere. When we have people all over the world that work for Swan, and some of those people, and we have somebody in Nigeria, they want to get paid in Bitcoin. And it's not because it's some sort of cool thing to do, it's because they have surveyed the market and they've decided that Bitcoin is a better store of value than their native currency. So it's a real thing outside of the US, and I think it might take us a while to get to that point. And right now it kind of seems like a very select crowd that's done that survey, but it is happening all over the world in a decentralized way, and that's what's causing the adoption of Bitcoin, because it is the better money.
One other point to add around monetary selection process. Sometimes there are people who have a slightly incorrect idea that it's just sort of that it's all just it's a lie, or it's a story we all tell ourselves. But there are objective underlying characteristics that make some monies better than others. And as an example, you can look in history and see at different times and places, people still chose gold and silver as their monies. Why would that be, right? It's not that they had to have an explicit agreement to say, hey, let's all use gold as our money. It had, at that time, that was the best that we could do. That it had the best qualities of scarcity and divisibility and all of these components that make a good money. So the whole point of Bitcoin is to understand and assess why Bitcoin is a better money. And so I think that should hopefully explain this idea that it's not just a matter of, if we all tried really hard to make, grass money or toilet paper money, we couldn't do it, right? It just wouldn't. You could try, and maybe in like certain contexts, historical contexts, in like maybe in like a jail cell, cigarettes were money or things like that. But otherwise, there are qualities that matter, and it's not subjective. It's objective. There are objective qualities of that money, but of course, it's our subjective perception of those things that plays out over time, and goods arise as money. So with that said, we'll move to the next one. So Anil, do you want to explain what's happening?
Creative destruction. So this process of innovation where incumbents are rendered obsolete. It applies to processes, it applies to materials, it applies to many, many things, and we are now seeing that applied to money. Bitcoin is better money. So it's just a very useful concept for understanding that nothing is really fixed. Humans are ingenious. They will find better, smarter, cheaper, more efficient ways of doing things, and Bitcoin is that for storing and transmitting value. The same way steel is a stronger building material, the same way the light bulb is superior lighting technology to a candle, the same way the internal combustion engine is more efficient to transportation via horse and carriage. So we're just seeing the process of creative destruction playing out once again, as it always does.
Yeah, and I think it's also important to look at why we think it's superior, right? And on which categories, because depending on what you think the problem that Bitcoin solves, you might get a different you might go down a different track, right? So a lot of early adopters of Bitcoin, I would say, 2011, 2012, 13 era, thought that Bitcoin was a payment system. And so from that perspective, it's like, well, why would I use this thing? It's more volatile than the dollar. It's kind of slow. It seemed fast in the beginning because nobody was using it. It seemed cheap in the beginning because nobody was using it. And then it became expensive and slow. And now you see all these articles, Bitcoin can only do 7 transactions per second. It's not a good payment system. Well, you have to understand that this evolutionary process is actually selecting for much more important things than payments. It's actually the things that we talked about on the prior slide in terms of the hardness, the durability, the immutability, and the transmissibility, fungibility, all those characteristics that makes Bitcoin so powerful as a money, not as a payment system. That's a different thing. But as a money, we're talking about something that we can really truly store value. You usually use it as a real measuring stick without it being deformed. These are the things that make Bitcoin an evolution to fiat currency and to gold and things like that.
Excellent explanation there. So we'll move to the next one now. And I think this is an interesting one. Of course, people have seen that meme, maybe where there's a desk and there's all these things on that desk. There's a phone and there's a map and there's like a physical map, right? A map book. And all of those things got replaced by the smartphone, didn't they? So Anil, do you want to explain a bit further?
As Pierre Richard mentioned earlier up in this couch, the process of dematerialization. And Stefan actually had a great interview with Michael Saylor about this exact topic. Go back and listen to it. It's episode 213.
Thank you.
So in the last decade, you all had front row seats to software eating consumer goods. You all saw it happen in real time. It's undeniable. And now you have front row seats to software eating monetary goods, or more specifically, draining the monetary premium that has accrued to those goods as a result of very sick money. So I believe Bitcoin is a sponge. It can absorb as much capital and value as you throw at it. There is no limit to that, and we're watching play out right now.
Yeah, I think the concept of monetary premium for me was something very interesting that I learned about as I learned about Bitcoin, right? Because when you buy a house, you buy it to live in it, but partially in the back of your head, you're thinking, this is a good store of value. Like, I know house prices generally go up, right? So if I buy a house, I'll be okay in the future. I'll be able to sell that house. I'll be able to, maybe make some profit or at least not lose money. So you already implicitly understand that hard goods, things that are difficult to produce, things that, a house in Manhattan or an apartment in Manhattan or a house in a neighborhood, like I live in a neighborhood that only has 100 houses. You can't build any more inside the neighborhood. So the value of the houses is very, very good. It's very stable. It only goes up because you can't build anymore. So people have an intuition that there's a certain value or a certain aspect of these sort of durable goods that causes a store of value premium, the monetary premium. But what that concept is that people use it as a substitute for holding money. Because I know that if I hold money in my bank, it'll be worth less in the future. But if I put it into my house, it's likely to at least maintain that value. And then you ask yourself, well, why would I put it in a house when that, has all these other variables to it, right? There could be an earthquake. Maybe they'll discover ways to build more stuff vertically, right? Whereas with Bitcoin, there's a very well and a very immutable policy. We know there's 21 million. We know exactly how hard this money is. And so, of course, if we had the choice between putting money into something that has a little bit of monetary premium or it's just pure monetary premium, which is Bitcoin, right? It makes a lot more sense to put it into the thing that is actually designed to be scarce, perfectly scarce.
Yeah, and Vijay Boyapati in The Bullish Case for Bitcoin perfectly explains monetary premium and utility value. So go and read that if you haven't already.
Excellent. Okay, next slide. Okay, so, all right, so what's happening here, Anil?
If you don't have scarcity in money, you will seek other scarce things to store your value or the fruits of your labor. If you do have scarcity in money, well, now everyone else is trying to produce value to convince you to part with that scarce money. So abundant money, scarcity everywhere else. Scarce money, abundance everywhere else. I don't want to keep plugging books, but go read Jeff Booth's The Price of Tomorrow if you haven't. Again, it perfectly encapsulates this.
Living in a deflationary future, I believe that's what's going to happen once we move to a Bitcoin standard. So imagine your salary sort of staying the same in Bitcoin nominal terms, but your purchasing power is going up over time, which is kind of crazy. And you know what? It could get even more crazy. You might literally, it could happen, it's theoretically possible, that your salary in Bitcoin terms is coming slowly down, gently coming down over time, while at the same time, your purchasing power is still dramatically rising, which is kind of crazy to think about, but it's possible. What do you guys think?
Yeah, that's an interesting concept, and I really like Jeff Booth's book as well. I'll plug that as well. One of the things he talks about, which we all experience, is that we already live in a deflationary regime, because look at technology, right? I mean, this thing in my pocket is basically a supercomputer from 30 years ago, and it costs a fraction of that supercomputer. So we already know that if things were left alone, we would be in a deflationary regime, right? Technology makes things cheaper, it makes things more efficient. Now we have AI, you know, the singularity, all that stuff happening. So we're going to get into a world where it's cheaper and cheaper to produce things, and that's already true. But we also have this counter pressure from, you know, the Fed, right? We're printing more money, we're expanding the monetary supply, and for some reason we decided we're going to come up with a magic number and try to outcompete the deflationary progress of technology. That number seems to be 2%, which was kind of like a meme that just happened. And so we're arbitrarily trying to keep up the money supply with this deflationary pressure, which is really unnecessary, and it's actually, like we said in the prior slides, it's distorting that information. The information is that the thing got cheaper because the technology got better, so we should be in more abundance relative to the money, but we're constantly trying to inflate the money to counteract that.
Yeah, and if you want to capture the benefits of all the brilliant people around the world, you have to hold money that's going to capture the benefits of technology deflation. You can't hold fiat and benefit from human ingenuity. So denominate your life in Bitcoin, and you will benefit from that.
And interestingly as well, it doesn't necessarily mean you have to be all in Bitcoin. What he's saying is denominate in Bitcoin. So, you know, they're different questions. So I think it's also important just to keep that in mind, because some people, you know, for them, they're not ready to be all in Bitcoin, right? So yeah, we'll move on to the next one. And okay, go on.
So personal opinion, politics is just downstream of the impact of technology and the incentives of the current monetary system. And I think Bitcoin infests politics because it is superior monetary technology. We're all self-interested individuals. The people destroying your purchasing power right now, they still want a mechanism to protect their purchasing power, ironically. So Bitcoin transcends politics. Left or right, it doesn't matter. Self-interest wins the day.
And it's interesting to add here that, well, co-founder and CEO of Swan, Corey, his thesis is literally about this idea of 10 million the intransigent minority. If we, as a Bitcoin community of advocates, educators, whatever you want to call this, the movement, if we can grow the base of Bitcoiners enough that it just becomes untenable to actually ban Bitcoin or stop Bitcoin, well, think about what that could do for all of us, right?
Yeah, I think one interesting thing to know about in politics and in money is this idea of the cancel-on effect, so that the people that are closest to the money printer, get the benefit of that money printer first, and then it sort of trickles down to the point where now all the prices have inflated and the people at the bottom just kind of get the shit out of the stick. And I think, if you've watched any of the reports about, how many billions of dollars Congress people have made on insider trading and, self-dealing and all this other stuff, it's all a byproduct of this basically, a monetary system that's entrenched in government, where if you're really close to those decision-making points, you can make a lot of money. And then that money will go out into the economy, and then the people at the bottom are just, they're seeing all the prices rise. So I think what's interesting about Bitcoin, kind of, in relationship to politics, is it removes that as a lever for politicians to be able to say, yeah, well, if I press this button, these people over here get rich, and these other people over here get poor, and puts it back in the hands of the people. And if you want to adopt Bitcoin as your store of value, then you benefit directly from your selfish decision, but at the same time, you're taking power away from those people to continue pressing that button.
Yeah, and if you can't beat them, join them. And Bitcoin is the only game in town that you cannot game.
Okay, we'll move on. Okay, so Jan, why don't you take a crack?
I have no idea what the slide is about.
Digital networks generally expand the pie versus their analog predecessors. Again, you saw that during the early days of the internet, and this is maybe Saylor's idea of dominant digital networks. They create new use cases, they open up new markets that previously were completely untapped or even in some cases locked away. So comparing Bitcoin to, say, gold, while that might be useful for someone, it misses the full gravity of what we're watching here. This is a global monetary network. It's just going to grow the pie in very unexpected ways. So think of it as zero-sum versus non-zero-sum games.
Yeah, I think Bitcoin is the first truly global, permissionless, borderless money, right? And it enables so much in the way of human collaboration, just like the internet enabled us to talk to people all the way across the world. And previously, we had communities that were isolated. They were either, national borders. First, before the phone, you had very local communities, right? So if you came up with some sort of concept, it was very difficult for you to transmit that new concept across the world. Then we had phones, we had, the internet, and now we have Bitcoin, which is actually creating a monetary transmission network. So not only can I collaborate with people from across the world, but now I can use money to do collaboration at scale, form corporations, form companies, form large projects that are decentralized, that can collect money and distribute it amongst their members. This is a very powerful thing. We have people at Swan here that, we have contractors in places like Nigeria. We pay them in Bitcoin. And I don't think I could imagine, 10 years ago doing something like that, because the complexity of sending money abroad, especially to places where banking is really, really underdeveloped or difficult to access, or comes with a huge tax, or their currency doesn't work, that's the kind of stuff that breaks the ability for people to collaborate. So once we have this perfect tool for transmitting value instantly across the world to any place, we can create collaboration networks that are previously have not been seen. And we're seeing it today in real life, and we're just getting started.
Give yourself an advantage. Use Bitcoin, right? We've got one more. We've got time for one more. So I love that this one is playfully recreating the MasterCard logo. Anil, do you want to start us off here?
First, conclusion bias. So you're new to a field, and the first immediate thought that comes into your head must be the correct answer. This is the trap most gold bugs on one side and shitcoiners on the other side fall into, because they're looking at Bitcoin through one lens, and you have to look at it through both. You've got to do the work, because you understand you're not trying to perfect for one single thing. You're trying to do reasonably well at multiple. And in my opinion, Bitcoin's already won this race for that reason.
Right, and it reminds me of something I've often said, which is that you need a combination of economics and technological understanding to really grasp what Bitcoin is. Because otherwise you'll either be a fiat person or you'll be a shitcoiner or a blockchainer, right? If you don't sort of grasp what's important here. We've got about a minute left, so any last comments, Jan?
I will say that I do think Bitcoin requires a very multidisciplinary approach to understanding it. And just speaking for myself, I came from very much the technology side, and it took me a long time to get out of blockchain and crypto land into Bitcoin, because I was on one side of this graph. And I think once you start getting both pieces of that pie, you start to develop that understanding, and you start to see it, and then you start to evangelize it to everybody around you, because you can't help but share this knowledge. And I think we're underinvesting in education. In schools, we don't talk about money. We don't talk about why inflation is a thing, why central banks are a thing, why do these institutions exist, how do they come to be, how do we get off, different standards we had in the past, gold standard, how did the fiat system come to be. These are all things that are not well answered by our current education system. So I think it's up to us in this room to be those educators, to go out and talk to our friends and family and community, and to help people understand what's going on in the world, because you really need a very, very broad understanding to understand Bitcoin. So go out there and spread the message, please.
Fantastic. I couldn't have said it better myself. Everyone, please put your hands together for Anil and Jan. Yeah, guys.
To be the obeyer, a rhythm recipe that you savor. Doesn't matter if you're minor or major. It's the tribe of the game with the player. As you inhale like a breath of fresh air. Can I kick it? Yes, you can. Can I kick it?
All right, hello, Pacific Bitcoiners. Marathon, as you know, is our official mining sponsor. And so we are fortunate enough to have the CEO of Marathon, Fred Thiel, here to talk about Bitcoin boiling the oceans. Let's give a big round of applause to Fred. Thank you.
Good afternoon. Hopefully everybody has gotten through the food coma by this point. The food trucks were awesome. I want to thank the Pacific Bitcoin folks for organizing such a wonderful dietary extravaganza for us. Some great LA food truck food. All right. How many of you out here are thermal engineers? Just want to make sure that whatever I say, I'm not going to have somebody contradict me in the audience. Okay, we got one over there. All right. So I'm going to talk about boiling the oceans. Actually, not boiling the oceans, but something similar to it, which is all about heat. Bitcoin miners create a lot of heat. Those of you who run mining operations, who run mining rigs at home, know that they generate a lot of heat. But there's stuff you can do with that heat. So that's what I'm going to focus on today. Here's a question for you. With the electronics you have in your home, or with anything that consumes electricity, what percentage of the wattage going into the device ends up as heat? How many people say 50%? Hands up. Okay, nobody's willing to take a chance here. 70%. Got some 70%ers. 80%. Got some 80%ers. 90%. Okay, all right. Thermal engineers getting close here. All right, it's actually close to 100%. So something that consumes 1,000 watts of electricity is going to put out close to 1,000 watts of heat because electricity causes friction in circuits. Sometimes we want that heat on purpose, like an electrical heater, stove, for example. Sometimes that heat is just being consumed by a CPU, TV tube, whatever it might be. And the only other energy that it loses might be energy emitted for wireless signals, LEDs, things like that. But we generate a lot of heat with all the electricity that we use. So the world thinks Bitcoin miners are boiling the ocean, right? I mean, here's some interesting headlines. 2020, Bitcoin will consume more energy than the world does today. Last time I looked at the calendar, it was 2023, and Bitcoin miners still consume less than 0.2% of the electricity generated on the planet. So I think this data is maybe not very accurate, and that was the World Economic Forum. Bitcoin miners were supposed to cause catastrophic climate change. Bitcoin miners today are responsible for driving all sorts of renewable energy generation. As a matter of fact, 58% of the energy we use is renewable, and of the industry as a whole, it's over 50%. We even got Elon Musk to agree with us on that topic. So, Bitcoin mining gets a bad rap, and I think we're finally getting to a place where the media and politicians are accepting the fact that Bitcoin mining is not going to boil the ocean. However, we also know that Bitcoin mining provides a lot of benefits. It expands renewable energy capacity. Why? Because there's stranded energy that can't get funded unless it has base load offtake. Bitcoin miners consume a lot of energy. We can consume the energy from solar farms, wind farms, hydro dams, geothermal facilities, so that they can build them while they're waiting for interconnect, transmission lines. The single biggest hindrance today, or barrier, to the US and many countries transitioning to green energy is transmission capacity, or the lack thereof. As a matter of fact, there is upwards of a 5 to 6 year waiting list today if you're building a new power generation facility to get that connected to the grid, which means you can't get your facility financed, which means you can't build it. But you need offtake, and Bitcoin miners provide that. And we love working with solar energy companies, geothermal energy companies, methane capture, wind, et cetera, and help provide them with revenues so they can operate their businesses, do what they have to do while they're either waiting for interconnect, or even if they have interconnect, because they happen to generate electricity at that period of the day called the belly of the duck, which is when nobody's buying electricity. So we strengthen the electrical grid because we help balance it. Many of you have been reading about all the good work that miners have been doing in Texas in balancing the grid there so they don't have to have blackouts. In Texas, 40% of the power is generated by intermittent energy, meaning wind and solar. Sun doesn't shine 24 hours a day, wind doesn't blow 24 hours a day, or as a matter of fact, every day of the week. And so it's intermittent. So it's really hard for the grid operator in Texas to figure out how much energy am I going to need from nuclear, coal, gas, wind, solar, because they don't really know how much energy they're going to get from the wind on any particular day. And so they need to have the ability to have somebody who can shed load, and Bitcoin miners provide that service to the Texas grid to the tune of upwards of 2 gigawatts of power. Bitcoin miners also mitigate methane. We capture methane gas, whether it's from landfills or whether it's from oil fields. Methane is 80 times more damaging to the environment than carbon dioxide. So if we can take methane gas, which is the single biggest problem with global warming today, and turn it into carbon dioxide, we're dramatically reducing the impact of modern man's use of resources on this planet. But that's not the only benefit of Bitcoin mining. Bitcoin miners do produce a lot of heat. As a matter of fact, an S19 produces 10,000 BTUs per hour, which is about the amount of heat generated by 3 space heaters. It's pretty simple. 3 kilowatts of energy, you get about 3,410 BTUs per hour. That amount of energy generates 10,000 BTUs. So you can use S19s as heaters, and this is just air-cooled. But if you think about the percentage of electricity that a consumer uses to heat their house and heat water, what percentage of the electrical bill do you think it is? Who would say 10%? 20%? 50%? Yeah, 60%. 60% of the average electrical bill of a home is spent to heat the house and heat water. Forget about cooking. So that's kind of low-grade heat. Bitcoin miners can solve that problem. But there are lots of other productive things you could do with that heat, too. Think of all the industrial uses where we need to use heat to do things. We need to heat certain things in food processing so food can be packaged and processed. In agriculture, greenhouses, and lots of other places. So let's look at some examples. Shrimp farming. Talked about boiling the ocean, I have to talk about the ocean, right? So shrimp farming. Why is shrimp farming something I'm going to talk about? Well, if you think about shrimp farming, it needs heat. You need to heat the water the shrimp live in. You could take 100 Bitcoin miners using liquid immersion, take that immersion fluid, heat the water in a shrimp farm, and then that water effectively cools down. It comes right back into the Bitcoin mining immersion tanks. You can cut the cost of a shrimp farming facility by 10%. You're increasing the margin of the shrimp farming business substantially by simply using the heat off of Bitcoin miners instead of using electricity to heat the water. It's more efficient to use Bitcoin miners to heat the water for shrimp than it is to use water heaters. It's a lot less expensive. So Marathon is partnering with companies that are doing aquaculture, shrimp farming, as a way to use the heat from our Bitcoin mining to grow shrimp. We're building a prototype facility up in Washington State to do this. We're also working with people who have hothouses, greenhouses. There are lots of places in the world where you'd like to be able to grow crops, but you have to do it in greenhouses because it's too cold. Think of Northern Europe, Canada, northern parts of the US. So that heat is useful. And if you think about the amount of protein the world today is getting out of the oceans, and you think about fish farms and traditional shrimp farms done in the ocean, they create a lot of environmental damage to the ocean. So what if you could do that on land instead? What if we could do that using Bitcoin mining? There'd be a lot of benefits to that. We would have a consistent food supply, and it would be economically more efficient. We can heat greenhouses. A single S19 XP can sustain a 240 square foot greenhouse. That's about 20 by 12, just using the air generated, in an environment that's 0 degrees C, meaning it's freezing outside. This is energy that the greenhouse would otherwise have to use and procure to heat the greenhouse. And meanwhile, they could be mining Bitcoin. So what else can the heat be used for? Well, like I said, one S19 XP could heat 2 single-family homes of about 1,000 square feet each. You have Bitcoin boilers that companies are developing. You have hot tubs. You have dryers for clothing. You have all sorts of consumer devices people are developing. But heat recycling actually could change the world. If you think about all of the heat we generate through transportation, through heating buildings, our homes, through cooking, through heating water for laundry, industrial manufacturing process, if we could instead generate that heat by leveraging Bitcoin miners, we would do a much greater service to the world. We would lower the cost of Bitcoin mining. We would lower the environmental impact to the world. And this planet would be a much better place to live. So what if I told you it's time to stop apologizing? Let's start being proud of what Bitcoin mining can actually do for the world. Let's start being proud and standing up and saying what we're doing to help the environment. Let's start being proud of what we're doing to help the electrical grid. And let's tell people in Washington and capitals around the world that Bitcoin mining is good for the environment. Don't be embarrassed. Stand up, pro-Bitcoin. Thank you.
Hello everyone, my name is Jan Mikula. I go with Mickey, and I'm leading product development of Swan mobile app. Last year, we announced public availability of Swan App for Android and iOS. With Swan App, you can easily buy Bitcoin, set up a savings plan, or of course, you can withdraw your Bitcoin to self-custody. Also, when there is a large price movement, you can receive a push notification. There is one more thing. We just released new Swan App version that allows you to open Bitcoin IRA account and manage it directly from the app. So if you don't have Swan App, please go to your App Store, Google Play, and install it. Thank you for using Swan App.
All right. First, I want to thank CleanSpark for helping make all this possible. You can check out their booth right outside that door over there, doing some fantastic work. Also, you can go to pacificbitcoin.com/2024 right now and grab the cheapest, lowest cost tickets you're going to get for next year's conference. And you can refund up until next February. So there's really no reason not to do it. If you decide not to come, if you realize you can't come, you can get a refund by February. So lock in that low price, pacificbitcoin.com/2024. All right, on this next one, we've got the queen of Bitcoin, Stacy Herbert, sitting down with Michael Peterson and Roman Martinez from Bitcoin Beach to talk about what is probably the coolest story in Bitcoin in the past few years, adoption in El Salvador. Thank you.
Guys, long time no see. We see each other all the time, don't we? Basically, before we came on, Chimbeta said that I should do about 20 minutes of talking, right? So let's talk about me. What do you think of me? Oh, no. Okay.
You're amazing.
Bitcoin adoption in El Salvador. Obviously, everybody knows Bitcoin Beach as the little community that dared. Is that what they say? Something like that. 2 years later, after the Bitcoin law came into effect, September 7th, what do you feel today about that journey of 2 years? Of how far have we come in terms of Bitcoin adoption?
I think it's really remarkable to see how the country has been transformed during that time. I had lived in El Salvador on and off for the last 20 years, pretty much full-time for the past 10 years. My kids grew up there, and it was a very different place than it is now. It used to be to ask people to come visit you in El Salvador, they would be scared and say, there's no way, I would never go there. Now I get calls nonstop from people I don't even really know that well, saying, hey, we want to come down, we want to stay. We've heard all these amazing things. And so that's why it's frustrating to me when you hear the press or people say, oh, it's a failure because not everybody is using Bitcoin, or it hasn't really helped the country. And it's just insane because it has really turned the country on its head. Like, people actually know where El Salvador is now. It used to be, you said you live in El Salvador, they're like, where? Ecuador? Is that in South America? Now, El Salvador is on the map. Anywhere you travel in the world and you mention El Salvador, they always say, oh, President Bukele, like, we need a president like that. And nobody would have said that about El Salvador before. It has a history of having some of the worst presidents. In fact, I think the past 3 presidents are either in jail or should be in jail and are hiding somewhere else. So it's been remarkable to see El Salvador become a light to the region. Investment money is pouring in. Real estate is insane as expats from around the world are wanting to move to El Salvador and make it home because to them it represents freedom now. The influx of Canadians that are fleeing out of Canada, trying to find a place of freedom and really selling everything, bringing their kids, their dogs, and making a new life for themselves in El Salvador. Nobody would have imagined that would have been possible a few years ago. And so while the press reports focus on the fact that, oh, it's not everybody's using Bitcoin, the fact is Bitcoin has helped transform the country. And it went from one of the places in the world with the least knowledge of Bitcoin and the least usage to the highest knowledge of Bitcoin. You don't meet anybody anywhere in El Salvador who doesn't know what Bitcoin is. And most of them have experienced it to some degree. And so what I always remind people is these things take so much time. When you're talking about money, when you're talking about something as personal as finances, people are creatures of habit. So it is going to be a decade-long project. But for me, it seems way, way, way ahead of schedule.
That's right. And Ramon, everybody knows Chimbeta, as you're called. You're born and raised in El Zonte, which became Bitcoin Beach.
Yeah, well, I'm a kid that born and raised in El Zonte, and for me, what is really incredible what's happening now, that when I was a kid, I didn't see all the opportunities that we had now, you know. I grew up seeing people fleeing the country, trying to get here to the USA illegal, to working here to support our families there. And because that was not hope at all, you know, and freedom. And that's how I remember my childhood when I was a kid, having that dream that everyone should live, because El Salvador was not the country that can provide hope and freedom, and the dreams cannot come true there. And in fact, when we started the project, like Bitcoin Beach and Hope House, it was because of that. We were seeing our community, like all the kids, the dream that they have was to leave the country, you know? And everyone, I always say this, that everyone say, you can do it. Fight for your dreams, but no one teaching you how to really do that, you know? No one give you like the tools, the knowledge that you need, or the line to follow. And that's where we have been, you know, focusing our community. And I can tell you today, it has been working. Our kids, at least in El Sonte, and I will say like in the country now, are dreaming. Like, I think the most important thing that is happening in El Salvador now is that people are dreaming again. And as a kid that born seeing people leaving the country, now like I mentioned it, all the people from all over the world coming into El Salvador for me is crazy. I never thought I was ever seen that, you know? So it's definitely El Salvador is another country, and it's beautiful how a smaller country in America is providing that hope and freedom, but not just for us, but for all the people around the world.
Exactly. And of course, that hope, that freedom, that economic liberty, that policy, it's really the adoption by President Bukele. You know, he plays a large part of it. It's not just Bitcoin or Bitcoin Beach. It's a guy who rose to the occasion. When he announced Bitcoin legal tender, it turned all of the world's media. It turned the entire globe to little El Salvador. And he rose to the occasion, right? He was the president of a small country, which was now great. Like, the amount of press attention that El Salvador receives is as if it's like a Germany-size economy. Like, it's important now. And recently, President Bukele said in his, on the Independence Day speech, that the need for Salvadorans to change their mindset, to become more confident. So for me, when you mention awareness, and the awareness of Bitcoin in El Salvador is 100%. And I think that adoption, that is adoption, because that's adopting, they're starting to adopt the mindset of a Bitcoiner, which some people call as toxic, but I might suggest it's more confidence. And tell us, Mike, what you're seeing. You've been there for 17 years. So what are you seeing in terms of that mindset shift in the population?
So it used to be people were almost kind of embarrassed to be from El Salvador. They felt like they were kind of the lowest on the totem pole, that their dream was really to escape. Now there's this real national pride. There's Salvadoran flags flying everywhere. The Salvadoran diaspora in the US now are proud. They don't tell people they're from Central America. They tell people that they're from El Salvador. And so you've seen this real shift in the mindset. And like Roman was saying, it used to be your dream was to leave, was to usually go illegally to the US, and that was the only path that you saw as for the future. Now the dream is to stay, and even for a lot of people that are here in the US already, to return, because they see more opportunity and more freedom and just more potential for their kids in El Salvador than they see in the US. And so like Stacy was saying, Bukele really was the one that made this possible. It was him who took this huge risk. Most leaders aren't willing to take a risk like that. But he saw the potential that Bitcoin could bring for the country, and he was willing to defy the IMF and the US government and the world press, and to make this decision that he felt was in the best interest of his people. And so really it couldn't have happened without a leader with the guts to stand up to the world and do what's right for the people. And so while it was While Bitcoin Beach is a grassroots community effort, what has happened on the national scale couldn't have happened without leaders willing to take it to the next level.
That's amazing, and I really believe that. And you see it when you're there. We always say, don't trust, verify. And when I first arrived in El Salvador, well, first, when I was on the runway in Miami, I sent a DM to my uncle, and I said, I'm about to die. And he's like, why? What's going on? And I said, I'm flying to El Salvador. And he goes, why? And I was like, I don't know. There's like a Bitcoin conference there, and apparently I'm going to die because it's so dangerous. But when I arrived there and I met you, Ramon, all I had read is dangerous and that President Bukele was a dictator. And you talking about President Bukele to me really blew my mind in terms of just how what he had done for the country had transformed you, had in terms of how your opinion about El Salvador and the future was for you.
I think a great leader inspires other people to stand up and want to work in the small scale, right? We're talking for our community, and I think having a great leader in our country, that is something that I think one of the most important things is the hope and the pride that Maya was talking, that as a Salvadorian, we get back and we feel proud to be Salvadorian. And we start to believing that things are possible, that we're a small country, but we can be big too, And that mindset that things are possible, and that most of the people around the world thinking that countries like El Salvador are a poor country, and that mindset getting into the people, and we grew up thinking that we are poor and we have to be poor, and if we want to matter in life, we gotta live. I think he cut that, and he made people dream again, and that's beautiful, That's beautiful to see that change. And for me, in our communities, I think Bitcoin is also like that hope, that we never had before. Like in El Sonte, in Bitcoin Beach, 90% of the people were excluded from everything. 90% of the people didn't have access to a financial system, not bank account, not access to transact digitally, not access to do nothing, And I think that seeing now those changes now and connecting that reality to our past generations is because my parents, my grandparents, they didn't see, they even thinking that dreaming was possible, And connecting those thoughts to their life, everything makes sense why they didn't change their reality, because they were not opportunities, because the leaders that we had wants to keep us in that mindset, And I think what's happening now in El Salvador is everyone should come and check it out, And like Stacy said, don't trust, verify, because you will hear a lot of things. But what is happening in El Salvador now is incredible, and is going to go down in history. Well, personally, it's going to go down in history, but I think our country is going to go down in history as you can be the small country in the world, well, not in the world, in America, but you can show how you can do the right things for your people.
Yeah, and the other adoption number I look at is that global perception of El Salvador from outside, is to look at how many of the best and brightest, I always call them, but because I'm a Bitcoiner and I think we're the best. So how many of the best and brightest entrepreneurs and companies are adopting Bitcoin as their home, either in reality, like as their headquarters, or as their spiritual home? So What do you think of that in terms of that sort of flow of people moving into El Salvador?
Really, the flow of people in El Salvador is unprecedented, I think, in modern days. It's kind of like when the Europeans were flooding into the US and saw this as a land of opportunity before we destroyed the country. And that's what it is in El Salvador now. We see all of these people flowing in. And one of the funnest things for me this last year, and I'm going to shill our podcast here, the Live from Bitcoin Beach, but we get to interview all these people, both Salvadorans who are starting businesses and are really transforming the Bitcoin ecosystem, and then foreigners from around the world that have picked up and moved their families and are starting over and kind of see themselves as pilgrims that are coming to this new place of opportunity. And to hear their stories and to see the excitement in their eyes, it energizes me. Like, they see the opportunity. They say, back home it seems dead, it's just regulation and red tape, but here we see a government that wants us to thrive, wants to say yes, wants to see lives improve for the people. And so it's energizing. You feel like you're on a nonstop high there, that people are actually, this is what it feels like when people are excited about the future. And so for me, it's just been amazing to see. 5 years ago, you never could have predicted that. 5 years ago, it was a little over 5 years ago, my neighbor lives right in front of me, was shot 40 times. I was up watching the elections results. It was when Trump was getting elected, and that night, and 40 shots rung out. And that was the third murder in my neighborhood within 3 weeks. That's when El Salvador had the highest murder rate in the world. Now, the murder rate in El Salvador is lower than Canada's. It's much lower than the US. It is one of the safest places in the world. So you have this transformation at all levels. At personal safety levels, people feel safe to go out in the streets. They feel safe to gather and be out at night. But also they feel like they can accomplish something. These young kids are going into the coding programs that Stacy's been part of putting together. The next generation of entrepreneurs are Salvadoran. They're coming out of that. So we have this combination of some of the brightest and most motivated people from around the world coming and then tapping into this amazing local Salvadoran population that has energy and excitement for the future. So I really do think that El Salvador is going to become for sure the center of the Americas and possibly of the world as far as for finance and for financial freedom. And so if you have not been there yet, you are missing out.
Everyone, when we met people here, they say like, but is Bitcoin working in El Salvador? How is the Bitcoin adoption? What the government is doing for Bitcoin education in El Salvador, how we're teaching our next generations about Bitcoin. And I think something big happening like in the last months, Bitcoin Beach and my first Bitcoin, thanks to you, Stacy, we partnering with the Minister of Education to do the first pilot to teach 150 teachers from the public schools about Bitcoin. And they will go back to their schools and teach the students about Bitcoin, you know? So that's like, what else in the world? What in another country the students are learning something that really they can use to change their life? Because what we're teaching our kids now in the public schools, I don't think so works anymore. It used to work like 50 years ago, but I think you will agree that what the schools are teaching to the students now, I don't think it makes sense. But seeing that in El Salvador is the next generation, I think they will have the tools and the knowledge to really don't have to leave El Salvador and stay there, and that's what we're seeing, you know. Another thing that I would love to tell you, companies from El Salvador, people from El Salvador building Bitcoin companies, you know, and exporting Bitcoin technology around the world. we have like as a Bitcoin here, we have Tianqi here, like we have K1, you know, and when you see people like Jack Dorsey saying like, many of the things that we will use in the future is building now in El Salvador. And that's true, and that's huge, you know? It's like, I feel so proud to be part of this, you know?
Yeah. Yes, actually, I encourage everybody to go check out the El Salvador booth. It's put together by ASO Bitcoin. We have Chorrito Cafe, of course. Everybody needs to have the best coffee in the world is from El Salvador. And I didn't realize that until I moved to El Salvador. Now I'm addicted to it, and every coffee elsewhere tastes too weak and horrible. We have K1, which is an amazing invention out of El Salvador based on what the local needs are. So Edgar Borgia created this ATM where the minimum is like 10 cents. You could put a 10-cent coin in there and receive Bitcoin over Lightning. So that's being distributed across El Salvador, but built in El Salvador and exported to El Salvador from El Salvador. So you have a made in El Salvador is the new sort of made in America, as that used to be great at one time. But you mentioned, you know, that I helped you with the Bitcoin Beach and Me Premier Bitcoin getting into the public education system. Now this is another interesting thread is this, you know, bottom up versus top down, the, you know, circular economy versus, you know, running the big nation state economy. How do you feel about, you know, the relationship between like, you know, Max Kaiser and I are in San Salvador and we work for the president and, you know, we're implementing like things like the Bitcoin office, Bitcoin embassies in Lugano. You know, describe how you feel on your side. I obviously know how I feel on my side, but how you feel on your side in terms of being the community-driven Bitcoin adoption and what your interactions with, you know, the state government.
They're 100% synergistic. I mean, we are seeing, we're true believers in circular Bitcoin economies coming from the bottom up. But if you're fighting against the government that's trying to stop you, that's going to be much more difficult. In El Salvador, they've supercharged this. We would never be at this level. There would never be this level of adoption. There would never be this level of opportunity if it hadn't come from the government. We're realistic in our abilities. We're a small project. So that's very different than what the government can do. So we don't at all view them as competition. And you and Max coming into the country has really helped show that to the world. And so I think you guys have served as the bridge between the Bitcoin community and the government in El Salvador, helped make sure that the government in El Salvador kept the shitcoiners out, which I know is a full-time job for you, Stacy. So, which, by the way, I think they did a survey before on like how much awareness there was of Bitcoin, and it was like 99+%, and Ethereum it was like 1%. So you guys are doing an amazing job there. It's
Thank you. It's hard work. We need more Bitcoiners down there to come help out.
So I think, and my hat's off to you, because I know that that's not always a fun job, and you can never stop, because they're always trying to, you close one door and they're trying to get in through the cracks. And so my hat's off to Stacy and Max of doing a good job of making sure that this isn't hijacked and taken off in a different direction, but also that the government is supported and that the Bitcoin community supports what the government's doing.
Yeah. 100%. One of the things that is really exciting for me is to see all the Bitcoiners that want to come and support El Salvador, you know, like, it's incredible. Like, I met with a lot of people, and when I sit with them, it's like, I don't have to do it, but I want to do it because I want to be part of history, you know, and I think El Salvador, well, the government, like for entrepreneurial people that have like companies or want to invest in El Salvador or want to meet to El Salvador, I don't think is another friendly, there is another friendly environment from the government, you know, to receive everyone, you know, and welcoming everyone. Is like, everyone is saying like, what do you want to do? If it makes sense, we want to support, you know, and that means like you can meet with the ministers, you can meet with the institutions that regulate like anything that you want to do, you know, and everyone is ready to help, you know. So that is incredible, you know, that feeling and that energy that you can get from the government, you know.
And I'm very much a small as possible government, very skeptical, but I continue to be amazed at the people that are in this government, that they see the bigger picture, they actually want to work for the people. Many of them have taken big pay cuts to come work for the government, and they're working 60, 80 hours a week pushing things forward. So while I never put my faith in any government, I am amazed at what this government is doing.
Well, because it's a leader, right? And I kind of predicted that would happen in El Salvador when President Bukele first announced Bitcoin legal tender, was that Bitcoin is perfect money, as perfect as the florin was at its time. And you saw what the florin did to florins, but it also required, they had the perfect money, which made them wealthier and wealthier, but then they got like the perfect leader with Lorenzo the Magnificent. And he, as you mentioned, a leader inspires, right? And that's what he did. He didn't paint the Mona Lisa. He didn't paint the Sistine Chapel. He didn't paint, he wasn't Botticelli. He wasn't any of these guys, but he inspired all of these great people to create and innovate and create what we know today as the Renaissance 1.0. I believe in El Salvador, what we're seeing is a Renaissance 2.0. And it is drawing in a lot of the great and the best in the world. As you mentioned, like here at the conference is the new head, the president of our Digital Assets Commission. So he is one of the diaspora brought in from Canada, inspired to move back to El Salvador, just like many of the people joining El Salvador as entrepreneurs, like Edgar Borgia of K1, like regulators coming to work for the government on Bitcoin policy, are Salvadorans returning for the first time. Gerson Martinez has just joined us as the CSO at Volcano Energy. So he's returning as a diaspora from Maryland.
He's getting his passport now.
Yeah, like we've met so many people who have been eligible for their passport, their Salvadoran passport, since they were born in America, but they never got it until like 40 years later now. But there was a question in there, and I forgot where did I start this conversation? But in the last few minutes, like, where do you see the future going? What are you looking for over the next year? I mean, the Digital Assets Commission, by the way, and the Digital Assets Law, so now we can start building capital markets on top of Bitcoin, which I think is a really important next step to being that Singapore of, Latin America.
I see these things as just stacking on top of each other. Sometimes people come and, like I said, they expected it all to transform overnight, but these things take time. And so I see as we're just now hitting the stride, and we see it because we're there, we're seeing behind the scenes, but for a lot of people, I think in the next year, they're going to realize how much the country has been transformed and how they better not wait any longer to get down and be a part of it.
I think in the next years, it's incredible how many people are seeing El Salvador as a plan B. We all know something's coming, we all know something will happen, we don't know when, but a lot of people are preparing themselves and they're not looking in another way, how they used to see, Now they're pointing El Salvador, and a lot of people, I have a real estate company, and I met with a lot of people that are investing now in El Salvador and say, I want to be the first. I know I'm not going to move to El Salvador. I know I don't have to invest in El Salvador, but I want to be prepared. And I think if everyone is talking about that, I think we have to prepare, you know, in some ways. Another thing is like everything that you hear from the media, don't trust. Go and verify. Go and check El Salvador. It's really close from here, guys. It's like we have direct flights from many cities from the USA. I will recommend going, check, and understanding by your own, and then take your own conclusion about what you see, you know? And another thing that I would love to tell you is that you are the change that you want to see. So if there is a person that want to start like a Bitcoin circle economy, a Bitcoin meetup, this is the time. Stand up and start it, because that's another thing that people ask us. How you guys did? We didn't have a plan. You need to start it, you know? You need to wake up and start it. And if you want to see a change, well, you are that change that you want to see in your community, and we all can help.
As President Bukele always says, or he said once, and I say it all the time, actually, it feels like it's him in my head speaking, but he said where El Salvador is going is to the place we want to be. Yeah. So it is really still early. You can come help build Renaissance 2.0. So don't trust, verify, and come join us at El Salvador.
See you in El Salvador.
All right, Pacific Bitcoiners. Okay, we're kind of coming to the end. This is going to be a fun one. First of all, I want to thank Orange Pill app for supporting Pacific Bitcoin. It's a really cool app. If you haven't checked it out, download it in the App Store. All kinds of stuff. It's about community. It's about connecting Bitcoiners and a whole lot more. Again, pacificbitcoin.com/2024. It's the cheapest tickets you're going to get for next year's Pacific Bitcoin. You can get a refund, a full refund until February, so no risk. Go ahead and get those today, pacificbitcoin.com/2024. And you can also go to runningbitcoin.us to support ALS research. It's Fran Finney's foundation, who is the wife of one of our Bitcoin heroes, Hal Finney. Okay, this session is going to be a fantastic one. It features Pierre Rochard, Jimmy Song, and Tone Vase. These guys have been making Bitcoin content for at least 10 years. And they all helped me slay my shitcoins back in the day and wake up to what's really going on and what really matters here, the one money to rule them all. And it'll be hosted by the Cafe Bitcoin host, Alex Stanzik. I think it's going to be a great one. Enjoy it, and let's give these guys a round of applause as they come on.
All right, here we go.
Right, Tone's taking a picture.
I have to set up. Tone's getting his panorama screenshot of the whole audience here.
So Tone is adding to his Instagram story or something. Yeah.
All right, Shitcoin Slayers. These guys need really no introduction. They've already been introduced by Brady, but everybody knows who these guys are. So let's just dig right into it. After a slight investigation backstage a little while ago, we have determined that Tone Vase has been shitcoining. Tone, tell us about your recent shitcoining.
Yeah, I kind of just got rug pulled by United Airlines. So I collect miles from all my travels, like United, American Airlines, Marriott, and it just got devalued like 50%. And I was being like schooled backstage that I'm shitcoining in the airline. So I avoided the shitcoins in crypto, and I just got rug pulled by shitcoins in fiat.
And tell them how many miles you have on United Miles Plus.
I have like 600,000 over there or something.
That's embarrassing.
Rugged by an airline.
And why do you have this many miles, Tone? Why?
Because I wanted to optimize. I don't use them on myself. When you use miles on yourself, you can't earn miles and you can't expense it when you file taxes. And so I only use miles on like other people, and I haven't been using those lately on other people.
Okay, so we need to get Tone a girlfriend with a good passport. So if you want to apply, see him after. Yeah.
I do think, though, that Tone's reasoning or false reasoning here really highlights something that other cryptocurrencies, let's call them poop coins, because my daughter's in the audience, they do create artificial complexity in order to game people's psychology.
Yeah, and that psychology is exactly what was exploited in Tone, because you got addicted to the earning of miles. Much like a lot of Binance traders, for example, get addicted to earning BNB tokens for doing certain amounts of trading and so on. So Tone, it's a little embarrassing, I imagine, to fall down the same dynamic. Are you going to fix this anytime soon? What's going on?
Yeah, I know, I'm learning my lessons, but no, now I gotta hold out and wait for them to revalue them higher. I'm in it for the long haul, man.
NGMI.
Yeah, it's not going to the moon, buddy. Sorry.
No, but there's hope. None of you saw the Trayvon video. There's hope.
This is what some Bitcoiners call climbing Mount Stupid. So as Bitcoiners, many of us have experienced this where from time to time, we'll do dumb things with shitcoins as we're learning. It's the cost of our education. Do any of you guys have any interesting or funny climbing Mount Stupid stories aside from what Tone's doing right now?
So, something that people often say is Bitcoiners are closed-minded, and so they don't really understand what these other cryptocurrency systems are doing. And I made the mistake of exploring the Ethereum ecosystem by getting some ETH. There was a service that allowed you to swap your ETH into a Sats and a Lightning channel. And I wanted to see if this service actually worked. It didn't. So total loss that I wrote off, and I should have known better given my history of critiquing Ethereum, but there we go. And that's why when people say, oh, Bitcoiners are not experimenting with these other cryptocurrencies, maybe make something that is not a total loss every time we try to experiment with it. That would make it more interesting.
Yeah, I think I tried to trade ETH one time. And I think I bought like the top against Bitcoin, like literally bought at like 0.15 to try to trade it. And that taught me a lesson that I'm a terrible trader, despite being friends with Tone. And I shouldn't do that, like, ever. And yeah, that wasn't like anything related to their functionality. It was just, hey, there's some momentum. Let's see if I can ride it. Terrible idea. Terrible idea.
Are any of you guys friends with Vitalik?
Wait, what was that?
Are any of you friends with Vitalik?
Oh, no, I met him once, and he always has like a crowd around him, like some sort of god, but yeah, no.
Well, I did debate him last year at La BitConf, so that's like on stage and stuff, or on YouTube. I do have some history with him. I won't get into it here. You can go search a podcast, but suffice it to say that I think he's just like a developer coming out of college, thinks he knows a lot of stuff and refuses to use any existing technology. And because he's running a Ponzi scheme, he gets away with never having to admit that he's wrong, ever. So he's just not a very good coder. What can I say?
Okay, then. So let's dig into a couple of other areas here. This is a Bitcoiner conference, full of Bitcoiners. If there are any non-Bitcoiners here, they probably aren't saying that. I think some people wonder sometimes why Bitcoiners are so, what's the word? Sometimes, occasionally hostile towards people who are trying to sell you their other things. So the question is this, any of you guys can answer this, you can all answer it. Are shitcoins good in any way? Is there any good thing about them, like maybe testnet?
I'll take the devil's advocate position on that. I do think that their marketing can appeal to folks who Bitcoin's marketing, using that term loosely, does not appeal to, and it hooks them into this idea of using cryptography in order to have some kind of monetary system, and then they learn the hard way as their investment doesn't pan out, and they start looking at, okay, well, maybe I missed something with Bitcoin. Despite its marketing not appealing to me at first sight, maybe there's something there. And so I do think that it is potentially part of the top of the funnel in terms of converting from normie to Bitcoiner. And I know that there's lots of people who started out shitcoining in that world and then eventually found their way to just being Bitcoin only.
Yeah, I would add to that. It would be more like it's so full of bear traps, and you get caught in it and you suffer. So in a sense, shitcoins are a world of pain. And that pain is useful because it eventually leads people to question the monetary system and see the virtues of Bitcoin for some people. Other people like the pain. I don't know if they're masochists or something, but they just continue in the degenerate gambling or something like that. But the lesson can be learned in that space easier than it can in the fiat world, where being rug pulled by a currency is a multi-decade process.
Yeah, and I think that even people, those who do convert into Bitcoin only, offset that with the people who get burned on crypto and then kind of write it off as a whole. And they assume that Bitcoin is just like the token that they got rugged on, and they move on to AI or some other fad.
Yeah, so I would say they're definitely a net negative, but if you want to point out a couple of positive things, it's people get burned there, and people maybe learn a lesson, but vast majority of the people don't learn their lesson and get into degenerate gambling.
I'll jump in real quick. It is definitely a net negative, but are there instances for a short period of time where a shitcoin is potentially useful? Yeah, probably. But it's for a very short period of time, like in 2017, when Bitcoin fees were just crazy. And if someone wants to, before Lightning existed, and if someone is going to send you a $1 donation, it would actually cost you more than that to move it out when you move the rest of the Bitcoin out of that wallet. Was Litecoin useful during that 1 month stretch? Yeah, maybe, probably, but it's 1 month. Other than that, the price will keep going down, down, down. And overall, it's just not worth it. And as long as Bitcoin adopts second layer solutions, they're all going to be not very necessary. And as far as them being a test net, my best analogy is, well, are you going to invest in Tesla, or are you going to invest in crash test dummy company that is a necessary component, for Tesla, but how many people are out there investing in crash test dummies, even though they kind of exist and they're there and they're not going to go away because they're kind of useful, but they're not an investable thing.
Yeah, that's a fair point. So one thing that I've wondered about is, do you guys have any thoughts on how much capital has been burned in shitcoins? Like, it's probably a lot.
I'd say it's about Bitcoin's market cap of $400 billion. I'd say that in terms of capital that has been burned, but then going forward, I think that because they're all trending towards zero, there's still a lot more capital that is going to be burned from these experiments that they're running on the public.
Yeah, you could kind of tell by the excesses of the altcoin industrial complex. When they're hiring Snoop Dogg for like a conference to do a party, that's all money that's getting burned. When they hire Tom Brady to do a 60-second commercial, that's money that's getting burned. So I actually think it's probably greater than 400 billion. Just SBF by himself might be 400 billion. There's a bunch of other, VC funds and stuff like that invested in a lot of this stuff. And if it's getting wasted, if they're throwing lavish parties, giving away Lambos and stuff like that, that's waste. So just given what I've seen of altcoin conferences and the giveaways they have and stuff like that, I suspect I don't know, 800 billion, I think, would be a conservative estimate.
What do you think, Tone?
Yeah, Jimmy's right. Look, it's money that kind of enters the economy. As long as it's, if they're going to use it to, buy a Lambo and give it away, I don't have as much of a problem with that than what SBF did and using that money, to bribe politicians. That's when it's really bad. But if they're gonna, blow it on a big conference, that's money that's entering the economy of, kind of evens out. But yeah, it's a lot of money being, could have been used more wisely.
I'm gonna disagree on the broken window fallacy that you just had, but yeah, all that money being wasted in an economy just is kind of wasted. It doesn't enter the economy. It's just sort of high time preference people living it up. It doesn't make a benefit.
I was just going to say Lambos are a shitcoin too, so I don't buy the argument that converting your shitcoin into a Lambo is good.
All right. Would Bitcoin be more valuable in US dollar terms if we didn't have a whole bunch of shitcoins sucking up all this capital?
Okay, I feel very strongly about this, so go ahead. No, I don't think so. I think that essentially because Bitcoin can only absorb so much capital, that the wider crypto ecosystem becomes a pressure release valve that capital spills into. And so we like to think that Bitcoin could go to the moon overnight. That's what I first thought when I was getting into Bitcoin. But the reality is that people are going to want to rebalance their portfolios. And so if Bitcoin goes up 10x, you're going to have lots of sell pressure. And the people who are looking at whether to buy Bitcoin or not, they're looking at it and saying, it already went up 10x. And so they assume that the gains for Bitcoin are in the past, and they're going to naturally be attracted to other cryptocurrencies. But if those other cryptocurrencies didn't exist, I don't know that they would buy Bitcoin. I think that they would sooner go buy some piece of real estate or something else. So I don't think that Bitcoin's market cap or price would be any higher today if magically we were to wave a wand and there'd be no S coins.
No, I'm actually going to disagree with that. I think it would be higher. One of the reasons why Ethereum is still around is because people are still creating a lot of these shitcoins on top of Ethereum. And not that I care about these things, but in a free market, if all of those shitcoins and ERC20s started out being created on a side chain of Bitcoin, thank God it's not on the main chain, but if it was on Liquid or on RGB, I think that would bring the price of Bitcoin higher because it would be like the ultimate fundamental underlying layer. I understand why people don't really buy BRC20s. I don't think they're going to take off. Shitcoins on Bitcoin don't take off because your underlying speculator in those shitcoins on top of Bitcoin is a Bitcoiner who can see through it. And anyone building shitcoins on top of Ethereum, their underlying investor is someone that's already proven that they don't believe in sound money or they wouldn't have Ethereum to begin with. But overall, I do think that the price of Bitcoin would be higher if Ethereum wasn't around.
I'm going to disagree with both of these guys. I think Bitcoin would be higher, but not for the reasons that Tone stated. So I think Bitcoin would be a lot higher without altcoins. First of all, because altcoins have tarnished the Bitcoin brand significantly. It's thrown a lot of confusion around it. People think that it's something that it's not.
That's a good point.
They're all the same, blah, blah, blah. So the actual real value proposition of Bitcoin, that message has a hard time getting out because of the narrative around crypto. So I think that would not be there. And because of that, I think if Bitcoin does 10x, there are going to be enough true believers to grow that base of belief, right? The real people, the sellers of last resort, or the buyers of last resort, the people, the real believers that make up most of you guys, hopefully, that would have grown faster. And instead of this confusion, there'd be a lot of clarity. I don't think RGB or liquid tokens would have taken off instead. I don't think they add that much value, honestly. And I speak as a former Color Coins developer from 2013. I've been watching this stuff for a long time. If it's a centralized issuance of something, then it doesn't need to be on a blockchain. And you're still trusting a third party. And this is true of a lot of things. Now, it can be useful, I suppose. I mean, we can talk about Tether if you want. But in a sense, that's not where the money's going. The money should have been going into store of value, something that you can save in. It's a great savings technology, and we're still having trouble getting that narrative out because of the existence of altcoins.
You know, something else I wonder about is venture capitalists, VC firms have been able to make a killing with shitcoins. Basically, they get in, they fund these things, they're issued a bunch of tokens that they get to sell to the public, and they reap a huge windfall. What I wonder about is how much VC money might have gone into Bitcoin instead. I don't think it's much because the incentives are pretty screwed up. Like if you look at how much VCs have to gain with the game that they've been playing in terms of churning shitcoins, but would some portion of that instead have gone into Bitcoin, and would that maybe have affected the equation as well?
Yeah, I suspect that some of it would have gone into Bitcoin, certainly because, I mean, a lot of it goes into Bitcoin already. Like what a lot of people don't know about a lot of these crypto VC funds is they do a capital call and they put like 30-40% into Bitcoin because they know that then they're playing with house money, that they're going to be okay and they're going to have some returns and they're not going to really lose after the 5 or 7 years or however long the period of the investment is. And then they use the rest to try to pump and dump and like beat Bitcoin in that way. That game's been going on mostly because of the fiat side. The money printing I don't think would have stopped because Bitcoin existed, but maybe it does, right? Like, in a sense, like, if you have sound money and it's clear to everybody that there's sound money and there's no altcoin to sort of muddy that narrative, then it's entirely possible that a lot more people choose to put money into Bitcoin instead of VC funds. And instead of having, I don't know, like 20 different crypto funds that are out there, all that money maybe goes into Bitcoin instead. So, you know, in another way, that would have increased the price of Bitcoin, decreased the influence of VCs, and so on.
I think there's the VC part, and there's also the developer part. So perhaps there would be lots of developers who today are working on other, altcoins, but in a different set of incentives, they would actually be working on Bitcoin and Bitcoin companies, and the VCs would have more investable opportunities out there because arguably more VC money can't go into Bitcoin companies today because there just aren't enough investable Bitcoin companies to allocate capital to.
And also some of the better Bitcoin companies, they didn't rely on VC money and they were able to choose their own direction. So it doesn't mean that this would have been a great thing because sometimes VCs do want you to move fast and break things so they can cash out. And in Bitcoin, that doesn't really work.
And that's a great point, because if you do have more entrepreneurs that are creating Bitcoin companies out of their savings instead of just going the VC route, maybe we'd have a healthier ecosystem or more robust ecosystem, more jobs for people that wanted to come into Bitcoin and so on. Overall, I think altcoins have massively damaged the potential that Bitcoin had in the sense of like the opportunity cost. Thankfully, reality is striking back, and you're seeing more of a Bitcoin focus everywhere in the world as these altcoins continue rug pulling, continue disappointing. A lot of these disillusioned people maybe take a second look at Bitcoin, and that's the hope anyway.
Okay, so I've seen a lot of charts, shitcoin charts in US dollar terms. They resemble what I call a pump and dump. So these are stock plays that basically they'll make all kinds of claims about how cool the technology is and how life-changing it's going to be. You see the stock shoot up, and then it kind of does this thing as it slowly dies a death after that. What causes these things to fail? Why are they not coming to fruition, doing the things they say they're going to do?
I'll jump in on it. Like, a lot of them never actually fail. Like, the token is still around at a very low price. But it's the same thing. It's why I always anticipated like Celsius would go the way it did. When you launch your project with a token, the one thing that keeps the project alive is the price of that token. Once the price of the token comes down low enough, there is nobody else to pay for development. This is the same for all of these other blockchains as well, and individual companies. Eventually, it will happen to Ethereum as well. So the situation, just like with Celsius, once the price of that token is low enough, they don't have the money. They're not going to be able to put their names on stadiums anymore. And it's expensive. I don't know if I don't mind naming names, but like, I don't know how much sponsoring all of UFC costs, but eventually Crypto.com, like, I don't know where they have the money to sponsor every single UFC fight. And I think a lot of it still comes from the value of that token. And if the value of that token drops low enough, how do you pay for that sponsorship? Like, where's the money going to come from?
Yeah, that whole dynamic is, of course, caused, ironically, by fiat money, right? The insane money printing, zero interest rates and stuff like that means that there's all this money that needs to find a home, needs to find some sort of savings vehicle. And because a lot of VCs can't just put it into Bitcoin, although they do some of it, they need to beat Bitcoin. They get into these weird games where they'll have to fund these other things and do the pump and dump thing, and that's a better return for them. Unfortunately, most of these altcoins are essentially companies. This is why when they run out, when the price of the token gets low enough, that means their own treasury is very low because they keep a large pre-mine, right? So the treasury gets low, then they can't pay anybody, and at that point, it's kind of over. And that's a dynamic we've seen over and over and over again, and it's not going to stop. There's so many of these altcoins where they don't have money anymore, right? And they can't continue to function. Now, some of them are going to last a lot longer than others. I think EOS has like 100,000 Bitcoin or something ridiculous. So you can expect that one to last a while, but the people there seem to know the game, that they can live off of this and rent seek off of this money that they collected from suckers for a long time. And that seems to be sort of the strategy that they're taking instead of being true believers and trying to create something for the ecosystem.
Just to add to that, and Pierre will probably elaborate on it, this is why no other proof of work coin will ever succeed. Because eventually, no one is going to want to mine it. The cost of mining will be higher than the value of the token. With every halving Litecoin experiences, it loses more and more hash rate, and eventually, just like Doge, it ends up in a mining death spiral, and it has to merge mine with the coin above it until eventually there's only one proof of work coin left. It's the same thing for non-proof of work coins. Same concept, but it's easier to picture it in a proof of work setting.
Yeah, for the non-proof of work coins, I mean, I saw a commentary about how with US dollar interest rates being higher than the yield on staking Ethereum, that this created a massive problem for the sustainability of their protocol. And I think that it goes back to the question of how does an altcoin differentiate itself from Bitcoin? Let's keep in mind that Bitcoin is engineered to minimize uncertainty of the system, to maximize freedom for the users, to empower people to control their own money. So to differentiate from that, you have to reduce how much freedom people have. You have to reduce how much people can control their own money in order to create some marketing gimmick about how you're generating yield for them, or you can put JPEGs onto the blockchain. So once you're taking those trade-offs are going to catch up to you, and they're value destructive in the long term. So after that pump and dump in the long term, you don't really have any value there that is going to help drive the economics for the token. And I think that's ultimately why Bitcoin edges out these other cryptocurrencies.
All right, very good. Let's switch gears a little bit. One thing that I think people wonder about is these things called stablecoins. All right, so what the hell are they? Are stablecoins shitcoins, or do they actually have some value to the economy or at all?
But so, yeah, it's a good question. I mean, my take on stablecoins is that they're a form of regulatory arbitrage, that they allowed you to use the US dollar without having to deal with as much KYC AML as a traditional financial system. And so in that regard, they do increase financial inclusion for folks, but at the end of the day, they're still fiat, and they're still tied to the value of the dollar, and there's, the Federal Reserve is still going to print more dollars.
I'll jump in real quick. So it depends on the type of stablecoin. If it's an algorithmic stablecoin, it is a 100% shitcoin. I don't see how that's debatable. Now, if you have something like a tether that is redeemable for US dollars, where the US dollars or equivalent to cash, like short-term treasuries, are being held, that's a little bit debatable. There are additional risks that come with that, like the government can come and confiscate that money. But I don't really consider that side a shitcoin. And then there's in-between stuff where you have like smart contracts locking up crypto, and that's on the border somewhere.
Yeah, so this is a question that every altcoin advocate comes up with as soon as you say, all shitcoins suck or whatever. It's like, oh, but stablecoins are an altcoin. They're not so bad. And in a sense, I agree. Like they're basically bank accounts for people that don't want KYC, AML, for people in other countries that don't have access to US bank accounts and so on. But really, they're a shitcoin because they're fiat. Fiat money is a shitcoin. US dollar is a shitcoin. Euro is a shitcoin. Yen is a shitcoin. All of those are shitcoins. So in that sense, it is. And I don't think they're any better. They're centrally controlled. So ultimately, what we have is Bitcoin, which is a decentralized, digitally scarce money. And you have everything else, which has some trusted third party, some centralized controller, somebody that can affect your savings without your consent. That's the difference, and that's why we need to get rid of altcoins. Altcoin delenda est.
Awesome.
Go. Last comment, and we're done. Don't shitcoin. It's really bad for you. Gentlemen, thank you so much. Bitcoin Slayers.
Thanks, Alex.
Shitcoin Slayers.
Hello again, Pacific Bitcoiners. All right, we've got 2 more sessions left. today to wrap up Pacific Bitcoin 2023. This is the best opportunity for you to grab your tickets for next year. If you had a good time here at pacificbitcoin.com/2024. Lowest prices you'll get, and it's fully refundable until February, so no risk. Go ahead and lock that in. And we've got a fantastic interview here with the founder and CEO of Swan, Corey Clipston, interviewed by Kitco's Michelle McCory. It's going to be a good one. Let's give him a round of applause. Thank you.
All right, Corey and McCory, I love it. Very good to be here, great energy, very exciting. Before we start off, Corey, I just want to acknowledge something that you shared with me personally that I found very touching. And the song that was playing as we got up on the stage was in fact performed by your late brother, Matt, who sadly lost his fight against brain cancer. But you wanted to play the song as a tribute to him and an acknowledgement to him. And for me, that shows how personally invested and connected you are with Pacific Bitcoin, and the mission.
Yeah, it was really nice to hear a couple of bars of Fever. I know the feeling, you got the fever. And he wrote that a long time ago, but as I got into Bitcoin and then he also got into Bitcoin, we used to make jokes about how appropriate that was. And actually, we actually cut 8 episodes of a podcast in 21 just before and after his diagnosis, and we were using that song as the intro music for the show as well. So,
aptly named Fever, and I think safe to say everybody here has Bitcoin fever or orange fever. So let's focus on where we are now that it's the second Pacific Bitcoin conference. And a lot has happened in a year. A lot can happen in a Bitcoin year. Last conference took place in November, and that was exactly the time that we saw the FTX scandal start to collapse and unravel with SBF. Now, you, Corey, actually highlighted that SBF was a fraud and a scam via tweets and interviews long before any of this broke out. In fact, when he was seen as the golden boy of crypto, you were waving a red flag around him and around FTX. And it's due to some of your work that the whole fraud got exposed. I believe a CoinDesk reporter gave you the balance sheet of Alameda to analyze, and you flagged that there were some very serious issues there and actually led to this whole thing unraveling. So thank you for your service there. But where are we, right? It's a year since then, give or take more or less. SBF's on trial. Bitcoin was 16,000 then. It's recovered. Where are we in terms of the fallout from the FTX collapse?
yeah, it's still roiling a bit, and it's still a bit uncertain which way things are going to go broadly. There's obviously a lot of litigation continuing to go on, some civil suits, a lot of actions by the SEC against various players in the crypto industry, and of course, the backdrop of the current actual trial of scam bankster fraud, as we started calling him last year, and we'll see what happens with that. I would say versus what I would have thought would happen maybe looking at this a year ago, I would have actually thought the legal and regulatory backlash against the crypto platforms would have been quite a bit more or more effective. Right. So this I would say is a lot of people getting away with it so far. Got a lot of people that did really bad things just kind of still hanging out on boats and moving to Dubai and Singapore instead of being in jail. So yeah. I think most people got away with it.
Yeah, well, on the regulation front, it was thinking that this would, in a way, lay the groundwork for regulators to march in with ferocity and indignation and really attack the sector. I mean, we're still seeing regulation being very vague and hazy, potentially by design, but we didn't really see that tremendous backlash. In fact, on the contrary, we could argue that we're seeing potentially more acceptance in the sense that we could have a spot Bitcoin ETF approved. Looks likely. Before we get into that, we're also seeing a landscape where Bitcoin has become an issue in a presidential race. I mean, it's fascinating to see that it's a bipartisan issue being talked about by, well, one of the leading Republican candidates, Vivek Ramaswamy, a big Bitcoin proponent, and Democratic challenger, potentially running as an independent, RFK, saying that if he wins, he would back the US dollar with commodities, gold, silver, and Bitcoin. I mean, that's a pretty momentous place to be a year later. How do you see Bitcoin playing out in a political sphere?
Yeah, it's interesting. I mean, you can certainly garner a lot of support from people that have Bitcoin at or near the top of their list by coming out for Bitcoin, and that's just good marketing in general, as we've seen for almost any product category. There are a lot of Bitcoiners around the world that will like you and your show or your merchandise or your conference or whatever it is if you come out and start doing good things for Bitcoin. The worry that I think a lot of us have with some of the politicians is a lot of times they hang up a flag and say, go Bitcoin.
Right.
And it's actually kind of a...
You mean we can't trust politicians, Corey? We can't take what they say at face value?
It's been said. It's been said. And a lot of times they're really just kind of hanging up a flag and saying, hey, I'm open for business. And then essentially the altcoin scammers come and start funding their campaigns. And then they start inserting and crypto into all of their speeches and their policy statements. And essentially all of this legislation that's being drafted by the people that came out pro-Bitcoin 2 years ago is actually being drafted by Consensus, Blockchain Association, kind of all the crypto people are drafting the legislation that's coming out from these formerly pro-Bitcoin reps and senators.
All right, so concerned that they're not just interested in Bitcoin, but pandering to the crypto crowd at large, and that may not have the best ramifications for Bitcoin? I mean, would the downside would be what?
In the long run, it doesn't really matter for Bitcoin. It's just another example of essentially if you say you're going to regulate something, then the industry that's going to get regulated is going to come and pay for capturing it.
But again, Bitcoin itself is a bipartisan issue that has bipartisan support. I mean, it's one of the few issues that there is agreement on across the aisle, and not just on the presidential candidate side. We've got Senator Kristen Gillibrand from New York agreeing with Senator Loomis. That's very rare in today's Washington. So in the context of that, given that this potential support, does it protect Bitcoin from the tail risk of an existential crisis of being outlawed? Are you comfortable at this point saying that Bitcoin in the US will no longer be outlawed?
So, as anyone who was here last year knows, I see this in the framework of the race to avoid the war, and this idea that if you can essentially flip US society to the point that there are enough people that own a lot of Bitcoin and are willing to fight for it, where it's kind of their single issue that they care the most about, then it will just be impossible to ban Bitcoin on-ramps and be sort of have the State Department coordinate something, through all branches of government that would come down hard on Bitcoin and Bitcoiners. The risk is not zero.
It's still not zero.
It's still not zero. It looks like zero because if you look at the government the way it is today, you can't imagine that happening. But what we don't know is what this government will look like in 7 years, in 10 years, in 15 years, especially given the cracks in the system that are showing and what cracks in the financial system and sort of the economics of a country tend to do to your governmental system. It's usually a backslide into some sort of totalitarianism or tyranny that follows, and then you could see something done much more in the way of just executive orders or something like that that could be stupid, rushed, and bad for Bitcoin and Bitcoiners.
Yeah, all right, fair enough, especially as, it is in a way a threat to central bank fiat printing, so that may change the course of how things develop in Washington. But we have the BlackRock spot Bitcoin ETF looking like it could be approved, and we'll get into the pros and cons of that. But BlackRock, world's largest asset manager, around $10 trillion of assets under management, arguably one of the branches of government in terms of the political influence that BlackRock enjoys, very tied into the establishment, So the fact that BlackRock has applied for the spot Bitcoin ETF leads one to believe that it will get approved. BlackRock has a near perfect record of ETF approvals. They filed for 550 and only got one rejected. So the math is in their favor. And it's a very big turnaround from Larry Fink, who back in 2018 said that Bitcoin was essentially an index to see how much money laundering has been done in the world. Quite the about face there. But here we are with Bitcoin, with BlackRock looking to launch the spot Bitcoin ETF. What are the chances that it gets approved? Do you think that this will happen?
Yeah, I mean, it looks really likely that a few ETFs will be approved probably in 2024. I expect them to be live and trading. That's kind of my mental model for planning what we do at Swan and thinking about how things will develop. You know, that in 80% plus likelihood is probably where I'm factoring that in. And it will happen unless something different happens. It's on that path to definitely happening unless something comes out of left field and stops it.
Right, and a number of BlackRock insiders have said that they do believe that several will be approved at once, with some of the leading players. That collectively is $19 trillion of assets under management that could go into the Bitcoin space, and it could lead to an inflow of $150 to $200 billion into Bitcoin investment products over 3 years by some estimates. The question is this actually a good thing? It may be good for the number go up people, it may be good for the price, but is it contrary to the decentralized sound money mission of Bitcoin? If we have BlackRock, which would essentially take custody of a large chunk of Bitcoin, centralizing it, BlackRock also moving into the mining space. It's bought shares in 4 of the largest miners, so sort of taking control of the Bitcoin ecosystem. Does that jeopardize the ethos of Bitcoin, the decentralized mission of what Bitcoin is supposed to be?
Well, I think you meant to say taking an economic position in the Bitcoin ecosystem, not control. Because neither of things give you any control. Taking a concentrated position, right. Yes. Well, taking custody of a large chunk, but it may move its tentacles to have control over the ecosystem. They can certainly try. They can certainly try. But again, you know, them owning shares of Bitcoin miners, and again, only some of the Bitcoin miners that happen to be publicly listed in the USA, which is not all of the hash rate or even close, and also doing that largely on behalf of their clients, not themselves. It's not their own balance sheet that's investing in these. So that one has never really bothered me at all, and miners don't control the network anyway, the nodes do. As far as you know, political influence, you know, and what does it mean to have all this Bitcoin under custody? You know, Satoshi and Hal wrote from the very beginning that there were going to be funds of, you know, holding Bitcoin and banks holding Bitcoin and their buyers as well, right? A business is just something that's owned by a group of people and controlled by a group of people. So whether we like it or not, it's inevitable that governments, pension funds, asset managers, banks will hold large chunks of Bitcoin. They're not going to do it the way that we do. They're not going to have self-sovereign money. They're going to have, you know, committees sharing keys and voting on different things, and it's just not as good a product. Paper Bitcoin is not as good a product as self-sovereign money in your cold storage.
Well, sure. And again, that's what I'm saying. Does it defy the whole ethos of Bitcoin of being an independent form of money away from the institutions? Are we ruining this perfect form of pure sound money by putting it in to a broken system? Because with an exchange, if you buy into the exchange-traded fund of a spot Bitcoin ETF, it'll probably be appealing to a lot of retail investors that are intimidated by self-custody and wallets and exchanges. And I've heard about Bitcoin, want exposure to it, and this is an easy way for them to do it. But they're not actually adopting Bitcoin. They're buying shares, so they're not actually taking control of their money and sort of liberating themselves in the way that it's supposed to be. Like, is spot Bitcoin ETF adoption actually Bitcoin adoption?
No, it's not, but it's further down the funnel than buying altcoins.
Okay, so less bad.
Yeah, it's less bad. It's a better top of funnel to get toward understanding Bitcoin, because and this is something that you and I have talked about before. You know, when I think about a business like Swan, or businesses like Bull Bitcoin, that are doing the Bitcoin on-ramp thing and Bitcoin adoption, this is a massive improvement for us, because instead of having to make the pitch to someone, hey, I see you're buying these altcoins, those are a scam, implicitly that makes the person feel attacked. It's a bruise to their ego because they feel like they got scammed, or that they're hearing from a Bitcoiner that they got scammed. It's a massive, really, really hard for somebody to get over that.
You're very good at that,
and
yeah.
be ego-free, right? Now, if we have Vanguard, Fidelity, BlackRock, Van Eck, all these people pushing Bitcoin education, they're handing out books by Lynn Alden and Safety and VJ, and pointing to Bitcoin podcasts, and hiring Bitcoiners to go and hawk their wares or whatever. Now you've created a top of funnel baseline of Bitcoin education that has people partway down the rabbit hole, and all we have to do is step in and say, thank you for the $500 million of free marketing that we didn't have to pay for. Here's real Bitcoin, and it's cheaper than your ETF. And we can convert the whole world from the ETFs into real Bitcoin.
All right, so that's an encouraging note. You'll use them to help promote the mission, to help promote the message. So not necessarily seeing it as a threat to companies like Swan that advocate for self-custody and adoption. On the contrary, you think that it'll help with the messaging?
Oh yeah, this is like probably the most bullish thing happening next year for the financial services part of our business.
All right, I want to, we touched a little bit on the miners, but I want to go a little bit into the rabbit hole of one of the conspiracy theories there, because I do think it's interesting when you have a company like BlackRock do this sudden about-face, a company that is very aggressive in promoting an ESG narrative, and has actually said that it uses its clout to force what they call good behaviors. And there is some concern that if they move into the mining space and take control over the ecosystem, that they could use that to convert the network from proof of work to proof of stake at some point. And the reason that this is being flagged is that in BlackRock's application for a Bitcoin ETF, it states that should Bitcoin experience a hard fork, that is, an agreed upon change to its underlying code, BlackRock will use its discretion to determine which version of Bitcoin is the appropriate network for the trust's purposes. So the thinking is, BlackRock comes in, large Bitcoin ETF, becomes successful, heavily funds Bitcoin development, proposes regulatory and eco-friendly proof-of-stake fork, loses community opinion, but adopts the fork as Bitcoin anyway, and proof-of-work fork becomes, for pirates in El Salvador and outside of people. And I'm using journalist Chris Black's sentiment here. Is this something that concerns you? Do you see that happening?
So I love to put percentage weightings on scenarios and talk about mental models and things. This is literally not in my threat model at all. So I discount that to 0.
All right.
It's just not an issue.
Not something that's keeping
it would just
Corey
be
up at night.
There's so many people that have so much money that are so smart and understand Bitcoin so well that there's just absolutely 0 chance that BlackRock trying to fork to a proof-of-stake protocol would be anything but just an embarrassment and losing all the money of the people that unfortunately had their private keys custodied by BlackRock.
All right. Certainly helping me sleep better at night. I do tend to delve into the dark rabbit holes of conspiracy theory. So having said all of this, you're pretty optimistic. Let's fast forward to where you see Bitcoin in the financial system, and I'll give you 2 timelines. I'll start off with the very near term, next year's specific Bitcoin. Where do you see Bitcoin in the financial system?
So just literally 1 year from today?
1 year from today.
Okay. So yeah, I think we'll be adjusting to this new world that has the ETFs as top of funnel messaging, and they'll be rolling out massive ad campaigns promoting Bitcoin in sports stadiums and in major newspapers and on CNBC constantly. I think all the talking heads will be talking about Bitcoin basically nonstop because it's going to happen at about the same time as the halving. ETFs rolling out, it'll just be this kind of back in the public scene. It'll skyrocket on Google search and all this stuff again. I don't know what that does for price because usually there's been a lag post-halving before things start to really take off in another cycle. We also don't know, if cycles will keep happening the way they have historically forever. But again, chances are until they stop, you got to kind of bank on something like that happening. So I think it could get really exciting. And then the other thing we've seen time and time again is a loosening of monetary policy in election years. And it does seem like we've probably peaked in interest rate rises. And you've all heard from a lot of the much smarter macro heads on this stage than I throughout the last day and a half that we're probably looking at some loosening of monetary policy, or at least a pause in the rises. So yeah, there's a good likelihood that liquidity starts to flow again next year, and there could be a little bit of my up scenario is that there's kind of a perfect storm of anticipation of a price rise from the halving because of the halving meme, plus the ETFs, plus risk on brought on by increased liquidity. And I don't know what this conference looks like if it's 2 or 3 times bigger. I kind of like it at this size. But just so you know, this crew that puts this on, you can actually do a 10,000 person conference when you put up tents in the parking lots and things like that. So we have room. We don't have to move.
That room for expansion. That may also mean more competition for you on the basketball court. I know you won again. You're the twice reigning champion, but more people, I don't know. You could be dethroned there with the 3-point.
Listen, it's not you can't pry that trophy from my hand very easily. I'm going for 3 next year.
All right, so more people, more competition, but you are still confident that you will be the reigning champion of the 3-point throw. But let's fast forward to 2030. And I use that timeline, 7 years now, for a number of reasons. But one of the reasons is it's a time period that Satoshi highlighted. On Bitcoin Talk, the forum that he used to talk about Bitcoin and advocate for it, and engaged in numerous conversations. In 2010, Satoshi posted, "I'm sure that in 20 years there will either be very large transaction volume or no volume." So 20 years from 2010, that puts up at 2030. Where are we going to be in 2030?
I don't do short-term price predictions ever, but I have been saying for a few years that I think we will be at sat cent parity by 2030, which is $1 million a coin. It may seem aggressive when you're sitting here at 27,000 or whatever kind of extended bear market, but we've seen tremendous rises in the price in bull markets previously, and I do think there was something unique about the last bull market with the billions and billions and billions of dollars of altcoin marketing being deployed to fool people into putting their money into scams instead of into Bitcoin, that just won't be nearly as loud or in the same way, or marketing into an audience that doesn't have counter signal coming from the Bitcoiners, and frankly, a lot of the TradFi space that has started to understand Bitcoin and Bitcoin not being like crypto, counting crypto as all the altcoins. So I don't know. I don't, even though I've obviously put out lots of research over the years about the diminished effect of halvings, and it is fascinating that the price rise leading up to the top of 2013 was exactly 550x. From the bottom to the top of 2017 was 110x. So literally 1/5, and then it was exactly 22x from the bottom, so another 1/5. That's going to break. That's not happening. You can't have a bull market without it going up more than that. So at least that geometric decline in the price rises for each cycle is broken, basically with this next bull run. So I think it'll be over time a little bit more of a random walk, and there'll be like raging bull cycles and small bull cycles. And the idea that you would go, 35x between now getting through 2 more bull cycles before then still seems pretty reasonable. I'm not backing off that prediction. And with that, what's really cool is you only need probably like $500,000 per Bitcoin, so about half that to get to the point where you should see an explosion in the use of Bitcoin as medium of exchange, even in the Western world. So not just kind of edge use cases and niche markets and people attempting to kind of push adoption in local situations, but actually having a lot of people that want to start spending some Bitcoin because it's run up enough, their expectations of the future price appreciation, or the future appreciation in purchasing power, I should say. We're not going to be denominating things in fiat very long.
Well, yeah. I mean, $1 million per Bitcoin in a fiat that's debased to what, I mean, that does put things in perspective a little bit.
Yeah, I've always been a little fuzzy on that, whether we're talking about nominal terms or real terms. I've always said in current day dollars, and I think that prediction for me goes back to 2020. So I would say like in 2020 dollars. So you're probably looking at something like, if that comes true according to my 2020 prediction, you'd be looking at like $1.2 or $1.3 million a coin.
All right. And how do you see Bitcoin moving, let's say, in 30 years' time from that? I mean, at what point do you see it becoming a global standard? Do you see it becoming a global standard?
Yeah, I do. And I think this is one of those things we need to recognize, that Bitcoin is not a product. It's not following a product S-curve like the launch of the iPad or the launch of a social network or something like that. This is a technological revolution. This is something like the advent of steam power or mass production or the information revolution. And these things take, you note them because they disrupt all industries, not just one. And they take 5 to 8 decades. So if you've never read a book called Technological Revolutions in Financial Capital by Carlota Perez, that's where I kind of got the framework, and I've written about this a lot, mostly on Twitter. You guys follow me on Twitter? I do like the tweeter. But yeah, so you look 30 years out, I think we will have progressed to Bitcoin as a mature, widely used global store of value. It will be a widely used global medium of exchange. It'll have broken down lots of friction and false borders between people, and it's now starting to usher in, a new era of, peace and, human prosperity and freedom, because we're able to conduct commerce with each other through the language of money, and commerce brings peace. So it'll be kind of like the resurrection of the Phoenician Empire writ large and global. And obviously, it will also follow that Bitcoin will be at least one of the major units of account. I think the dollar will probably still be around if I'm sort of handicapping 30 years from now. We'll still have the dollar and maybe a couple of other fiat currencies, but you will also be able to price goods and services globally in Satoshis by then.
All right, I know we're out of time, but I do have a final question for you. I'm gonna ask it very quickly, though. You mentioned Satoshi, I mentioned Satoshi. You have so much of your personal life and professional life invested in Bitcoin. I know you shared with me that you were a former journalist. Journalists are inquisitive by nature. Does it bother you on any level that we still don't have clarity on the origins of this phenomenon, this extraordinary phenomenon that you are so invested in and believe in so strongly? Does the fact that there's a big question mark over who is Satoshi cause any kind of unease for you?
Literally zero. Doesn't bother me at all. I think it's fun, but it doesn't matter at this point. Really, it's come too far, and we kind of understand what Bitcoin is. I don't think Satoshi is ever coming back. I also don't think that any of the, named potential candidates for Satoshi are Satoshi. Not a single one of them. I think whoever Satoshi was did a really good job of hiding their identity and disappeared.
All right. I know some have said that it actually gives it a more godlike quality to not know what the origin is, that it helps in the theory of creation. So I'm going to leave it on that note. I'm very excited to see what we can expect from next year's Pacific Bitcoin. So hopefully we'll get a chance to catch up then and see if Prophet Corey, because you've been correct on many of your forecasts, is in fact on the money, and if you're still the reigning champion out there on the basketball court. All right, thank you.
That's a swan.
Cool, thanks.
What an amazing talk. That was great. Two of my favorite people. And I mean, what a 2 days. I have just loved being out in Santa Monica with all of you. So many amazing conversations, so many great panels. There's a really fantastic one after this as well, so stay in your seats. My name is Steven, and I lead the private wealth, private client team for Swan. I've done that for close to the last 3 years. And I mean, it has been one of the things I've done in my life that I'm just like most grateful for, and in no small part from getting to work directly with so many of you guys in the audience. I mean, what a pleasure. Either my clients or other managing directors on the Swan Private team, just fantastic seeing you all, fantastic talking. And for those of you who don't know what Swan Private is, it is our exclusive concierge service for white glove investors. And so this is the best that Swan has to offer. You not only get our education, you get invited to exclusive events. We call these Swan Salons. We host them monthly in Los Angeles and in Miami and probably soon in other areas. You not only get invited to those events, get our best education, our research, but every private client gets a dedicated point of contact within Swan. And so this is somebody that you can call, you can text, you can email, anytime you have questions, not just about Swan, but about Bitcoin or about custody or about anything that you are currently navigating in your Bitcoin journey. So if you're a little newer or you're just looking for that level of service, or maybe you just don't want to be sending an email to Coinbase support and praying that they get back to you. Swan Private is a way to really upgrade your experience and have a personal relationship with Swan, but also with the place that you're doing your Bitcoin business. And it's for individuals, but we also work with trust accounts. So if you have a trust that you want to get exposure to Bitcoin in, retirement accounts, IRAs, 401k rollovers, self-directed IRAs, LLCs, and any other entity accounts that you might have. And we're the fastest in the industry. We can get those more complicated accounts set up in 2 or 3 days, unlike our competitors that you're talking 2 to 3 months on average. So this is something that, I mean, it has been an amazing experience to offer, to work with you guys. And if you're interested in learning more and you want to step into the private experience with Swan, go to swan.com/private, and you can set up a one-on-one call with me, with other managing directors from the private client team, and really level up your Swan experience. And if you're newer to Bitcoin, it's a great way to ensure that, there's so many common pitfalls that people encounter when getting into Bitcoin for the first time. How to custody the coins, at what cadence to buy the coins, where to hold them, what sort of structures, what are the things you want to be aware of. And if you're newer to Bitcoin and you're looking to take an allocation, working with Swan Private can just get you over all of those common pitfalls. You're going to work with knowledgeable experts, and they're not only the private team is composed not just of deep Bitcoin experts, but I mean, half of my colleagues, they've worked on Wall Street for over a decade. They've managed businesses, deep financial expertise across the board. So we're here to help with anything and everything. What a pleasure being with you all here in Santa Monica for the second Pacific Bitcoin. If you have more questions, just go to swan.com/private and get ready because you're really going to enjoy this next panel. Thank you.
All right, we made it, everyone. Thanks for being here for the last session. I want to give one final thank you to Marathon, the official mining sponsor of Pacific Bitcoin. And remind you all again that you can grab tickets for next year at the lowest price that you'll have a chance to buy them at pacificbitcoin.com/2024. They're refundable until February, so no risk. Go ahead and grab those now. Lock in that low price. Finally, the Bitcoin trading cards booth, just out that curtain right there, has a raffle going on, giving away super rare one-of-one trading cards that sell for thousands of dollars on the Scarce City Bitcoin auction site. So I'd suggest grabbing some tickets and have a chance at winning those extremely valuable cards. For the final session, we're going to bring out two of the most tenured Bitcoin educators in the space. Max and Stacy have been talking about Bitcoin on broadcast television since 2009, since Bitcoin was trading at about $1, so maybe 2010, but Kaiser Report started in 2009. Now they run the Orange Pill podcast. They're also living in El Salvador and working to make volcano energy a source of energy for Bitcoin mining, which is a very cool project. And they'll be interviewed by none other than Peter McCormick, who is the host of the largest Bitcoin podcast in the world, What Bitcoin Did. Please give me a round of applause for the final act of the show.
All right, should we get on our feet? Get on our feet, congratulate. Come on, up you get. Everyone up. Up you get. Stop playing it cool. Stop being cool, get on your feet. All right. Everyone at Swan, everyone at Pacific Bitcoin, another great event, yeah? All right. Max and Stacy. The Harry and Meghan of Bitcoin.
Oh, what? Woohoo! What? What'd you ask?
You're the Harry and Meghan of Bitcoin.
Oh, you're so British, aren't you?
I'm so British.
When you first interviewed us with your podcast, and we were like your third guest, you called us the posh and Becks of Bitcoin.
I did.
So this joke now has traveled through 10 years, all the way up to the Meghan and William of Bitcoin.
No.
To give you a story, we've been together doing this for a decade, us.
I was an hour late for that interview.
I know.
You were really pissed at me.
I was already agitated. We were in London.
London. We've done this a few times. It's been a while.
Yeah.
How you been?
Are we at a conference? Who are these people here?
We're meant to talk about Bitcoin country.
Oh, yes. Yes. The one and only. There is only one.
There's only one Bitcoin country, and you guys are living there now.
We're living the life.
So I've been there a few times. I went there first in 2019. I met Michael Peterson in Uruguay outside La BitConf, and he said, I've got this little Bitcoin project happening in El Salvador. Do you want to come and see it? So I got on a plane 2 days later, went out there and saw this project, which was a seed, which over the next couple of years grew into a country adopting Bitcoin as a legal tender.
And you had back surgery.
I did.
And that was a rough trip for you to make.
Not that first one, the last one, I couldn't sit down.
Yeah, that's fantastic.
That was rough.
That was a very big effort to get down there and do that interview.
But I haven't been there for a couple of years, so there's perception when you're outside and there's perception when you're inside, and I know they're two different things. So update me. What's going on in El Salvador? What is the state of play?
El Salvador is winning. Whee! That's what I always say. Well, I have to say, President Bukele makes it look very easy, but it's a lot of hard work. It's proof of work. We work our asses off. We have a lot of Salvadorans here. They all work their asses off. Like, we do not stop. I know Max and I are working like 80 hours a week.
Yeah, we're always working.
Max thinks we should, basically, Max and I feel like the Love Boat. You know, well, probably everybody here is too young for that, but there used to be a TV show called The Love Boat, and we feel like we're the captain. What was the captain's name? Steuben or something like that?
Yeah. No, we had that. We were walking down the street one day, and this couple comes up to us, and they say, "Oh my God, Max and Stacy, you're the reason we moved here. And what are the chances of us meeting you?" And we said, about 50%. It's because every day, you know, it's like everyone kind of comes down the same path, and we end up meeting everybody. So we're like the welcome wagon into El Salvador. It's like, welcome to El Salvador.
How many times had you been there before you made the move?
Well, we went in November of 2021. Then we went back to the States. Then I think we then decided to move back. And we moved in, so we officially kind of moved in within 3 months. We had moved in, right?
Yeah, we went back January 3rd.
January 3rd.
Well, of course,
you did.
The only day that you can move there, right? But
right.
we moved there January 3rd of 2022.
2020.
So, and then we went to meet President Bukele to, we were going to do an interview, and then we ended up working for him instead. And we still haven't interviewed him, but now we're like, you know, we work for him. So it's so you have the exclusive of the Bitcoin podcasters.
So far.
Yeah. Okay, but that's a quick turnaround. If you go in November, you move back in January.
Yeah.
What was the deciding factor? Why did you decide to make that move? Because you've traveled a lot with the job. You've been to, like me, you've been to loads of countries. But what was it about El Salvador where you went, we got to live there?
Well, I guess personally for me, how I get motivated, when I got into Bitcoin, when we first did our first episode of Bitcoin, you know, John Matonis had reached out to us and said, hey, I'm going to be in Paris, where we were filming the Kaiser Report at that time. He said, can I come talk to you about Bitcoin? I was like, what the fuck is Bitcoin? And this was in early, it was in like January 2011. He had emailed me, and he explained it. And I said, hey, Max, because Max created the Hollywood Stock Exchange, there's a thing that's like the Hollywood dollar on the Hollywood Stock Exchange, and this guy's going to be on the show. So he interviewed him. And you could see Max instantly knew it was like different, and he got it. But I didn't. But the comments like were filled with hate. Like on the YouTube, everybody's like, they called it a shitcoin. They said that Bitcoin, more like shitcoin, in that first episode of, I think it aired in April of 2011. And people were really angry. And one guy said, this sounds like a scam. So you're saying there's 21 million coins, so whoever invented this is walking, it was $1. They're walking away with $21 million? Like, what a scam. So that turned me on of like, why does everybody hate it? Like, I thought it was just like this toy thing. And so then we started booking more guests and more guests. I'm like, why does everybody hate you? But the same thing with El Salvador is like, it was so much FUD against El Salvador. I said earlier, like when I was, when we were on the runway in Miami to take off to El Salvador, you know, we were coming for the Bitcoin conference, and Rodolfo, the organizer of it, said, hey, we're so glad you came because nobody was coming beforehand. We couldn't sell any tickets. But then they said, oh, Max and Stacey are there. They'll be kidnapped first. So they're all came. And I was like, what the fuck? Like, where are we going? So I was on the runway and Googled El Salvador, and it was like murder capital of the world. And I was like, oh my God, we're going to die. Like, I had no idea I put you into this situation, Max. I'm sorry, but we're about to die. And then we arrived there, and you know, Salvadorans are the nicest people, right? And everybody was so nice, like crazy nice. If you think murder capital of the world, you assume that everybody's going to be like hard and nasty, like New York City or Mexico City. No, everybody's like, hey, so nice. And so I wanted to go back and learn more, right?
Yeah, I guess, you know, since they made Bitcoin legal tender, that we wanted to live in the country that had Bitcoin as legal tender, right? And see, you know, because we were always kind of on the vanguard and trying to push the envelope and be where the action is for Bitcoin. And so that's where it is, you know, that's what the citadel, the Bitcoin citadel is El Salvador. You know, El Salvador is kind of the capital of Bitcoin. And the benefits are accruing to the country in enormous and different ways. And I think that there's a direct connection between Bitcoin adoption and the push toward security, where now the country is the safest country in the hemisphere. It was the most dangerous country in the hemisphere. And I think that has a lot to do with Bitcoin. Of course, the president is a visionary and just an unbelievable, talented guy. But I think those two go together. And I think that the rest of the world should take a lesson from that.
I think busting that myth of the danger in El Salvador is really important. I get a lot of emails from people saying, I'm thinking of going to El Salvador. You probably have similar. I'm thinking of going to El Salvador, and they ask two questions. Is it safe, and what should I see? I've been, I think, 5 or 6 times. It's been entirely safe the whole time, but it does have this history of violence, which tends to be concentrated historically in the red zones, which the gangs had control of. And obviously, President Bukele wanted to destroy that reputation, so he implemented his policies to end the control of the gangs, to improve the reputation of the country. But I think that El Salvador, there is a lot of myths about the country. The violence was one. What other myths do you think exist that you've had to bust?
Well, actually, when the war on gangs started, Bitfinex had given us $2 million in Bitcoin to go distribute to the victims of the gangs. So, and they said, like, we'll trust you, Max and Stacy. You're there on the ground. Go distribute it as you want, as you see is the best there. So I kept on seeing, like, every day the president was retweeting, or the police, and like dozens of men arrested in this location. And it was always this, it was often the same 3, Ilopango, Soyapango, and Apopa. So I would see them over and over, and I said, well, how about Max and I will go to those places and just give people there money. So we announced it in the press, and we showed up without security or anything, and on my iPhone, and I just put some like hundreds of thousands of dollars of Bitcoin at a time onto the wallet to go distribute to people, hand by every single person individually. So we would be there for hours just giving $500, $1,000, $2,000 to each person. But what we saw there is the truth. Like, again, the press, especially in the US, was calling him a dictator and authoritarian because of this policy. But we saw a liberated people. Like, it was amazing to see. And it was, it was very emotional to see people so liberated. I hadn't ever seen that before, to see like the relief, and like I never felt in danger. In fact, when we went to Apopa, that was the last place we went to, we had this woman who was doing some translation for us, and she didn't want to go in. And she said, it's way too dangerous. I'm not going in there. I said, well, Max and I will just go on our own then. And then she ended up showing up in the morning. She's like, I couldn't let you 2 gringos go in there on your own. Like, I just thought, like, if they're willing to go in there, then I'm Salvadoran. I should be willing to go in there. And she said it was like it had helped transform her. That, like, imagine that, living in a society where you're afraid of your own neighbors. And you saw now all those places are open to go visit and see. And I think that was really important for the Bitcoin story, because when we first were there, it was before the war on gangs. And I mean, I did think it. I knew Bitcoin would be a success there. I knew Bitcoin companies would come. I knew the Bitcoin investors would come. I knew the Bitcoin tourists were there. But you always did think at the back of your mind that, those people in Ilopango, Soyapango, Apopa, they weren't going to be able to participate in it because economic opportunity could never go there, because they were not part of El Salvador. They were occupied by these gangs in a different territory.
Yeah, so you mentioned that people have accused Bukele of being authoritarian or a dictator. I think those accusations come from, when he first came into power, some of the decisions he's taken. People would argue that the Constitution said single term. It's pretty clear he's going to run a second term. But whatever your thoughts on the position on this, is it not true you you can be a dictator, but also a liberator at the same time. And the reason I asked this question is, having just been to Lebanon, what was really interesting there, where they've effectively got no government, I asked people what they wanted, and almost everybody said, what this country needs right now is a dictator. It's not the answer I expected.
Well, you have to understand that the pre-Bukele era in El Salvador, every single institution was broken.
Corrupted.
The courts were broken, the police were broken, every politician was broken. It was effectively an abandoned country. It was run by gangs. That was the entire economy of the country. To give you an idea of how much gang activity there was in El Salvador, the amount of money they were extorting every single year amounted to $6 billion in a $28 billion economy. And you're talking about 5,000 pupusa sellers and ladies selling pupusas in the street, people taking the bus. You know, when they bust these gangs, they find huge plastic jars full of pennies and nickels that are being extorted from people. So when Bukele became a mayor, he started to answer people's requests for things like, you know, my roof is leaking, and he fixed it. And he became very popular, and then he became the mayor of San Salvador, the biggest city, and he started to fix things. And so he's on a wave of popularity of 92, 93%. Something like 94% of the population wants to vote for him come February. So if you think about dictators in history, I can't think of one that had 94% popularity amongst the population. You know, genuine popularity. He's a guy who took a failed country that had been abandoned, and within the guidelines and laws of the Constitution and the legal system, he built this constituency and this movement, which is anti-gang. Now he's going after the white-collar crooks, and he's liberated the population. It's extremely entrepreneurial. Every single economic metric is booming. Tourism has doubled. And so this is what we would have expected leaders in our own countries to do, right? This is what I thought we had in our country, leadership embracing a meritocracy and freeing the population from the fear of gang violence to be their best selves. But we don't have that in this country anymore. If you want to live in America, move to El Salvador. If you want the Constitution and Bill of Rights, move to El Salvador. If you want to feel the freedom of expression, move to El Salvador. That's the America. The Statue of Liberty is now a volcano, and it's on the tropics, and there's a guy named President Bukele running the joint, and I suggest everyone who's feeling downtrodden and persecuted and not able to be who they really want to be, get the fuck out of this shithole and move to El Salvador. That's my recommendation to you.
But I also think the will of the people is the most important thing, right? It's the people who get to decide who their leader is. And, well, he's a leader. That's why people from around the world are moving there. They're attracted to a leader. Like, I believe he's a 1 in 500 year sort of leader. But one thing he always says is the money is enough if you don't steal it. And that is something like, so, you know, who imposed these sort of constitutions across Latin America where a president can only have one term? You know, we're sitting here in the country that imposes those sort of constitutions on those countries. But here you have a guy who for the first time is not plundering the nation. I mean, the previous presidents stole $1 billion, one stole 237 million. I mean, in a small economy of like under $30 billion, and they were stealing like a huge percentage of GDP. And that's part of the reason why it's a failed state, because, well, as Bastiat said, when plunder becomes a way of life for a group of men in society, over the course of time they build for themselves a legal system that justifies it and a moral code that glorifies it. And that's what you had in El Salvador. And that's why the people fled. As Roman was saying on our panel earlier, is like there was no hope there because it was all plunder. If the government weren't plundering from you, the president wasn't plundering from you, and all the politicians were plundering from you, and the gangs were plundering from you, there was no option but to flee to America or Canada or Europe.
This panel is called Bitcoin Country, and I think a lot of people attribute the success or what is happening in El Salvador to Bitcoin. But do you not believe Bukele would have been successful and successfully changed the country without Bitcoin? Bitcoin is really just one of the tools he's had, but really this is about leadership. And the reason I ask the question is because people talk a lot about Bitcoin fixes this, and I've been to a lot of countries where I've looked and I think what they need is a good leader, not Bitcoin.
I think Bitcoin made him a global leader. It made little El Salvador a giant on the world stage, because if he weren't a leader and the world's media like focused on this guy and he was just a dork and he wasn't a leader and he was just an ordinary politician, then they wouldn't still be covering it obsessively 2 years later. That attention, well, we were talking backstage about the women's soccer, and the more television coverage of the women's soccer is bringing in better players, is making it more interesting and more exciting, and the audiences are growing. The same thing has happened to El Salvador. The world looked at President Bukele and we're expecting to be able to mock him. What's his famous saying? He's always, "I told you so." And he tells them all the time, we're going to do this, we're going to be great, we're going to be big, we're going to be successful, we're going to become the safest country in the Western Hemisphere. And he keeps on doing it, just like he said. And they mock and mock and mock, but now they're starting to realize, like, hey, wait, like they're putting out reports, Santander, JP Morgan, they're saying, well, actually it's all working out there and it's going well. And actually there is a peace dividend. There's like, people feel safe there, and so they want to invest there and they want to travel there and they want to go there. So yeah, I think that's an answer.
What is the nature of Bitcoin adoption there? Again, I've been there, I've seen it, and we all know, look, it's very difficult to just push people into Bitcoin. We all try, but people kind of find it at their own pace. But at the same time, in El Salvador, they've got to advertise them constantly. They've had to accept it in stores, so you can pay in any store. What is the reality of adoption there? Because I've seen it in El Zonte. To me, El Zonte just worked. Everyone did it. San Salvador, there was a mixed experience.
Right, well, there's two answers to that question. Stacy's got a great answer, and she'll get into her answer in a second. And with me, and my answer to this question is that Bitcoin adoption is multifaceted in terms of the way one looks at it. Everyone in El Salvador is aware of Bitcoin. And when you become aware of Bitcoin, it's the first step toward adoption. You know, you don't change Bitcoin, Bitcoin changes you. And when you start to think about Bitcoin, the consequences of Bitcoin, what it means philosophically, what it means ethically and morally, and why is the president talking about it, you're adopting Bitcoin in the way that you think, which is the step toward using it in your day-to-day life. And the population in El Salvador is primed to hear that message. Obviously, in other countries like Argentina and other countries now that are going through extreme duress, they're also primed to hear this message for obvious reasons. But so it's a mistake, in my view, to say, well, 5% or 6% or 7% of the country is actually using Bitcoin on a day-to-day basis. That's not adoption to me. I mean, the adoption is everyone I meet, first of all, they say, look at me and go, Bitcoin! And that's everywhere in the country. So everywhere in the country, people know Bitcoin and they're reading about it. And this is adoption. This is adoption in my book, and it's the step forward, Stacy.
Yep, awareness is adoption, because what President Bukele focuses on, unlike what an authoritarian or a dictator would, is no dictator would ever give their people Bitcoin, right? Because then you lose control. You have no control over Bitcoin. So you're giving them individual sovereignty. That's the opposite of what a dictator would do. But he also, he knows okay, the world's media is focused on them, but he needs everybody in the country, as he said on Independence Day this year, that everybody has to step up. They have to be confident. They have to change their mindset. And Bitcoin is part of that. I think it's part of his whole policy, enlightenment sort of policies. Economic liberty is the bigger policy under which Bitcoin sits. But for me, what the adoption that really matters is how many people in the world that are the best and the brightest, that are the most interesting, that are building on Bitcoin, that are building cool things, how many of them are adopting El Salvador as their home country, as their spiritual home country? Like, a lot of people maybe haven't even, everywhere we go, people are saying, oh, I need to get to El Salvador. I want to come to El Salvador. I really need to. And that's adopting Bitcoin as some sort of spiritual mecca, like a destination that they all have to go to. And I think that proves, that's part of the success. I called it the greatest rebrand in history. It went from being known as the most violent country in the world to being the safest, to being the most interesting, cool. Everybody wants to know it. Everybody wants to be it. Everybody wants a piece of President Bukele. And that's the adoption that you see. The mindset is not only domestic, but international, towards the perception of the people about themselves and their country, but the perception of people outside of El Salvador towards El Salvador.
How many people have made the pilgrimage to El Salvador?
And how many want to? Yeah, see?
It's amazing. How many have been to Bedford? No, I'm joking.
One person.
So one of the most interesting things that I've read about is the education of Bitcoin in El Salvador. In a fiat Ponzi country like America or the UK, we teach Keynesian bullshit in economics. I studied economics, I was taught Keynesian economics. It's the propaganda we're taught to prop up the fiat Ponzi scheme. But in a country which has adopted Bitcoin as legal tender, there is an incentive to teach proper economics, proper math, proper finance, proper hard currency. So what progress has been made in teaching about Bitcoin? What ages do they start teaching about Bitcoin?
Well, we have two big programs. One in the equivalent of, I'd say, high school here, they're starting with. So teenage years, mid-teens. And that's Me Premier Bitcoin and Bitcoin Beach, working in our public school system, bringing in education. Carlinho here, he's here. He's Guatemalan, but he was one of the guys behind the original, like putting it all together, Me Premier Bitcoin. So I don't know if anybody could download the workbook for this, for Me Premier Bitcoin, my first Bitcoin, and it's amazing. Like, I thought when I first read it, when Carlinho first gave us that first copy, I was like, it's going to be boring, it's for kids, and it's just going to be ABCs, like really boring stuff about Bitcoin. But it was fascinating. Like, it wasn't talking down to anybody. It was treating them like, here's economics, here's the history of money, and I was like, whoa, and I was learning so much. I was learning about Bitcoin. They mentioned cryptography and things like this. And on top of that, with the Bitcoin office, we brought in, because I realized, like I said, it's proof of work. We're putting in all the work over the past 2 years of building a solid foundation, that this is a genuine Bitcoin citadel, that all members of El Salvador are participating in it. And I knew we needed Bitcoin devs there. At least people with the ability to be Bitcoin devs or Lightning devs. So we created Kubo Plus. Jimmy Song is here. He was very instrumental in being like the first person to inspire me to do this, because he came and taught his programming Bitcoin course to like 7 students like in March of 2022. And then that inspired me to go about trying to find a way to do it on a bigger scale. And we had our partners in Lugano, Folger Ventures, and Bitfinex also. They helped fund this amazing program where they flew Jimmy Song, Saif Dean, Peter Todd, Lisa Niga, like the top names in Bitcoin, educators and core devs. And they taught our students, 21 students, who endured this like rigorous program, across like 4 months in total, but 3 weeks of really intense in-person boot camp style, hackathon style. And now 6 of the students actually yesterday arrived in Milan. They're going down to Tuscany for a 2-week course on Lightning. So, we're putting a lot of effort, serious amounts of money and effort into training our own population to be equals with the rest of the world in terms of Bitcoin. We're Bitcoin country and we should be there. And these students you see, by the way, like their parents at first thought this must be a hoax, that they were like their kids were being offered this education. And they would Google and see like Jimmy Song, Peter Todd, and like, oh my God, like these people are really important and they're coming here and teaching my kid, like why? Like I can't believe this. And you saw 4 months ago, the kids were really nervous and shy, and now they're all like teaching. They go on their own. They're like teaching local communities across El Salvador. They're confident. They're going to be at Lugano Plan B Forum, and they're going to go up on stage and speak. And you're like, wow! In 4 months, they're like Bitcoin experts. They really are.
I think Bitcoin is a cheat code. I use it for my football team. We kick everyone's ass. El Salvador's adopted it, and it's been a game changer for them, attracting people there who are making a difference. What is the advert here for other countries?
To adopt Bitcoin as at a nation state level? Well, I always say that we have a first mover advantage, and I think that first mover advantage is going to make it difficult for other countries to adopt Bitcoin because we're like the Silicon Valley, right? Silicon Valley, by the way, nobody went there to like in the 90s, in the dot-com era, to look and see how many pupuserias or coffee shops were accepting, had email addresses or free Wi-Fi to see if it was successful. It was successful on its own, right? Silicon Valley had the best and the brightest of the coders of that, building the internet. And we have the best, we're attracting the best and the brightest while we can, while we're the only one. And so if they establish their headquarters or they have their spiritual home here in El Salvador, then what happens to Mexico or Argentina or France, any country that might adopt Bitcoin? Well, we already have the best and the brightest. So you're going to have to settle for some shitcoin country or something.
You keep saying we. It's like, do you consider yourself Salvadoran?
Yeah. Well, we work for President Bukele, so we're building a Bitcoin country.
Yeah, definitely. It's the bleeding edge of Bitcoin, and it's heading toward the Bitcoin singularity goes through El Salvador.
Obviously, El Salvador is having a really successful time at the moment. The country is booming. I love it. Every time I've been, I've loved it. I think the people are great. Food's great. Bukele's a fork in the road for them as a country. He's set a new path, but we do know the history. As you mentioned, of the 4 previous presidents, I think 2 were hiding out in Nicaragua or somewhere, and 1 was in jail, 1 was died suddenly because they stole and pillaged the country. Succession planning will obviously be super important because Bukele won't want to do the job forever and can't do the job forever. Are there any ideas and thoughts how the succession for Bukele and the establishment of institutions which allow what he's created to continue without him?
Yeah, of course. Max always says he has a very deep bench. He has a lot of talented people around him. And I think, as I say, El Salvador is winning. And once winning, I think it's a feedback loop, right? No, they don't want to go back to losing again. Do the people of El Salvador want to go back to fleeing their country? No, because they're returning, and when they're returning, they're never going to let those plunderers come back. They're like, no way. I already had to abandon my country for 40 years, and fuck you. I'm not letting you plunder our nation.
Yeah. Yeah, well, what they're building, he'll be reelected, he'll have another 5 years, and I think in another 5 years, I think it'll be just an unbelievable amount of advance, and it'll be a very, very solid foundation. You go to Rome, and you see buildings that were built 2,000 years ago. Another 5 years of Bukele, and they're going to have institutionally put in place building blocks that will be virtually impossible to move, and it'll be a thriving, shining city on a hill that will attract talent for a long time.
Can you keep going for 20 seconds?
What?
Can you keep going for 17 seconds?
Oh, I thought you said, can you be kinky for 17 seconds?
I don't know if you got...
Thank God somebody's finally going to ask me to, do some disco.
I don't know
Which
if
is coming back now that we're
seconds
entering the 70s and inflation. And Donna Summers is God, actually.
Right,
That's
I
the
think we're
truth.
done. I think this...
Match is just getting started.
Okay. We can have another 17 seconds. So I think we're done. Thank you, Max, Stacey. We've done this so many times over the years. I really appreciate your time. Thank you, Corey. Thank you, Pacific. Big round of applause.
Oh man, that was fun, you guys. I can't believe a whole second edition of Pacific Bitcoin is a wrap. We're not quite done yet. There's a little bit more to come. I'll get to that in a second. But first, I just wanted to shout out some big thank yous to the folks that made this possible. All of our sponsors, of course, the entire Swan team who unbeknownst to you, pretty much everyone was working at this conference in addition to their day jobs, which is pretty amazing. So thank you, Swans. And also thank you to Brian and Jeff and the whole JJLA team for doing a great job. To Melrose, our PR firm, for helping in a million different ways. Thank you, Melrose. We love you guys. And also just want to bring up the incredible moderators that have been here with you for the last 2 days. Come on up here, Natalie, Nico, Stefan, and Brady. They've come bearing gifts. If you love Brady, raise your hand. He'll throw you a hat. There you go. Get him out there. Beach ball, nice. Whoa, Nico's got an arm on him. I didn't know about that. Look at that. That's fantastic. Excellent. All right, and of course, the queen of Pacific Bitcoin, Kristen Thompson, our fearless leader, representative of her entire staff. Thank you, Kristen. We are not done. Are you guys ready for the after party? Are you ready? Are you ready for that? All right. Wow, those are loud. That's awesome. That's amazing. I thought there was going to be pyrotechnics. Was that a fire code thing? Dom? No? Next year? Okay, cool. Awesome. At the back of the room, there are volunteers that will direct you out to the Magic Money Court. We have DJ Valerie Love all dressed up and ready to rock. She's going to make us dance and have fun. I'm staying for the party. I would not miss this. There's a photo booth back there to help you capture the memories from Pacific Bitcoin with your friends. And most importantly, the bars are open outside. So go get it. Thank you all. Big round of applause to everyone. Thank you for making this very special. And love you guys. See you next year.
Pacific Bitcoin friends, head out the side door nearest the VIP bar. Pointing out that way, you're going to head out the side door through the VIP bar, out to the court. We've got the bars open. We've got DJ Valerie Love pumping tunes for you. We've got a photo booth so you can capture amazing memories with all the friends that you made. So make your way out that side door. Have an amazing time. And thank you so much for joining us. We hope to see you back for 2024.